Standing with Taiwan, the House Speaker, Nancy Pelosi, reaffirms U.S. support for the island as tensions ratchet higher. No pivot, Treasury yields surge after Fed officials pour cold water on stepping back from the current tightening cycle. Plus, banking beats from SocGen and Commerzbank, the latest in a strong quarter for Europe's lenders. Now, let's take a look at the futures. And actually, we're seeing a lot of stabilization. Now, yesterday, we're watching the movement well into the night of Treasury yields, a very interesting story of exactly what happened. The Federal Reserve officials effectively pushed back really against the narrative in financial markets over the past week that policymakers were envisioning a pivot away from tightening amid evidence of a turn in the economy. That basically led to maybe a lack of liquidity in the markets yesterday, a lot of volatility. I know our Valerie put a great chart together. So this is futures much more stable, but we really look at sovereign bonds, not only at, for example, the Italian one, the 2-year at 1.312. This is also a story of Italian politics. That snap election coming on the 25th of September. We now understand there's also a coalition more in the middle to face the right coalition that we heard led by Fratelli d'Italia and Giorgia Meloni. Equity indices, you can see, again, stabilizing somewhat. The FTSE down 0.2%. And then overall, we have to look at treasuries. We look also at what's going on in the commodity complex with OPEC. We could see another very short meeting. And then over in Australia, it was pretty much steady as they go after all the tumultuous concerns that we saw yesterday regarding Taiwan. Now, let's also go into the cross-asset just on Taiwan. We are seeing some of the routes, for example, in the trade shipping, certainly in that Taiwan Strait, though having to move despite a lot of focus on the fact that nothing escalated as maybe some traders were worried about. S&P futures getting 0.2%. There you go. The man or woman of the hour is the U.S. 10-year yield. You can see 2.717. And then crude oil, we watch OPEC 100.34. All right, inflation in Turkey. I mean, we think we have it bad here in the UK. We think we have it bad in the US. Turkey, July consumer prices rising 79%. It was estimated to rise some 80%. I have to say, this is an acceleration. If you speak to traders, they're still expecting this to be months away from peaking. And that, of course, is, look, we've never seen these levels since the aftermath of the Asian financial crisis back in 1997. As a central bank, of course, in Turkey sticks with its ultra-loose monetary, of course. And you can see this is an intraday chart. But if you look at what happened to Turkish lira, certainly over the last 12 months, it's pretty crazy. Now let's get over to the Bloomberg MLive managing editor. He is the one and only Mark Cudmore. And Mark, you're looking at swings in haven assets.
I am, Francine, but I am very interested in that Turkish inflation number. We don't want to go back to those days before the Asian crisis, because if Turkey, of course, had a currency crisis, it had to issue the new Turkish lira and chop a load of zeros off its currency because of its hyperinflation problem from that era. So let's hope we don't go back to that world. But yes, I am looking at haven assets, and really the dynamic, the short-term dynamic of the last few days. Normally in this chart segment, I try to bring back a big picture view on what we're looking at the short term. But this time I'm going the other way around. I'm really focusing on the last few days' price action. So we're seeing the blue line here is 10-year Treasury yields slumped down the last few days into the US morning yesterday. They got very close to that 2.5% level. It's just an arbitrary round number, but it was getting people very kind of excited. And of course, dollar yen again was going down towards that 130 level. Again, another arbitrary level, but getting people excited because there are a lot of option barriers around there. Both of them just seemed in free fall, unwinding the big macro trades this year, which were higher yields and a higher dollar. And then suddenly yesterday, yesterday morning at about 8 a.m. or just after, Treasury yields suddenly started spiking. Now, the interesting thing here is this was a couple of hours before Pelosi landed in Taiwan. We did not know she was going to land in Taiwan safely. It was also before the hawkish comments from the Fed. The move started. So I think people just started realizing, hey, these yields are too low. This does not make sense. We have an inflation problem. We don't have a growth problem. So the next issue is yields bounced, dollar-yen bounced. Where do we go from here? There's been a little bit of a pause, a little bit of concern. I think ultimately we might get a little bit of divergence between these two. You can see they started tracking and then they're separating. I think yields is going to start focusing on the fact that US doesn't have a recession right now. It has an inflation problem. Yields need to go lower. That might not be the 10-year yields, but they'll be dragged higher because 2-year yields need to go a lot higher. Dollar-yen might still trade some of the concerns around Asia and the fact that we're seeing separating geopolitics from the US and China. So dollar-yen might lag the bounce, but overall might have a better path ahead.
Mark, thanks so much. Our Bloomberg MLive managing editor looking at the possible better path ahead. And of course, we'll have plenty more from Mark throughout the day. Now, our top story, Nancy Pelosi has become the highest ranking American politician to visit Taiwan in 25 years. Now, the U.S. House Speaker pledged support for the island.
Today, our delegation, which I'm very proud, came to Taiwan to make unequivocally clear we will not abandon our commitment to Taiwan, and we were proud of our enduring friendship.
Well, now let's bring in Bloomberg's Taipei Bureau Chief Samson Ellis. Samson, thank you for joining us. I think you were just outside where we had that press conference. What has been the main upshot of Pelosi's trip so far?
Well, that's absolutely the question many people here in Taiwan have been asking themselves over the coming few days. Taiwan is often largely excluded from the international conversation, and so people here often welcome these kinds of high-profile visits to Taiwan. But Pelosi's visit has been met with such a barrage of fury from the Chinese side, which included, a whole laundry list of economic measures against Taiwanese companies and industries here. As well as the announcement of various quite tough military measures as well. The people who have been asking themselves, is this trip really worthwhile for us? And so that's why we were watching very closely Nancy Pelosi when she met earlier today with President Tsai Ing-wen and what her comments would be. And there she very strongly came out and laid out the fact that the United States will not abandon Taiwan in the event of a clash with China.
So, Samson, how's China responding?
Well, it's definitely been much more, I think, extreme than many people expected. We've seen a number of economic measures, bans on imports of Taiwanese foodstuffs. But I think the most consequential one is the announcement of military drills totally surrounding Taiwan, or almost entirely surrounding Taiwan, over the coming few days after Nancy Pelosi has left. And part of that has been a warning to all shipping and aircraft to avoid these areas during the drills. And so we're now watching very closely to see what kind of disruption this causes to the shipping industry that, quite frankly, right now could do without this kind of disruption in one of the key waterways of the world.
Yeah, we'll see any of the ripple effects across global supply chains. Thank you so much, Bloomberg's Taipei Bureau Chief Samson Ellis. Now let's get into the key market drivers with Sharon Bell, Goldman Sachs Managing Director for European Equity Strategy. Sharon, always great to speak to you, so thank you so much for coming on this Wednesday morning. Now, a lot of talk, of course, about this foreign policy, which hasn't really changed, but the timing of it makes investors extremely worried. We're talking about possible supply chain disruptions because of the Taiwan Strait. Does that impact European equities?
Well, it adds, as you say, sort of risk premium, geopolitical tension, etc. So I don't think it's going to have a huge impact on European equities relative to other data points like what the Fed is saying, interest rates, Italian politics, etc. But it's definitely a little incremental additional risk.
So, Sharon, we also had this big move, actually, in treasuries yesterday after we had many more Fed speakers being much more hawkish about what we could expect. How would you characterize the market mood in general right now?
So I would say I would characterize it as quite complacent, really. Complacent both on inflation and on growth, because you have had, up until the last day or two, quite a strong rally in treasuries, quite a strong rally in bonds. You've seen yields come back down again through the month of July, as if inflation wasn't a problem. And I think that is wrong. Inflation is still sticky, it's still high. We still have relatively strong labour markets. Wage growth is quite broad-based and still relatively strong. So all of those things, price pressures, supply chains you mentioned, all of them still there, all of them still generating inflation. I was astonished at that Turkish inflation figure as well. But I think that's just symptomatic of a general global problem.
And do you see a point in the credit market where there's a biggest risk that could impact actually your world of equities?
Yeah, absolutely. I think, again, equities, I feel, have been a little bit complacent too in all of these risks. So obviously there was a sell-off earlier this year, but we've had a rally again in equity markets through July. Both equities and bonds are rallying quite fast. And again, I think there are lots of issues out there. We mentioned the geopolitical issues, the inflation problems, but also growth as well, particularly in Europe, where growth is clearly slowing. The PMI figures we had recently pretty weak. So I think that, again, there's a little bit of complacency in there, and that markets are not really fully taking into account the risks.
So this be, for example, some kind of gas embargo, I mean, a complete gas embargo from Russia, and what does that mean for your appetite for German equities?
Yeah, I mean, that's, if we dial back 2 or 3 weeks ago, this was the conversation I was constantly having with clients. Yeah. Would there be a complete curtailment of gas from Russia? Now those conversations have really died down, and I do think that's part of the reason markets have bounced. That sort of fear has reduced a little bit, but I'm not quite sure why it's completely reduced. There is still very little gas coming from Russia into Europe, certainly not as much as we would have had pre all this period of the Ukraine war, and there is still the risk that there is complete curtailment from Russia, and that would have a very marked impact. You'd see a sharp recession in Germany and Italy very quickly. The whole of Europe would dip into recession, already slowing anyway. So, and that would have obviously a very marked impact on earnings too.
Sharon, talking about earnings, did any of the earnings actually gave you more conviction in some of the things that you wanted to buy?
Yeah, so the energy stocks came out with fantastic earnings, didn't they? I mean, maybe that wasn't a huge surprise to the market. And oil prices have been coming down in the last few weeks, and that's perhaps not helping the oil stocks, but absolutely the big oil majors, very, very good earnings, excellent cash flow. They're announcing more buybacks, more dividends, etc. They're already trading on very low valuations. I think they're a good sort of longer term hedge against inflation as well. And some of these risks on the energy side, on the geopolitical side that we've been talking about. So that's probably where I'd have quite a lot of medium-term conviction. I think those stocks have been oversold. They look very good value.
Sharon, as always, thank you so much. Sharon Bell there, Goldman Sachs Managing Director for European Equity Strategies. She stays with us, and we'll also look at some of maybe the other opportunities in emerging markets and the read across with Europe. But we're also keeping an eye on the China daily briefing. Now, as the word says it, this is a daily briefing, but they have the top spokesperson of the Chinese ministry official doing it today, just like she did yesterday. Yesterday was a surprise. It was ahead of the Nancy Pelosi visit to Taiwan. We're closely monitoring anything that Hua is saying. She, I'm sure, will talk tough on some of the U.S. foreign policy, but we'll see whether she gives us any more insight on what those military drills could actually look like. Coming up, no pivot from the Fed. That's the message from officials. They say tackling inflation remains their top priority. More on that next. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK. Have time and time again said, be careful of the flowers you see out of the window. They have thorns on them.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
About recession per se, it's are we growing below or above trend? And my forecast for this year is that we'll be growing below trend, but that's necessary in order to get price increases, inflation under control.
I'd like to see the policy rate get to 3.75 to 4% this year. I think that inflation has come in hotter than what I would have expected during the second quarter. So now that has happened, I think we're going to have to go a little bit higher than what I was saying before.
Well, that was Cleveland Fed President Loretta Mester and St. Louis Fed President Jim Bullard. Now, Federal Reserve officials have sent a powerful message that their top priority remains bringing down inflation, and there's still a long way to go. Well, still with us is Sharon Bell, Goldman Sachs Managing Director for European Equity Strategy. And Sharon, we talked a little bit about, the flattening yield curve, which Valerie put together a great chart looking at the 210s and the kind of the movements which could indicate a lack of liquidity or something like that that we saw yesterday in Treasuries. What does that mean for dollar?
Yeah, I think that the dollar has just been super strong this year. Throughout this year, it's been very, very strong. We think that the dollar versus the euro, for example, you could go back down to parity again for the euro. It's slightly above parity at the moment with the dollar. We hit that sort of parity level in July, and I think it could go again back down below parity with the dollar, just because European risks and European growth are relatively weak at the moment. Yes, the US is slowing too, but Europe perhaps a little bit more.
But Sharon, are you expecting a big correction in certain parts of European equities because that's being discounted?
Yeah, look, I think overall the European equity market doesn't look sort of long-term expensive. You're on a PE ratio of about 11 or 12 times. That's a little bit below long-term average. If I look at, say, the average price to earnings ratio for European equities over the last 30 or 40 years, it's been about 13 or 14. So we're not super expensive at the moment, but earnings are pretty high right now. Margins have been very, very high. In fact, one of the tailwinds for Europe has been the very weak euro and the strong dollar, because there's a lot of dollar earnings in the European index. But I do think European companies are vulnerable to a mild recession. You can see our forecast there for 2022. We do expect a mild recession. We are expecting earnings growth to come down. We think the consensus is too high this year and next year. In fact, as you can see, we've got 0% earnings growth for next year. And that probably means a slightly lower valuation is where the market should be trading today. So yes, I do think it's a little bit vulnerable in the near term.
So Sharon, what do you do with the UK? Pound traders seem to be heading into this critical BOE meeting tomorrow, but unable to put really their faith in the economic views because we'll also have a new prime minister.
Yeah, well, and we don't know who that will be quite yet. We don't know exactly what policies they will be implementing. But I think the truth is the UK, like the rest of Europe, is seeing a slowdown. You see that in the PMI data. You see that in the consumer confidence data. We've already seen interest rates start to rise. So that will be a little bit of a squeeze on the corporate sector and households in terms of borrowing costs. You're already seeing a sort of sharp rise in the cost of living. There'll be another rise in the energy price cap as well in the third quarter. All of those things kind of squeezing UK growth a little bit. So again, I think the UK is not perhaps as close as Europe to recession, but you're seeing that slowdown as well.
But given, you know, what makes up the FTSE 100 with a lot, of course, of commodity-rich companies, does it matter for equity investors?
That's a great question. So, look, I think for the FTSE 100, it's a huge large cap index. All those big blue chip companies like the healthcare stocks, the energy stocks, even the big banks, a lot of them are very, very international companies. So really domestic economic growth in the UK is less important. But say for the FTSE 250, the mid-cap index, half of those sales are domestically to the UK. There are also some quite big UK domestic companies as well that perhaps are reliant on the UK consumer, and they're the more vulnerable space.
And that correction, I mean, nothing's been priced in, right? Has the bad news been priced in at all?
Oh, absolutely. I think it has been priced in to some extent. People are aware that there's a cost of living issue in the UK, interest rates are rising, growth is relatively weak and maybe will slow from here. So all of those things to some extent are in the price, but I don't think completely. You know, it's a bit to my point on energy stocks. I think those kind of big global stocks that maybe make dollar earnings are in a much better position, even though they're not on high valuations, rather than domestic companies or FTSE 250 companies that will see perhaps more pressure from slowing economic growth in the UK.
Sharon, thanks so much as always. Sharon Bell there, Goldman Sachs Managing Director for European Equity Strategy. Now we go back to China, to that China Daily Briefing. We have the top spokesperson for the Chinese Ministry of Foreign Affairs saying that the Nancy Pelosi trip is a provocation. And she also believes this is an infringement of sovereignty. Now, the House Speaker, Nancy Pelosi, just hours ago pledged that the U.S. would not abandon Taiwan, once again reaffirming U.S. support for the democratically elected government in Taipei, despite the threats of fresh trade curbs, but also military actions by Beijing. We got our great team on the ground, of course, bringing us the very latest on that. And you can see some of the military actions maybe already rerouting or having some ripple effects across global supply chains, also prompting detours and causing delays of energy shipments. Coming up, Uber's revenue beat while shares soar the most since 2020 as customers keep hailing rides and ordering takeout food in the face of U.S. inflation. We'll look at the numbers next, and this is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to the Open, everyone. 23 minutes into the European trading day. These are your European stocks, pretty much flat. Certainly, they stabilized after the ooh-ha-ha that we saw yesterday with Nancy Pelosi arriving in Taiwan. Now, let's also check in on some of the stocks on the move at the Open. We start with Société Générale, SocGen. Now, they outlined new revenue targets. They also pledged higher profitability as rising interest rates and this global trading rally provide a pretty big tailwind to the outgoing chief executive, UDA. You can see the stock price getting some 2.8%. Now, Commerzbank, that profit also beat estimates, but we're seeing a bit of pressure on the shares. Now, this is maybe for two reasons. Laura Wright, who's doing also the stock movers, was talking about costs going up. They did see higher revenue, but also higher costs. The other stories, of course, Commerzbank extremely close to the Mittelstadt, to the German economy. And if Russia were to implement a complete stop of gas supplies to Europe, then that would plunge Germany into a severe recession. Finally, Infineon, one of the other big movers, and you can see Infineon raising their forecast on chip demand from automakers, gaining 1.8%. Now, on Tuesday, Uber reported second quarter results that showed the firm achieved positive cash flow for the first time, along with record gross booking and revenue. After the bell, meanwhile, Airbnb's earnings report also spooked investors. Well, joining us now to break down both is Bloomberg's Laura Wright. So, Laura, one is good and the other is not so good. What did we learn about Uber's resilience as a business?
Well, the market liked what it heard with Uber, which explains why the stock closed up almost 19% at the US close yesterday. Now, although Uber is still making a net loss as a business, Uber is showing investors that it is on that journey toward profitability. Now, my chart shows total gross bookings. The orange line is mobility, which of course encompasses ride-hailing. Uber is still on a journey to recovery from the pandemic knock here. Interestingly, Uber was able to combat a driver shortage, increasing driver supply 31% year over year. They did this by increasing wages, which have been paid for by customers in the form of higher prices, and customers so far have not been deterred. Delivery, which includes Uber Eats, is here in the white, and it still accounts for the largest proportion of gross bookings. Uber in the long term see delivery flatlining rather than decelerating. At present, sales are slowing, though. The blue, really interesting, Francine, it's Uber's freight business. It was launched back in 2017. Here, revenue grew over 400% year over year.
So Laura, quickly, were expectations too high for Airbnb?
Yeah, Airbnb, well, it was punished in after-hours trading by the market. Although it was a beat on earnings and the platform forecast record revenue in the third quarter, the Achilles heel was the miss on bookings growth and the subdued forward guidance for bookings. Investors want to see travel companies taking advantage of this voracious demand for traveling. Another bright spot was actually the high booking prices, perhaps showing customers still willing to pay more even with diminished incomes.
Laura, thank you. Laura Wright there. Now, coming up, Nancy Pelosi is in Taiwan. We get the latest on the House Speaker's visit to Taiwan, as well as the ripple effects on the global markets next. This is Bloomberg.
need to think differently about, being enough. I think, in a number of different respects, I think, we're trying to either prove ourselves or do too much. I think we have to realize that, as Black people, despite what society says about us, despite, what happens, we are enough. And so I think going forward in that headspace, I think is really important.
I think the pandemic really highlighted the importance of financial literacy. In that, it's so important to understand, okay, like how do we budget, how do we plan for, unforeseen circumstances, and really make sure that we're prepared for these events in the future. And through Blockchain Capital, that's why we really place a big emphasis on financial literacy in all forms, budgeting, retirement, investing, etc.
What motivates you guys to do this?
I think it's honestly the impact that we've already seen. It's something that we just want to keep going because we've seen students come in, learn everything that we teach them, and get really successful jobs on Wall Street, really change their trajectory, their career path. And so if we can keep doing that for the next 100 years, that's something that's satisfying for me.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 30 minutes into the European trading den. Here are your top stories. Standing with Taiwan, House Speaker Nancy Pelosi reaffirms U.S. support for the island as tensions ratchet higher. No pivot, Treasury yield surge after Fed officials pour cold water on stepping back from the current tightening cycle. Plus, banking beats from SocGen and Commerzbank, the latest in a strong quarter for Europe's lenders. Now, let's also check on some of these indices. I have to say we have to talk a lot more about inflation in Turkey. I know we don't have the Turkish lira. This has been the story of the last 2 years. It was up some 79% year on year. So we think we have it bad over here. Look at Turkey in terms of inflationary pressures. All right, European stocks pretty much flat. So we're seeing a bit of stabilization. The FTSE down some 0.2%. Remember, this is a story of BP, of some of the commodity-rich big companies that we have on the FTSE. And then we also have OPEC. That meeting today could be quite short and short-lived. The main industries that we're watching the most. So technology gained some 1.4%. We had some pretty good stories in the U.S. in terms of earnings and some that were not so good. Laura Wright was bringing us up to date to that. Travel, look at that, 0.8% higher. Real estate also higher. And then you have auto parts, telecoms, and healthcare on the way down. We're also looking intently at the China daily briefing. This happens daily, but it depends on the ranking of the government official that does it, whether it's important or not. Given the news surrounding Taiwan, it is the top person in charge of the foreign ministry that is doing it today. And she, once again, reiterates that this is a provocation. And Taiwan says China's fruit import ban, violates international trade norms. So there's a bit of confusion on whether we'll see more trades or more banning, but certainly there's a lot more tough talk from China. So U.S. House Speaker Nancy Pelosi has become the highest-ranking American politician to visit Taiwan in 25 years. Now, she spoke in a joint press conference earlier today.
We want Taiwan to always have freedom with security, and we're not backing away from that.
Meanwhile, Pelosi's visit has prompted China to announce missile tests and military drills, some of its most provocative actions in decades. Well, Taiwan's president says, however, the island is open to constructive dialogue.
Military exercises are unnecessary responses. Taiwan has always been open to constructive dialogue, and we will work with stakeholders to bring about stability and peace in the region.
Now, for more on all of this, let's bring in Bloomberg's Betty Hu in Taipei and John Liu's Bloomberg's executive editor for Greater China in Beijing. So thank you both for joining us. John, let me start off with you. What's the latest? Is there an overwhelming feeling that maybe this will get back the two superpowers to talk? Is it constructive, or is the timing completely wrong?
I think this is probably a turn for the worst, or for the worse in this relationship. Obviously, there have been lots of tensions around trade, around China's seeming support of Russia and its invasion of Ukraine. But now we are talking about military exercises, warships, jets, live fire drills around Taiwan. It has taken a turn that is much more dangerous. I think it will be some time before diplomacy comes into action. Obviously, Ms. Pelosi is still in Taiwan today, is leaving this afternoon. After that, we have the live fire drills. I think it'll be up to the diplomats once those drills are over to see what they can build from that position.
Betty, what can you tell us about the visit? So first of all, are ordinary, Taiwanese behind this? And do we know her schedule for the rest of the day?
Yes, so Nancy Pelosi met with Taiwan's President Tsai Ing-wen just earlier today, and she is reported to have to meet TSMC, Taiwan's biggest company, TSMC's high executives later today, but that report hasn't been confirmed. I think that is pretty much on everybody's top radar right now because TSMC is the biggest semiconductor manufacturer in the world, and any meeting like that would definitely be very, very, very something that we really want to keep tab on. So after that, I think Nancy Pelosi would also pay a visit to human rights activists, but that is also, I think that is also yet to be confirmed. And then she will leave Taiwan around early in the evening and then head to Seoul.
Yeah, and John, this is something that we were talking about yesterday, right? The fact that Taiwan is so important in terms of chips, but also in terms of, shipping. Do we know how much or how difficult is it, day two, to calculate the kind of the routes that may be, the delays, the ripple effects of some of the military drills and what it does to the global supply chain?
So what we've seen already is some of the LNG shipments that come through that part of the world are taking a different route, or the ships themselves are slowing down so that they can change the route they're on, the way they're going, mostly from the South China Sea up to customers in China, in South Korea, and Japan. Obviously, there's a lot of cargo shipments that come from manufacturing on the Chinese coast that goes south towards Europe, some going east towards the United States. That shipping looks like it will be impacted by the live fire drills that are planned for the 4th through the 7th of this month, later this week. We also had the Chinese authorities warning airlines to avoid some of the areas that have been outlined for drills, saying they are danger zones. And so we have seen some cancellations of flights and some rerouting of flights. Cathay Pacific asking pilots to take 30 minutes of extra fuel just in case they need to change the way they fly.
Yeah, and Betty, going back to the fact that, of course, Pelosi, is probably visiting TSMC and, some of these global tech imports that are so important to the U.S. What is Taiwan hoping to achieve with this visit?
That is a very good question, and I think that is actually the question that all the Taiwanese is asking themselves. I mean, like you mentioned earlier, Pelosi, during her talk with Tsai, she made it very clear that the U.S. would not abandon Taiwan, and she also praised Taiwan for being one of the freest societies in the world. But I think right now, after Pelosi leaves, we know that she's U.S. has been very supportive of Taiwan's democracy, but the question really is, after she leaves, what are China's actions next? Like what John said, all the military drills and what that will mean for Taiwan, and will China impose any more further and stricter economic bans and military actions against Taiwan?
Yeah, and John, the other question, I guess, and we saw this slight disagreement, although I have to say it was pretty murky, between Nancy Pelosi and President Biden, saying maybe I wouldn't suggest it, but he didn't say no. So, can Beijing do they make a difference between Biden and the House Speaker?
I think at this point, Beijing is not making a difference. Obviously, the U.S. administration has argued that Speaker Pelosi makes her own decisions about where she goes. Beijing doesn't see it that way. Beijing has said, look, she's the third-ranking official in the U.S., second in line in terms of succession for the U.S. presidency. She's arrived in Taiwan on a military aircraft. How is that not an official visit? I think that sort of is semantics at the moment. I think what is obvious is China is taking very aggressive measures in response economically, militarily. I think we might see some diplomatic actions as well. And it's going to be up to the U.S. to try and come up with a measured response. When those drills occur, we probably will see U.S. ships moving into the vicinity of Taiwan to show support. Yeah. And I think trying to avoid any sort of undue escalation.
Thank you so much to both Bloomberg's Betty Hu in Taipei and Zhang Lu in Beijing. Coming up, we talk banks as the second quarter earnings season comes to an end. So we'll have that shortly. Don't miss it. This is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Strong enough to stay, we will never.
All right, welcome back, everyone, to the European Market Open. We are 41 minutes into the European trading day. You can see markets stabilizing somewhat. Yesterday, it was Nancy Pelosi going to Taiwan. What would happen? Actually, not much has happened, although we are seeing, because of the military drills that China said they will impose and they will practice from today. I think actually they started last night, that the Strait means that there's probably some supply disruptions. We saw, for example, some LNG shipments having to go around. We're also looking at the German Chancellor Olaf Scholz giving a press conference. I believe it's with the Siemens chief executive right now. This extremely, extremely important. Of course, talking about some of these gas shipments under constant threat. He is saying that Germany is taking steps to prepare for this difficult time. So it does seem like he's expecting it to happen, a full embargo from Russia. Now, in terms of taking steps, we know they have a 5-point plan on what parts of the markets they would shut off or parts of the industries they would shut off, but it would, of course, then put Germany in a deep recession. Now, on to banks, and Commerzbank has posted better than expected profits in the second quarter. The German lender got a boost from rising interest rates. Now, income from lending rose 26% compared with the consensus forecast for 16%. Well, my colleague Anna Edwards spoke to the Commerzbank Chief Financial Officer Bettina Orlopp a little earlier.
First of all, it's important to note that we still have a kind of a management overlay, top-level adjustment, however you want to name it, of more than 500 million euros, which is a good reserve buffer, however you want to tell it, for the coming quarters. But nevertheless, I mean, we carefully analyze the situation with respect to the natural gas supply. We always said that if the situation continues as it has been in the past weeks, we feel comfortable with the reserves we currently have booked. However, if there would be a complete gas stop, which is a likely also scenario still, then we believe that we will see a recession in Germany, we will see a recession in Europe, and subsequently we will book additional TLA in Q3 or Q4, depending on the situation. I mean, it all depends very much also on government measures. The situation with the corporate clients we talk to, they are still doing fine. I mean, they sit on lots of liquidity, at least German corporate clients, coming out from the corona pandemic, having very, very cautious on investment programs, etc. So that's helpful now. But yeah, we stay very cautious, and current situation with just 20% natural gas supply is also not ideal, as we all know.
Okay. Yes, I wanted to get a sense for how your clients are preparing for this, Bettina, because you have at Commerzbank a great sense of how the Mittelstand businesses are doing. When we talk to really large German corporates, they talk to us about making contingency plans for alternative supplies if they don't get the gas that they need. And I wonder how the Mittelstand stands prepared, stands ready for the winter ahead.
It's very similar. Also, the Mittelstand is not, I mean, basically what we currently see is that every day, every week helps because people get prepared, companies get prepared, the government is preparing. So every week we can move forward in a situation like that will help also for the winter. I think the most difficult situation at the moment is to predict what happens next, right? Because it's a little bit back and forth thing. And third quarter will be relevant because hopefully we will know even more. We will know how the preparation work also from the government works out and things like that.
Well, that was a Commerzbank CFO, Bettina Orlopp, speaking to Bloomberg's Anna Edwards and Mark Cudmore a short time ago. Now, we're fast approaching the end of the second quarter earnings season for banks on both sides of the Atlantic, with only a few left to report this week. Now, if one theme hung over a relatively positive period, it was a decline in fees from deal making. We'll hear to discuss what this might mean going forward is Bloomberg's Charlie Wells. He brings us always the best stories. Charlie, thank you so much for joining us. First of all, we've known quite a lot about the bank's deal flow. It was in trouble for a while, so give us a little bit of the details there.
Yeah, so all season long, we've been hearing these individual reports about investment banking advisory fees being down. In the US, on average, about 50% compared to the same quarter last year. Here in Europe, you know, even Credit Suisse, that amount down 80% compared to last year. But what Bloomberg has very helpfully done is to take a look globally at where these financing plans have slowed down or where they've been canceled. They found that 358 companies this year have decided to either cancel or slow down. They found that's worth about $254 billion.
That's a lot.
It's a lot. And the geography where this has slowed down the most is the Americas, with about half of that total.
So what's behind the slowdown, and how long will it continue for?
Yeah, there's a lot here, right? So it's the volatility, it is the war in Ukraine, it's the interest rate environment. It is just not the sort of environment where companies necessarily want to make deals. And when you look at the IPO market, what you can really see is a change. So in 2021, we had such a bumper year for that IPO deal making, right? You had companies like Coinbase going public. You had companies like Robinhood. Well, what did we find out just a few hours ago? Robinhood is going to be laying off about a quarter of its staff.
That's huge.
It's huge.
I mean, that's 25% of people.
It's about 25%. They found out via Slack message that they'll be losing their jobs. This is not the sort of environment where if you are...
I'm not on Slack. Just if anybody needs to fire me, don't do it on Slack.
It's very stressful. But this is the sort of environment where if you are a young, pristine, private unicorn, you don't want to go public. And that is translating into weaker fees for investment banks.
So is this a problem overall, or is this a problem at Robinhood?
Yeah, so this is certainly a problem across the board, right? So Robinhood stock down 75%, but Coinbase's stock also down. Across the tech sector, you are seeing these sorts of layoffs in companies that we thought would shoot through the roof during the pandemic era, but that has shifted quite substantially.
Now, there's so much going on because, I mean, does this, you know, a lack of deals, does it mean that we're looking at recession? Because at the same time, we're hearing a lot of the banks actually paying their junior bankers so much more because they need that good talent.
Yeah, Francine, you use the R word, which is...
The R word? Am I going to get fired on Slack?
Well, I hope not. not, which is radioactive. But there are just so many conflicting signals coming in, right? So we're seeing, fairly positive earnings coming forward from European banks this past week, but of course this deal-making slowdown. And what we are really seeing a focus towards is compensation, right? And again, sort of conflicting signals. So a recent report last night from BNP Paribas saying that, junior staffer salaries are going to go up, but analysts have been saying, at least in the investment banking sector, if this downward trend continues, we could see cost-cutting measures, we could see salaries, diminish, which nobody wants to see.
Also, I'm laughing about it, but actually just a world of advice to anyone watching. It's not, do not fire your people. It's stressful, it's a horrible time, just do it humanely.
Right, and we've heard stories about this for years now, and so the fact that this is happening in that case seems to represent a lack of learning.
And frankly, it just never ends well for anyone. Thank you so much, our Bloomberg Charlie Wells. Now, let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Water levels on the Rhine are set to fall perilously close to the point at which it would effectively close, putting trade of huge quantities at risk. The river in Germany, a key waypoint for the shipments of commodities, is set to drop 47 centimeters by the weekend, 7 centimeters from being all but impassable. The Rhine is vital for deliveries of heating, oil, gasoline, coal, and other commodities. Russian President Vladimir Putin will meet Turkey's Erdogan for talks Friday, including on a deal to unblock exports of grain from Ukraine. This comes after the first ship carrying grain exports from Odessa since the war started arrived in Turkey. Meanwhile, Kyiv has begun mandatory evacuation of Ukrainians from the eastern region of Donetsk as Russian attacks continue. U.S. job openings fell to a 9-month low in June, suggesting the country's tight labor market is cooling somewhat amid growing economic pressures. The number of available positions decreased to 10.7 million from 11.3 million in the month before. The drop was the biggest since April 2020. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Laura Wright in London. Now, coming up, we'll turn to oil. Market watchers skeptical that OPEC Plus will answer U.S. President Biden's call for more supplies, but we'll drill into that story next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 53 minutes into the European trading day, and overall you can see a lot of these stocks are actually stabilizing. Now, some investors, or some of the investor anxiety, certainly that we saw yesterday play out over some of the tense, for example, U.S.-China relations today abating. Treasuries also paring back a slide that yesterday was really sparked by hawkish Federal Reserve comments. Now, we're getting a bit of data. French July services PMI coming in at 53.2. I think this is the final reading. The preliminary one was at 52.1. Now, oil watchers skeptical that OPEC Plus will answer U.S. President Joe Biden's call for more oil supplies when it meets today, expecting the coalition to preserve its remaining capacity for another time. Well, joining us now is Paul Wallace. He is Bloomberg's Middle East energy and commodities reporter. Paul, as always, thank you so much for joining us. So, are we likely to see OPEC Plus heed into Biden's request?
Hi, Francine. As you said, the OPEC watchers that we surveyed this week think no. They think that OPEC will announce no increase in, or OPEC Plus won't announce any increase in oil production for September, that it will stick to August's levels. There are some analysts, though, that are expecting something. Goldman Sachs, for one, they said last night that they see some increase. They didn't say how much, and they expect it to be pretty modest, but they say there is a chance of an increase.
But just from a supply-demand side, I mean, the market is so tight, it would make sense to just put extra supplies out there, right?
Yeah, when you look at the physical market, it is still very tight. And Goldman, for example, thinks that there's a 2 million barrel a day undersupply in the market right now. So that would push OPEC Plus towards pumping more oil. The group does have many issues with that argument, though, and one of them is the looming fears about if not a global recession, then certainly in the US and in a recession in Europe and the US, and a slowdown in China. And if you look at time spreads in the oil market, which are a good sign of physical demand, those have come down quite a bit in the last few days. So there are reasons that OPEC could turn around and say, well, actually, demand is weakening at the moment.
But Paul, even so, there are a few people that expect this extra supply. I mean, would it still be a short meeting, or depending on how long it lasts? I love this is like reading the tea leaves of OPEC Plus. So the longer it lasts, we may have an agreement, and then the problem is actually pumping it.
Yeah, so even if OPEC Plus did agree to or announce some output increase for September, there is a problem of how much it will actually be able to deliver. Pretty much all its members, and certainly the members of the core OPEC group, are at max capacity, or very close to it. You have to, it's pretty much only Saudi Arabia and the UAE that the market thinks actually have any significant spare capacity to give right now. If you look at others, Angola, Nigeria, Iraq, they're really struggling, and they might actually fail to produce anything more, even if there is an announcement today.
All right, Paul, thank you so much. Terrific work there. Paul Wallace there from the OPEC team, covering everything for us. Now, that's it for the European Market Open. Surveillance Early Edition is up next. Markets stabilizing, but we still look at Taiwan. China halting some trade with Taiwan in retaliation to this high-profile visit of Nancy Pelosi to the island. We are also looking at possible more disruptions, likely, certainly, in the Taiwan Strait as political tensions intensify. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We will not abandon our commitment to Taiwan, and we are proud of our enduring friendship.
We're very cautious because you have a lot of severe trends out there, but we are not preparing right now for a hurricane.
If there would be a complete gas stop, which is a likely also scenario still, then we believe that we will see a recession in Germany, we will see a recession in Europe.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. While standing with Taiwan, House Speaker Nancy Pelosi reaffirms U.S. support for the island as tensions ratchet higher. No pivot. Well, Treasury yield surge after Fed officials pour cold water on stepping back from the current tightening cycle, plus banking beats from SocGen and Commerzbank, the latest in a pretty strong quarter for Europe's lenders. Now, let's check in on the markets. I know we also have some individual movers, because actually Commerzbank is still on the way down 2%. I think there's a worry about costs going forward, but also the fact that they're servicing the Mittelstand. If we're getting ready for a gas embargo from Russia, that would hurt a lot of their revenue. Now, European stocks, as you say, pretty much stable, down some 0.2%. S&P futures also stable. Certainly, it's not a day of angst amongst traders like we saw yesterday when we were expecting that Nancy Pelosi plane to land without really knowing what would happen. The U.S. 10-year yield, now this had a pretty wild ride yesterday. Once again, we had a couple of Fed speakers going back to the hawkish stance, and that, I would say, crystallized brains for a lot of traders. And so we saw that volatility, but now, again, pretty much on a path forward, 2.7519. And then yen is a good one, 133, because of the haven move that we saw over the last 24 hours. And U.S. House Speaker Nancy Pelosi continuing her visit in Taiwan today, and there's also speculation that she's meeting the biggest chip maker. Now, the European maps, it does make a difference if you're the FTSE, for example, compared, for example, to a DAX over in Germany. These are some of the companies in these countries that are the most important because not only they rely on, of course, Russian gas, and I'm thinking of, for example, the DAX, but because there's that OPEC meeting. So don't forget that OPEC Plus meeting a little bit later. We're speaking to our Paul Wallace. He says many, I think about 80% of people we spoke to are expecting not much, a short meeting, and then we move on. But a couple are expecting maybe more barrels to be added, and that, of course, would be Saudi Arabia. We're also getting some data out of the euro area. July services PMI, it's a final reading, 51.2. The preliminary was 50.6. A little bit better than expected, but nothing huge. Anything above 50, of course, is good news because it indicates expansion. Euro dollar currently at 1.0185. This also also has implication for a lot of the earnings and a lot of the companies, not only in Europe, but also in the US with that ever-strong dollar. Now, our top story, Nancy Pelosi has become the highest-ranking American politician to visit Taiwan in 25 years. The U.S. House Speaker pledged support for the island.
We want Taiwan to always have freedom with security, and we're not backing away from that.
Now, for more, we're joined by Bloomberg's Taipei Bureau Chief, Samson Ellis. So, Samson, first of all, what's been the main upshot from the visit of Nancy Pelosi? What was she trying to achieve, and what was the Taiwanese president trying to achieve?
Well, if you put it in two words, quite simply, it's chips and human rights, and also an unwavering dedication to Taiwan. Three things that were the main upshot from Nancy Pelosi's trip to Taiwan. So it started out with a lot of questions about basically the utility of this trip, especially for Taiwan. You know, it was quite clear that it was going to face a quite vociferous response from China. Taiwan typically welcomes these kinds of high-profile visits, but this time it definitely was different. It felt different. You could see that going in. China had clearly signaled that before she arrived. So many in Taiwan were asking, look, is this really in our best interests? But after she was here, she really did make the case that the United States is not going to abandon Taiwan in the event of a Chinese invasion, should that eventuality ever come to pass. And I think the fact she made it here in the face of all the questioning and the doubts about the wisdom of this trip did send a big signal to Taiwan that Nancy Pelosi and the legislative branch of the U.S. government has Taiwan's back.
Yeah, and Samson, at the same time, though, China basically, I guess, retaliated with military drills, and they're already having an impact on some of the global supply chains. We saw, I think, shipments of LNG having to move away from that. Will that continue?
I think there's no doubt that over the coming days and weeks we will see even more of these measures from China. They did signal going in that they would take this out on Taiwan. In some ways, Taiwan's a little bit of an innocent party, and those are maybe not entirely innocent, but caught in the middle of this great power competition between the U.S. and China. Taiwan didn't ask for this visit. It was very much came from Pelosi, but then at the end of the day, it is suffering the consequences of her visit. And so I think, obviously, as you mentioned, we have all these military drills slated for the coming days after Pelosi leaves, almost entirely surrounding Taiwan. And China has warned all aircraft and shipping to avoid these areas. And so it really does have the potential to seriously disrupt shipping in this crucial waterway.
Yeah. Samson, thank you so much. Samson Ellis there, Bloomberg's Taipei Bureau Chief. Now, Federal Reserve officials have also sent a powerful message that their top priority remains bringing down inflation, and there's still a long way to go.
We don't talk about recession per se. It's, are we growing below or above trend? And, my forecast for this year is that we'll be growing below trend, but that's necessary in order to get price increases, inflation, under control.
Now, this is one of our biggest focus. Of course, yesterday we were watching that Treasury moves, big move, now stabilizing somewhat. Also switching focus to Europe, where ECB officials appear to have deployed billions of euros in bond purchases to shield Italy and other southern Euro members to keep speculators at bay. Now, for more on this, let's talk to Bloomberg's Zoe Schneeweiss in Frankfurt. So first of all, what's the significance of this data that came out at the ECB yesterday? We had thought that the threshold for accessing it would be pretty high.
Yes, so this is not that special tool they created. This is flexibly reinvesting their pandemic portfolio. So just as a reminder, during the pandemic, they had a special QE program, and via that, they bought 1.66 trillion euros in bonds, in government bonds. Now, we got the numbers yesterday for June and July. This is a bi-monthly release. And just as a reminder, the flexibility in reinvesting that portfolio, which is really they described as their first line of defense, that only kicked in end of July. So they don't separate out June and July. But what did we learn from the numbers? They draw the numbers of net holdings for Germany, France, and the Netherlands, so very much core countries, dropped by 18.9 billion euros. And at the same time, their net holdings in peripheral countries, so that's Spain, Italy, Portugal, wait, who am I missing? Spain, Italy, Portugal, and Greece, those increased by 17.3 billion, and most of that, 9.8 billion, went to Italy. So that shows they are willing to deploy this.
Yeah, so what does it tell us? That they don't need the new tool because actually they can access, if these were successful and they managed to achieve what they wanted to, does it mean that they keep, you know, there's a backstop, which is a new tool, but actually they can do a lot more with what they did?
Well, let's see if they actually were successful. Just looking at the spreads between German and Italian bonds in July, they did actually widen in July. However, there are two main reasons for this. On the one hand, there was actually, as we know, huge turmoil in Italian politics last month. And additionally, the ECB raised interest rates by 50 basis points. Both those are actually legitimate reasons for the spread to widen. Going forward, though, the ECB obviously shows willingness to use this tool flexibly, and that makes sense. And regarding the new tool, they have said they ideally this would stay on the shelf. But given that we've got a lot of political turmoil coming up and the election in Italy is, let's see, late September, there could be a lot of reason to actually engage that new tool.
Thank you so much. Zoe Schneeweiss there in Frankfurt. Snap elections with full Bloomberg coverage starting on September 23rd. Now, let's talk about treasuries, fixed income, Italy. I mean, the mayhem, really, the chaos. Seems like we're on the edge of it worldwide. We're joined by Laura Cooper, Senior Macro Investment Strategist at BlackRock. Laura, thank you so much, as always, for joining us. I want to start with treasuries, because actually I know we talk about the ECB and we talk about Italy, but what happened in treasuries yesterday? I mean, they were like...
It was certainly quite a volatile day of price action, and it was largely reflective.
You're so British.
I mean, it was largely a recalibration of market expectations after what was interpreted as quite a dovish FOMC meeting last week. Now we're actually having Fed speakers come out, be quite hawkish, stating that they are committed to ensuring price stability, and that is likely to come at an economic cost. So I think it really did catch markets somewhat off guard because of what we saw last week.
Okay, so whose problem is it? Is it the market? Like our Valerie, who puts the charts together, and actually there's a great chart looking at some of the whipsaw volatility. I mean, I can't believe I actually did the words for that volatility, but how much of it is this, you know, Jay Powell just not communicating well enough because he was too dovish, or how much is the market wanting him to be dovish?
I think this time is, I mean, it's always the phrase, like, this time is different. And it could actually be the case for the Fed because they are faced with this backdrop of inflation that is proven to be quite persistent. We're likely at the point where we are seeing peak inflation in the U.S., but it's likely going to be elevated and sticky for some time. So in order for them to maintain credibility, to keep inflation expectations anchored, they're likely going to have to tighten policy rates by more than markets are suggesting. And we are seeing some reaction to that.
Yeah, and we saw the 2-10s yesterday. What happens to the yield curve? I mean, where does it go?
It's a great question, and the fact that it inverted yesterday to the deepest that we've seen in more than 2 decades, I mean, it does suggest that there's a lot of rate hikes already priced in the front end, but we actually think that there's scope for even more hikes to be priced in because we do think the Fed is going to take this hawkish stance towards inflation. Now, the long end, we do expect that over time, it is going to potentially have higher yields, largely on the back that investors want to be compensated for holding fixed income in this environment of elevated inflation. But the near term, I think it's a bit more the front end to watch.
So where's the biggest risk in credit right now?
It's a great question.
A loaded question, Laura.
It's a very loaded question, and actually, we kind of look at the financial markets as a whole in terms of portfolio positioning. We actually advocate for having credit exposure over equities because the risk-reward profile is there. Now, we do like European credit. I think a lot of the valuations suggest that the downturn is priced in. Of course, there are key risks in that. So to answer your question, I think it's more a case of staying away from from those cyclical type of exposures where the macro fundamentals could potentially deteriorate with a recession on the horizon in Europe, and as well those gas exposed names, probably avoiding that given the risks ahead there.
Okay, and then I need to ask about Italy and ECB. We don't have time. We will have time in a second. We're keeping Laura Cooper with us. She's Senior Macro Investment Strategist at BlackRock. Now, coming up, we'll also discuss the earnings we've seen so far this quarter. That's coming up next, and this is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacroix here in London. Now, we had quite a lot of earnings today. We had Moller-Maersk, we had AXA, SocGen, Commerzbank. I was quite interested in the difference between Commerzbank and Société Générale, but actually, Commerzbank, I think, was down 2%. Now it's gaining. Société Générale definitely coming in with better than expected profits. There was a bit of concern, Commerzbank, on two things. Costs going forward, they said they would go up, and then there were also, I imagine, the fact that they're so close to the Mittelstand. If there's a gas embargo, that puts, and there's a recession in Germany, then that puts some of the profit, maybe forecast Commerzbank at risk. But now they're gaining 0.6%. Well, we're back with Laura Cooper, Senior Macro Investment Strategist at BlackRock. Laura, earnings so far, I mean, they're not bad. If you look forward, they're like, we have questions about the economy and inflation, but maybe they were better than some were expecting.
Yeah, certainly. I think that's the key takeaway midway through the season, that earnings have actually been fairly resilient.
Is it only midway? I thought we were over.
But I think at this point, it's a key question of what the outlook is going forward. Because we did see analyst estimates revised slightly lower ahead of the season, yes, we are seeing these beats. But if we look at 12-month forward earnings, notably in Europe, we don't think that's accurately reflecting the economic growth risks ahead. So I would expect we're going to see further revisions there. That's going to be a key headwind, I think, for equity markets through the back half of the year.
Is there anything that's not correcting like it should have? Is there a part of the market, I don't know whether it's a sector or something, that you worry about?
I mean, I think we are starting to see it come through in terms of the consumer-led sectors, which makes sense in this current environment where we are seeing this cost of living crisis. It really does advocate, though, for having defensive tilt within portfolios. So tech earnings were fairly resilient. We'd want to have exposure there. And as well, those typical defensives like healthcare, those sectors that really have that pricing power in this inflationary environment.
Laura, if you look at country-wise, so if we go back to Europe for a second, I mean, Germany is very different because of, the reliance on Russian gas and oil, Russian gas especially to an Italy, to, for example, UK. So do you make a difference on the country specifics?
We do make a difference. I mean, we like to take it a little bit more of a broader picture. Like we'd prefer the US because of its quality tilt. I think within Europe, the DAX is exposed potentially more to the gas potential crisis there. We haven't seen that really feed through meaningfully in industrial, so there could be potential headwinds there going forward. But I think at this point, it's really taking selectivity across sectors, but as well looking for other opportunities, not just in that equity sleeve.
Yeah, so we had that nice story on the ECB. What does that mean for Italian yields?
Well, I think Italian yields are probably going to take their direction more from political risks over the next coming months leading into the recession. And as we know, the ECB is unlikely to react to that because they want to see a disorderly, unwarranted type of spread widening. So I think for the ECB at this current juncture, it's all about the inflation perspective. Yeah. We do see inflation continue to surprise to the upside. They are data dependent. They've stated as much. So that likely leaves the door open for a 50 basis point hike in September. Beyond that, though, we really struggle to see how they're actually going to deliver on market expectations because of the growth risks ahead.
And talking about market expectations, I don't know what the BOE does, given they also, there's little conviction against for pound traders because you're also in the middle of a leadership contest, so you don't know who the next prime minister is.
And our preference is more towards a 25 basis point move instead of a 50 basis point. We did have some MPC members coming out saying they want that flexibility for a 50 basis point move. But if we think about the current growth context in the UK, it likely contracted in Q2. And as well, the May forecast from the Bank of England were actually quite downbeat. If we look at inflation, CPI came in just in line with their 9.1% forecast in the second quarter. So there's little impetus for them to actually have to do the 50 basis point hike. Of course, guidance will be key, as is the case with most central banks these days, but I struggle to see how they're going to deliver like the Fed.
Laura, thank you so much. As always, Laura Cooper, their senior macro investment strategist at BlackRock, joining us this morning. Now, coming up, it's been a noteworthy year for banks as the monetary tightening cycle unfolds. We'll do a roundup of some of the biggest earnings and outlooks. We have Societe Generale, and we have, of course, Commerzbank. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
When big Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're fast approaching the end of the second quarter earnings season for banks on both sides of the Atlantic, with only a few. Now, if one theme hung over a relatively positive period, it was really a decline in fees from deal making. Well, here to discuss what this might mean going forward is our Charlie Wells. So, Charlie, thank you so much for joining us. Deal flows. I mean, deal flows haven't really been great. Why has it been so bad?
Yeah, so all season long, we've been hearing this trickle of kind of individual reports from banks on either side of the Atlantic about, maybe 50% on average down in the United States, and some banks here in Europe down as much as 80%. And what Bloomberg has helpfully done is taken a look globally at where companies are slowing down or canceling their financing plans. The numbers there don't look great. So 358 companies at least have decided to cancel or slow down. That's equivalent to $254 billion, which is not an insignificant fund. And the Americas were the region where this was the worst hit. Now, interestingly, Bloomberg had a really good interview early this morning, sort of setting the scene for what the vibe has been with the head of Societe Generale's investment banking unit, which we'd love to take a look at.
Yeah.
We're very cautious because you have a lot of severe trends out there, but we are not preparing right now for a hurricane, just to answer your question very directly. But we are extremely cautious, recognizing that the patterns that are out there at play are unique somewhat in the last couple decades. And so we're very cautious, but not overly pessimistic at this stage.
So, Francine, what you really see there is sort of these mixed signals, right? So as European banks have been reporting, fairly positive outlook, but this deal flow has just been so negative.
But is it like a recession indicator, or is it they're just, biding their time?
Yeah, that's the dreaded R word, right? So we're, again, seeing mixed signals from many parts of the economy, but when you look at deal flow, when we think about investment banking, that's not just what's happening on the inside of the bank, right? That's also the outside. That's other companies. That's the level of confidence that many companies have to make these sorts of deals. When you think about, say, the IPO market, for instance, that compared to 2021 looks very bad. In 2021, you had Coinbase go public, you had Robinhood go public, off to a flying start for a while there. Just a few hours ago, we found out that they're laying off 23% of their staff. This is the second tranche of layoffs. If you're a young unicorn right now, you don't want to march out into the public markets.
Yeah, and they did that via Slack, which is not okay.
Not okay.
Not okay. Charlie Wells, thank you so much with the great roundup, of course, from the deal flows and banks. Now, we'll have plenty more, of course, from the banking sector throughout the day. Also coming up, Pelosi in Taiwan. We get the latest on the House Speaker's visit to the island, as well as the ripple effects on global markets. That's coming up next, and this is Bloomberg.
Thank you. companies know they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Bloomberg Surveillance Early Edition, and here are your top stories. Standing with Taiwan, the House Speaker Nancy Pelosi reaffirms U.S. support for the island as tensions ratchet higher. No pivot, Treasury yield surge after Fed officials pour cold water on stepping back from the current tightening cycle, plus banking beats from SocGen and Commerzbank, the latest in a pretty strong quarter for Europe's lenders. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So let's get straight to our top story. Nancy Pelosi has become the highest-ranking American politician to visit Taiwan in 25 years. Now, the U.S. House Speaker pledged support for the island.
We want Taiwan to always have freedom with security, and we're not backing away from that.
Well, joining us now is Bloomberg's Colin Murphy in Beijing. Colin, I think we have Colin. We had Colin just a short while ago to really bring us up to date to what exactly is going on. Colin, if you can hear me, the concern, of course, is through the Taiwan Strait. We don't have Colin. We'll get to Colin in just a second because, of course, there's a Bloomberg story, which is the fact that because the military drills coming from China put a lot of pressure on some of the supply chains, of course, in the Taiwan Strait. So we saw, for example, an LNG shipment having to go around. So to talk about Nancy Pelosi in Taiwan, we're now joined by Leslie Vinjamuri, director of the U.S. and the Americas program at Chatham House. Leslie, we get lucky. We get lucky because today we're speaking to you, especially on one of the biggest days for foreign policy, except she's not doing foreign policy because we have had other, show up in Taiwan. But the timing of this is so interesting. Was it a mistake?
No, I don't think Nancy Pelosi is one to make a mistake. She's very thoughtful. And she will also be looking, of course, there were more primaries earlier this week. And so she's just thinking about all lenses. But remember, I think the first thing is, this is not only a trip to Taiwan. This is a trip that Nancy Pelosi is taking to the Indo-Pacific. She's sort of picking out those countries that are America's allies, America's partners, that are democracies, that sort of basket of things that the U.S. Is really trying to bring together in the Indo-Pacific. But clearly, this is a very specific choice to travel to Taiwan at a time when the relationship between the U.S. and China is heated. Clearly something she knows will be controversial, and yet she's decided to do it. to reinforce the current U.S. policy, not to make a policy change, but clearly to say to China, we're here, we support Taiwan, we care about Taiwan's democracy.
Yeah, let's also go to Colin Murphy, who's in Beijing, and we're following these China daily briefings that really have taken kind of like a life of their own. Colin, we've been following it together yesterday, we're again following it today. I mean, the main takeaway is that China's retaliating, but I don't know with what strength. Like, what's your feeling on the ground? You know, what are these military drills?
Right. So, I mean, from the foreign ministry today, there was no sort of dramatic announcements along the lines of, more sanctions against Nancy Pelosi or U.S. officials. It was actually relatively subdued. There was some heavy criticism, of course, of Nancy Pelosi, and, with the spokeswoman accusing her of fishing for political capital, engaging in a political stunt, and basically playing to the gallery, which she said was at the expense of U.S.-China relations. But in terms of the military exercises, they said that this was justified given the level of provocation that the trip was proposing, and therefore it was within their rights to do these exercises. So apart from that, there was, as I say, no particularly huge delivery there.
I mean, the Bloomberg question, of course, what does it mean for LNG exports or shipments? Are we going to see supply chain disruptions because of this?
Well, as you know, the exercises will basically be circling the island, and there have been safety announcements made to the public and obviously to shipping and aviation. And the impact of that obviously is not clear at the moment, but there have been discussions ongoing between certain carriers in Japan and around the region as to possible routes that could avoid those possible conflict areas. But obviously, that's very unsettling. That's not very encouraging. I don't think ships or aircraft would be willing to go into an area which is obviously subject to a lot of heavy military exercises over the next couple of days. So I do believe we will see impact. It is one of the busiest shipping trading channels in the world, and therefore, what transpires over the next couple of days could have at least short-term impact on supply chains.
Okay, Colin, thanks so much. Colin Murphy there, following, of course, events on the ground in China. He was in the room, of course, for that Ministry of Foreign Affairs briefing that we had from China. Let's get back to Leslie Vinjamuri. Leslie, we're talking about, and you were telling me that actually Nancy Pelosi does not get these things wrong, that it would have been calculated, also talks to her base back home. Does it force the two superpowers to sit at a table and talk?
Oh, I think it just forces both the United States and China to not forget, not that they would, but that Taiwan is there, that Nancy Pelosi isn't ceding ground on this. And remember, anti-China sentiment in the U.S. is very strong. It's bipartisan, certainly in Congress, although there's division on what to do about Taiwan. But it plays well to people in the United States. But again, I think Pelosi is really there as part of this broader tour to say democracy matters, values matter, Taiwan matters. The other thing to note is, in Washington, there has been a sort of debate about whether the United States should move away from this approach of strategic ambiguity. What would it do if there was a crisis, towards being very clear, right? Strategic clarity on its support for Taiwan. That is not where the majority of view is. It's not changing. But it does sort of raise a question mark about whether that's still in play.
So, Leslie, is President Biden and Nancy Pelosi, are they on the same page? It was ambiguous.
It was. I don't think that Nancy Pelosi took orders from the president. I think we've seen that in the press. We know that they've managed this. It's probably not what the president would have chosen to send Nancy Pelosi. Congress is independent. He's made that very clear. We saw the press briefing from John Kirby last night. But what they've done is to really smooth it and say she's going. We're all aligned. The message is very clear. And now we look to see, how does that visit look? And that's, I think, China will be watching that. Their response will be, in part, how much video footage is there? How is it played? These all become very significant. But I don't think that we're facing, a war right now. It's not in China's interests. It's not in the U.S. interests. We're going to see very heated exchanges in the short term.
But Leslie, what you're very good at is also looking, much longer term, the impact on foreign policy on the U.S. administration. They're dealing with Russia, and we saw China again being very ambiguous with Russia and not condemning the attack on Ukraine and the war in Ukraine. Does this push China and therefore India and Russia further?
I think not India. You know, India has a very clear interest in aligning itself with the United States, even though it hasn't come out in those big UN votes, again, condemning Russia on the sanctions. It really needs the support of the United States to counter China's rise in the region. But sure, it puts China even more, you know, on that kind of hardline opposition to the U.S. China has backed Russia. It's benefited. It's backed. But now, you know, after sort of laying low in those early days of Russia's immediate invasion of Ukraine back in late February, now it looks like China's sort of, you know, strong, clear in its alignments, and not willing to back down in any way, shape, or form in the face of what it undoubtedly sees as U.S. provocation.
How's Biden doing back home?
Biden is doing better. We know those numbers for President Biden have been low and getting lower just recently. You know, he's had some successes with his legislation. We'll see what happens with the climate, Build Back Better. That, you know, we've just had some primaries. You know, hard to say. Some of those, you know, go one way or another. I think the big...
Is that because of personalities, Leslie? That instead of policy or it really does seem, you know, depending on who, like, how they portray themselves.
Some of it is, but I think some of it's really concrete. So we've seen a couple of people lose because they backed the impeachment of Donald Trump. Western Michigan, we saw that happen. The really big news coming out of the U.S., of course, was that this is the first vote on Roe v. Wade in Kansas. People turned out to the streets and they voted against a piece of legislation that would have...
surprise?
I think that was a surprise.
Yeah,
Kansas is a very conservative state. It's very hot. It's a bad time to get out and vote. Voter turnout was really high, and it was resounding, you know, support of the pro-choice position. So that's quite significant. But, you know, just in recent days, I think Biden has seen a number of victories on his legislative package after what's been a really remarkably tough period politically.
And I think yesterday he still tested positive for COVID, but
He still got COVID.
It doesn't really affect the headlines.
No,
I
think that you know, the president's health care is very clearly and carefully managed. COVID, as we know, is a very different thing now. He's had those antiretrovirals. I think he's doing just fine.
All right, Leslie, thank you so much for the terrific briefing. As always, Leslie Ventimuri, their Director of the U.S. and the Americas program at Chatham House. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Water levels on the Rhine are set to fall close to the point at which it would effectively close, putting trade in huge quantities of goods at risk. The river in Germany, a key waypoint for the shipment of commodities, is set to drop to 47 centimeters by the weekend, 7 centimeters from being all but impassable. The Rhine is vital for deliveries of heating oil, gasoline, coal, and other commodities. In the U.S., voters in the Midwest state of Kansas have refused to change the state's constitution to declare there is no right to an abortion. Voter turnout was high for the first referendum on abortion since the U.S. Supreme Court said each state could set its own policy. President Joe Biden said the result confirms a majority of Americans agree that women should have access to abortion. Russian President Vladimir Putin will meet Turkey's Recep Tayyip Erdogan for talks on Friday, including on a deal to unblock exports of grain from Ukraine. This comes after the first ship carrying grain exports from Odessa since the war started did arrive in Turkey. Meanwhile, Kyiv has begun mandatory evacuation of Ukrainians from the eastern region of Donetsk as Russia continues to attack. And Uber shares surged the most since 2020, closing up almost 19% as customers kept hailing rides and ordering takeout food in the face of soaring U.S. inflation. Revenue more than doubled to $8 billion in the second quarter, with gross bookings hitting a record $29 billion.
While trips were up 24%, which is really, really healthy growth, gross bookings were up faster than that, which indicates some inflationary effect on our results. I think the good news for us is that surge levels are actually coming down, ETAs are coming down. So as the marketplace becomes more balanced, we actually see strength in terms of trip growth going forward.
And that's your Bloomberg Business Flash, Francine.
Leanne, thank you so much. Now, coming up, we'll turn to oil. Market watchers skeptical that OPEC Plus will answer U.S. President Biden's call for more supplies. Maybe they're wrong. We'll drill into that story next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil watchers skeptical that OPEC Plus will answer U.S. President Biden's call for more oil supplies when it meets today, expecting the coalition to preserve its remaining capacity for another time. Well, joining us now is Julian Lee, Bloomberg oil strategist. I love having Julian on because I have like 102 questions, some of them dumb, some of them smarter, that I can just ask at will. Julie, first of all, so there does seem to be a belief that we're going to see a short meeting with not much agreement, but you kind of disagree.
Well, I think there's a possibility that they will decide to pump more. There's equally a very large possibility, as the majority of, I think, our survey respondents said, that they will decide to do nothing. But this is the first meeting in at least a year where they haven't had a preloaded decision of an output increase that they'd already agreed. Because they've done everything that they said they would do. They have put back, at least on paper, all the oil that they cut back in 2020. So then now they're entering new territory.
But so why would they say yes? So first of all, the supply is tight, right? Yeah. So it would make sense to put extra production out there, and they would please who, the U.S. president? So is this political question?
Certainly it would help relations with the U.S., every other big oil consumer, China, India, the European Union, everybody would like to see oil prices come down because they are feeding into this very high inflation that we're seeing. The other reason...
Even China?
I think even China. And I think the other reason that they might consider doing it is that at the moment they are pumping almost 3 million barrels a day less than their target allows. So what they need to do is come up with a way that they can add real barrels to the market, not just these.
I mean, we always say OPEC Plus is going to add. I mean, there's one country that can add, and that's Saudi Arabia, right?
Well, possibly two.
Okay, who's the second one?
The United Arab Emirates.
Okay, certainly not Angola.
Not Angola, not Nigeria.
So if these two countries, even if they say, okay, OPEC Plus will put this much extra barrels, will they be able to put them through?
It depends how they do it, how they share it out. I mean, one of the ideas that people have been throwing around is that rather than increasing the overall target, they might say, well, look, we've got these 3 million barrels a day of targets that are unused. We'll allocate that or some of that to Saudi Arabia and the United Arab Emirates, perhaps on a temporary basis, that would allow them to boost output.
Julian, we also have Olaf Scholz, the Chancellor of Germany, talking about Nord Stream 2. Is it a matter of when we get a full gas embargo from Russia, or if?
I think it's a matter of when, probably. I mean, I think...
Maximum pain right before winter?
Quite possibly. I think what President Putin likes at the moment is having this control and creating this uncertainty.
Yeah.
He's been doing it with Nord Stream. It's actually Nord Stream 1. Nord Stream 2 is built but not coming to operation. So he likes playing these games. He's done it with Kazakhstan's crude oil exports through the CPC pipeline, with sort of spurious court cases and things like that. I expect this gamesmanship to continue.
Is there any way, and I was surprised yesterday, we had a far-right Marine Le Pen in France also saying the sanctions are not working, we should get rid of them and get our gas and oil back from Russia, which was one of the first, mainstream, frankly, politicians say that, which was at the margin shocking. Are we going to see more of that because we can't get supplies from anywhere else, so Europe will look at recession?
Well, I think this is part of Putin's game plan. He wants to disrupt politics as normal in Europe. He wants to reshape Europe in a way that is much more friendly to him. In many ways, the longer this goes on, the longer the uncertainty goes on, the greater the difficulties that Europe faces, the more likely cohesion is to break down within the European Union. And I think this is very much what President Putin is playing on and hoping for.
Julian, given we talk about gas prices every day, and of course, what that means for inflation and the cost of living, in the U.S., gas prices or prices at the pump have fallen quite significantly. Now, I still find it amazing and fascinating for seeing, the different states, the price being very different because of taxes. Yeah. But it feels like the price is very elastic. Why has it gone down?
It's gone down largely because crude oil prices and wholesale gasoline prices have gone down. You're seeing the same in the UK, a bit more slowly. Part of the reason I think that it's much more pronounced in the US is that you have a much smaller tax wedge. So changes in crude oil prices have a much bigger impact on gasoline prices. In the UK, probably now about a third, somewhere between a third and a half of what we're paying for petrol is a fixed duty. That doesn't change no matter how the crude oil price or the wholesale gasoline price changes. No. So that means that the effect is much more muted in the UK and in the rest of Europe, where taxes are also high.
All right, Julian, thank you so much. Should we take a bet on OPEC Plus?
No.
Let's take a bet. I'm going to go with consensus. I'm going to say no production. Come on.
I think they will do something. I don't think it'll be very much. I don't think it'll be very much.
Okay, just more of like maybe a little bit of a political win, maybe for the U.S. Julian Lee, our expert. You can ask anything. We should do a conversation where you tweet us, and then Julian just asks whatever you want on gas prices. Now, coming up, Uber's revenue beat. Shares soar the most since 2020 as customers keep hailing rides and ordering takeout food in the face of U.S. inflation. We'll take a look at the numbers next. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, on Tuesday, Uber reported second quarter results that showed the firm achieved positive cash flow for the first time, along with record gross bookings and revenue. Now, after the bell, meanwhile, Airbnb's earnings report spooked investors. Joining us now to break down both is Bloomberg's Laura Wright. So, Laura, what do you see?
Well, Uber is showing continued momentum ahead of the bell, up some 1.5%, and its diversified business appears pretty resilient in the current market conditions. Yes, Uber is still making a net loss, but the platform is vying to show investors that it can achieve profitability. Now, my chart shows total gross bookings at Uber. The orange is mobility, which of course encompasses ride-hailing. Mobility is still on a journey to recovery after a pandemic knock, but crucially, Uber increased its driver supply by 31% year over year for the quarter. They did this by offering higher wages, which we as the customers have paid for in the form of higher prices. And so far, customers have not been deterred as a result. Delivery is here in the white. That includes Uber Eats. It still accounts for the largest proportion of gross bookings. Uber, in the long term, think that we've all become habitual takeaway eaters, Francine, so they're not concerned by a deceleration in sales. Freight here in the blue, it's really interesting. Uber launched this business back in 2017. It's a huge growth area for the quarter. Revenue of the freight business increased over 400% year over year, and that just shows the strength of logistics providers in the current macro environment.
So, Laura, what are we expecting? I mean, were expectations too high for Airbnb? Are we just expecting too much from them?
It seems really harsh, doesn't it? Because for the quarter, Airbnb beat earnings expectations. The forecast for third quarter revenue was at a record, but you can see Airbnb still being punished ahead of the bell. Now, the Achilles heel was the miss on bookings, Francine, and the weak bookings guidance going forward. Investors want to see travel companies capitalizing on this voracious demand for bookings in the current environment. But perhaps, Francine, it seems a little harsh, as you say.
Maybe a little bit harsh, but look at that, 7.6% lower in pre-market. Laura Wright, thank you so much. Some of the other things we're watching, of course, Infineon, but also Commerzbank, Société Générale, all the way up. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kelly Lyons in New York, Anna Edwards is in London, and this is Bloomberg. fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably couldn't spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We will not abandon our commitment to Taiwan, and we are proud of our enduring friendship.
We're very cautious because you have a lot of severe trends out there, but we are not preparing right now for a hurricane.
Our framework suggests the risk reward now is pretty poor, right, given our view on growth and given where rates are at this point.
I don't think this is an environment where the junky stuff will continue to move higher.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Pelosi's pledge to Taiwan. The House Speaker reaffirms U.S. support despite threats of more military action and trade curbs from China. Treasury yields jump on Fed policymakers' comments. They push back against talk that the central bank may pivot away from tightening interest rates. And a sweeping overhaul at Robinhood. The app-based brokerage slashes almost a quarter of its workforce after a brutal first year as a public company. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, we're sort of caught between the news flow of the early part of the week, very much dominated by the House Speaker in Asia, and then the more data-driven news flow later this week, and things a little calmer on the European front this morning.
Yeah, they were calm in Asia overnight as well. Of course, there was a lot of concern in the markets yesterday as Nancy Pelosi landed in Taiwan about escalating tensions between the U.S. and China. But in the absence of some of the more extreme measures China could have taken in retaliation, there was a sense of calm in markets overnight. Now, it wasn't all too positive. The MSCI Asia Pacific Index as a whole was actually fractionally down by about 0.2%. But again, relatively muted. Now, there was more dramatic action in some of the other asset classes, including in the commodities complex, because remember, in China, it's not just about foreign policy as it relates to the U.S. They're facing a lot of domestic policy challenges as well, including absolute turmoil in the property sector with hundreds of projects stalled out. That weighs on iron ore, and as a result, for a fourth day day in a row, iron ore futures were down more than 4% overnight, trading just under $110 a ton. And of course, we saw really dramatic action in the bond market yesterday. Treasury yields flying as Federal Reserve officials push back on the idea that they aren't going to be as aggressive with their hiking. We saw follow through on that in Australia overnight. The 2-year yield there up 13 basis points. And finally, yesterday, of course, we saw a dramatic reversal in the Japanese yen. At first, it was stronger, then it was weaker. Now it's essentially flat against the dollar, actually literally unchanged against the dollar, Matt. We're trading right around that 133 level.
Yeah, and the dollar, the Bloomberg Dollar Index is unchanged right now as well, which I think represents the kind of calm that we're seeing in today's market. After the cash trade dropped yesterday, about 2/3% on the S&P. We see futures up about 0.2% right now. So not a lot of movement there. Not a lot of movement in treasuries, which is pretty amazing considering the big yield moves that we've seen over the last few weeks. Right now, we're just down about 1 basis point to 273.91. So investors are buying bonds, but not at an overwhelming pace. NYMEX crude is down just $1.25 a barrel to 93.21 for Texas Intermediate, and we're looking at Bitcoin that's actually rising about 1.1%, 23,300 level. It's relatively high. That's sort of the upper bound of the range that we've been watching lately. Anna, what do you see in terms of the calm on European shores?
Yeah, this is the calm on European markets right now. A bit of grey in the map behind me here. A little bit of green, a little bit of red, but also some grey, suggesting we're not moving anywhere in a hurry. We head towards the OPEC Plus meeting, a Bank of England meeting, and jobs data out of the US later this week. So lots to talk about, but at the moment, things looking pretty range-bound. The insurance sector is one of those that is moving higher today, and I'll show you some of the share prices, or one share price associated with that, and some others that are on the move this morning. AXA is moving higher this morning. That's on the back of a surprise buyback coming through from the French insurance company. I think we've got the share price of that particular business to show you. I'm sure it's coming slowly. There we go. AXA up by 4.6%. Avast is also in focus, up by 43%. This is a cybersecurity business based in Poland but listed in London, and the Competition and Markets Authority in the UK has approved, tentatively or preliminarily approved, a takeover approach for this particular business, and so the stock substantially higher. Tod's up by 20%. This is the Italian footwear maker. The founder of the company has come forward with an offer for the part of the business that he does not still own, and so you see that stock is up by 20%, and there is an expectation that from some analysts, I saw JP Morgan saying he won't be interrupted in his attempts to take on the rest of that business. BMW, though, a different story, down by 5.3%. Yes, the backward-looking numbers beat estimates, but there's still the chip issues, still the energy issues plaguing the economy in Germany, of course, and when you look at forward orders, gave some analysts something to think about, Kayleigh.
All right, Anna, well, definitely a lot to think about today, including, of course, Speaker Pelosi's trip to Taiwan, which is in its waning hours. We understand now that her plane will be leaving Taiwan at about 6 p.m. local time, so less than 1 hour from now. That's according to the Ministry of Foreign Affairs. Now, in addition to her departure, here's a look at what else is ahead today. OPEC Plus will be meeting to decide on crude production plans for September. Do they do as President Biden wishes and as he was hopeful for once he left Saudi Arabia last month and actually hike output in order to tame prices? We'll also get some U.S. economic data, factory orders, durable goods, and ISM services all crossing the wires, and more earnings will be coming. CVS and Under Armour are among the companies slated to report today, Matt.
All right, we'll be paying close attention to sort of the tail end of earnings season. Now, back to the top story. Nancy Pelosi has become the highest-ranking American politician to visit Taiwan in 25 years. The U.S. Speaker met with Taiwan's leader, Tsai Ing-wen, pledging her support.
Today, our delegation, of which I'm very proud, came to Taiwan to make unequivocally clear we will not abandon our commitment to Taiwan, and we are proud of our enduring friendship.
We've got global team coverage with Samson Ellis, Taipei Bureau Chief, Colin Murphy, Bloomberg's China government reporter in Beijing, and Anne-Marie Horton, our Washington correspondent in D.C. Let's start with Samson Ellis. Samson, you were at that news conference with Nancy Pelosi and Tsai Ing-wen and asked her a question. What did you learn?
Well, the big question, really, for most people in Taiwan and many people around the world was, why come now? Why not wait until a later date, or why come to Taiwan at all? What is the benefit to either Nancy Pelosi, to the US, or even Taiwan? And so what was striking from that briefing was just how strong she was in her support of Taiwan. She said that there was no chance of the United States abandoning Taiwan should there ever be a contingency and a conflict across the Taiwan Strait. And I think amid all the discussion about the wisdom of the trip, that did resonate with people in Taiwan. Obviously, Taiwan is often excluded from global discussions. It's not part of the United Nations, and so it can often be sidelined. And so people typically welcome these kinds of high-profile visits here. But people are also aware that it came with some negatives. China had signaled very, very strongly in advance that there would be grave consequences should Pelosi land in Taiwan, and indeed there would. And they have enacted them all pretty much exclusively against Taiwan. There have been bans on imports of foodstuffs from Taiwan to China. And there's been the announcement of a wide range of military drills surrounding Taiwan in the coming days.
Okay.
That could potentially disrupt shipping in this key waterway.
Samson, thank you very much. Samson Ellis, our Taiwan bureau chief in Taipei. And that takes us nicely to the China response. China has strongly protested against Pelosi's trip. To retaliate, the country will conduct military drills around Taiwan. It's also restricting some trade with Taipei. We heard from China's foreign ministry spokesperson earlier.
We will do what we say, and let me say that these measures will be firm, strong, and effective. And also, I wish to stress that when we look back, each time when the United States makes a provocation to China, every time it has brought disgrace onto the U.S. itself, and it has been self-damaging. And the latest example is what Pelosi did to Hong Kong, inciting the criminal elements and violent forces.
Colin Murphy, Bloomberg China government reporter, joins us now from Beijing. So we were hearing about what Taipei was asking ahead of this visit. And now to you, Colin, on how Beijing has responded. We've heard about the drills planned for 4th to 7th of August. We've heard about the imports and exports. I suppose one key question is, have we heard it all, or will there still be more to come?
Well, that was why today's foreign ministry briefing was actually quite surprising. We were expecting to hear more details and possibly even discussion of sanctions on Nancy Pelosi herself and other U.S. officials. But there was none of that. The only thing, as you saw earlier in the clip, was a sort of affirmation that whatever the measures, they will come. It may take time, but please be patient. That was the sort of message they were saying. And they will be strong, they will be firm, and they will be effective. So as to the details, we were not given much of those, but the foreign ministry here did take a fair bit of time to condemn Pelosi herself, trying to paint this as a political stunt, that she was fishing for political capital. And all of this is at the expense of U.S.-China relations and peace and stability in the Taiwan Strait. So trying to definitely shift on the personalization of this onto Pelosi and keeping, quite coy about what the measures will be going forward.
Colin, thanks very much. Colin Murphy there reporting to us live from Beijing. Now let's get to Washington, D.C. as the White House tries to dial back rising tensions with China. Anne-Marie Horner, Bloomberg Washington correspondent, joining us with the latest. Anne-Marie?
From the White House is really just trying to tone it down. As you've said, Matt, you've seen all this bombastic rhetoric coming out of Beijing, and obviously the military drills and also some of these trade sanctions happening now because of this visit. The White House has really been trying to tone this down and saying this does not go against policy, and we've seen congressional leaders in the past visit Taiwan. For Speaker Pelosi speaking at the press briefing today, she really wanted to affirm the U.S.'s commitment to Taiwan, but at the same time, she didn't go out of lines in terms of changing any foreign policy towards China or Taiwan publicly. But take a little bit of a listen of what she had to say in terms of all the fireworks surrounding her trip.
I think that they made a big fuss because I'm speaker, I guess. I don't know if that was a reason or an excuse, because they didn't say anything when the men came.
Speaker Pelosi also standing alongside the first female president of Taiwan, saying they didn't say anything when the men came. She's talking about other former congressional leaders visiting Taiwan, and maybe they didn't get exactly all of this rhetoric we're seeing out of Beijing over the course of the last week or so.
Yeah, maybe they also weren't third in line to take over if something happened to the president, I suppose, is the key differentiator there, Anne-Marie. I know you've also got oil on your mind. OPEC Plus meets today, and this comes in the aftermath of President Biden's visit, which you accompanied him on to the Middle East.
That's right. When we were in Jeddah, the president had said that he was expecting more oil to come on the market. Now, today, OPEC is meeting, and if you look at the Bloomberg survey, what people are expecting is just maybe a stable approach or not much, just very steady in terms of where production is going to lie. So obviously the risk to the White House is that you're not going to get a huge lift in terms of output coming from the kingdom. But at the same time, we shouldn't forget that over the course of the past 2 months, we have seen goodwill gestures coming from Riyadh. At the moment, they're pumping just shy of 11 million barrels a day, something that we don't really see in decades coming from the kingdom, except, of course, if you remember the price war they had with Russia in April of 2020, we saw them reach those levels. So most people are expecting just a modest increase. There are some risks, though, politically of what that would mean here in Washington.
Anne-Marie, thanks very much. Anne-Marie Horton there reporting from Washington, D.C. Now, treasuries are stabilizing this morning after a slide sparked by hawkish Federal Reserve comments. Cleveland Fed President Loretta Mester spoke on the chances of recession.
We don't talk about recession per se. It's, are we growing below or above trend? And, you know, my forecast for this year is that we'll be growing below trend, but that's necessary in order to get price increases, inflation under control.
Bloomberg's Tridi Gupta joins us now to talk about the market action we saw yesterday and what we should prepare for today. I mean, it's really been incredible watching these big moves in Treasury yields.
It's massive. The bond volatility is back, and you had an 18 basis point move in the 10-year yield alone yesterday, and that doesn't even include when you look at the front end of the curve, which had almost 20 basis points of intraday action. Remember, this is still, even with that kind of volatility, you're still seeing the 10-year yield under 3%. In fact, it's at 2.74 this morning. So we are still seeing that volatility, but it hasn't crossed that 3% threshold. That was such a norm when when bond investors were pricing in the inflation in a very hawkish Federal Reserve. But it's not just Loretta Mester who's speaking out about it. You had San Francisco Fed President Mary Daly said that the Fed is nowhere near being almost done in fighting the hottest inflation in 4 decades. Charles Evans, even James Bullard, the hawk that we all know on the Federal Reserve, saying a U.S. recession, well, it's not going to happen. You've got to go into restrictive and more restrictive territory. So once again, that entire comment about this being the big policy pivot, a lot of these Federal Reserve officials throwing cold water on it.
Yeah, pushing back in a big way. And of course, the Fed and all of us are awaiting the jobs report on Friday because we know they're paying close attention to the labor market. And we're watching any and all developments on hiring freezes or outright layoffs. We got news on that from Robinhood overnight.
We did. 23% of their workforce is being laid off. A lot of these support functions, a lot of marketing, advertising, that's a theme we've seen in a lot of these tech companies. Think Snapchat, Pinterest, Twitter, all of which have mentioned some sort of slowing in hiring in their ad business. But remember, Robinhood has also been dealing with a lot of their own issues. It's not just the hiring stuff. It's also the fact that they're losing active users. This is not the same Robinhood of 2020 or 2021. In fact, Vlad Tenev, the founder of the company, said I anticipated what we saw in 2020 and 2021 in terms of market conditions would last longer than it turned out to last, and that is on me. So Vlad Tenev, of course, talking about the concerns in the market when it comes to like the meme stop frenzy, but also think about it, 60% of Robinhood volume comes from crypto. We've seen this massive decline in crypto as well, so that, of course, feeding into their bottom line as well.
All right, Bloomberg's Tridi Gupta, great work as always. Thank you so much. Now let's get back to some of the stocks moving in pre-market trading here in the U.S., a number of them earnings related, including Airbnb, which reported overnight. The issue really is bookings coming in light. Analysts looking for them to capitalize, really, and investors as well, on the rebound we are seeing in travel demand. So expectations are really high, and they came in short of those. As a result, that stock is down about 7% before the bell. You also have AMD lower, the chip maker, on the back of earnings. It gave a pretty lackluster forecast, doesn't signal great things about PC demand in particular. So that stock is down about 5%, and watch for it to create a drag on the semiconductor space more broadly today. today. One more positive story out there, though, is Starbucks. Apparently, people are still paying up for their lattes and macchiatos or whatever. I'm not really a coffee drinker, but a lot of people out there are, and they're willing to pay those higher prices for their Starbucks drink. Prices were up about 5%, so that led to a revenue boost. It really is strength from the U.S., though, that's really holding them in there because, of course, China is experiencing some soft demand because of COVID-0 policy. Starbucks right now up the better part of 2% before the bell, Anna.
The expensive daily habit. Kaylee, we're just getting images coming through of the House Speaker, Nancy Pelosi. She's still in Taipei. She is set to leave Taipei, though. She's arrived at the airport. She's about to board the aircraft to take her on the next leg of her Asian visit. She goes next to South Korea, to Seoul, where no doubt we'll pick up on her visit there. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, today on Bloomberg. Brought to you by Workday.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. Now, we are looking at a Fed rate that is 250 at the upper bound. And I think the question the market has been grappling with is how much higher is this going to go? And is the Fed then going to turn around and bring it back down? Well, the answer the market seems to have settled on yesterday is it's going to be a long way before we turn lower. And we're going to keep pushing higher, hearing from Bullard and Waller. Lynn Thomason, Bloomberg Markets editor, joins us now to talk about really the shift, I think, in market perception. Now we're expecting the Fed to really push to fight inflation and not come down anytime soon, catering to a drop in the U.S. economy. You see that? You see it the same way, Lynn?
Absolutely. I mean, I think clearly, you know, the news today is talking about this pivot and the Fed pushing back against the idea that, you know, that they're going to be finished raising rates anytime soon. Clearly, the emphasis is all about inflation. And I think the interesting thing continues to be that no matter what report you look at, inflation continues to surprise on the upside. And, you know, that really emphasizes the picture that, you know, policymakers don't really have, and economists as well, don't have control over it.
Okay, so there's certainly the Fed narrative live and kicking through these markets. We certainly saw that yesterday, Lynn, and to some extent today. On the visit by House Speaker Nancy Pelosi to Taiwan, do we get a sense that we know the magnitude of the market response here, or does it take time for us to get a full sense of China's response, for example?
Yeah, I mean, I think, you know, clearly the market reaction yesterday was very negative, very sharp, and today we're seeing a much more muddled, uncertain picture picture. I think if you look at the longer term view, it's that, it shows that how sensitive the market is to these kind of triggers. And it's just emphasizing the fact that, relationships between the US and China are continuing to harden, and it's, Taiwan is really a wild card in the macro picture.
Okay, Lynn, thanks so much. Thanks for your time. Lynn Thomason joining us there with a look at the markets. And for more market analysis, check out MLIV Go on your Bloomberg terminal. That's where you find the Markets Live blog. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Now keeping you up to date with news from around the world, here's the first word. In the UK, Liz Truss extended her poll lead over Rishi Sunak, suggesting she's on track to succeed Boris Johnson as Prime Minister. The YouGov poll of Conservative Party members showed the Foreign Secretary with a 34-point lead. It's a timely boost for the Truss campaign, which earlier Tuesday had to make an embarrassing U-turn on a plan to align civil service pay to the regional cost of living. Voters in Kansas have refused to change the state's constitution to declare there's no right to an abortion. It was the first referendum on abortion since the Supreme Court said each state can set its own policy. And voter turnout was high. 4 other states will hold similar votes in November. And traders are waiting to see whether OPEC and its allies will heed a U.S. call to increase oil supplies. The coalition is meeting virtually today. A Bloomberg survey suggests that the alliance led by Saudi Arabia is more likely to keep output steady in September. Of course, oil prices have real bearing on inflation. Inflation has bearing on foreign exchange. We'll discuss that with Vasilios Giannakis, Citi's head of European FX strategy, coming up next. This is Bloomberg.
Fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably couldn't spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, and the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Pelosi's pledge to Taiwan. The House Speaker reaffirms U.S. support despite threats of more military action and trade curbs by China. She's the highest-ranking U.S. official to visit in a quarter century. Treasury yields jump on Fed policymakers' comments. They push back against talk that the central bank may pivot away from tightening interest rates. San Francisco Fed President Mary Daly says price stability is still a way off. And a sweeping overhaul at Robinhood. The app-based brokerage slashes almost a quarter of its workforce after a brutal first year as a public company. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. The excitement at the start of the week with the geopolitics certainly affecting markets and plenty of Fed speak. Matt, that's still what we're dealing with here on these markets, even though things look a little calmer this morning.
Yeah, and actually not risk off, right? So the Fed speak could have scared you away from equities, but I think the relief about Pelosi's landing and the relatively mild response from China is allowing markets to rise. We see S&P futures now up 0.4%, so doing double what we saw just a half hour ago. Nonetheless, we still don't see much movement in treasuries or the dollar. You can see that The 10-year yield has come down just about a basis point, not quite to 274 right now. And the BBDXY, the Bloomberg Dollar Index, is up about 1/10 or down about 1/10 of 1%. So not a lot of movement there either. And those are, of course, safe haven trades that we've really seen active when tensions are high. Bitcoin, I'll just mention, up 1 1/3% at $23,335. So it's holding near the upper range, Kaylee, of what we've been seeing over the past few weeks. What do you see in terms of pre-market movers?
Well, there is a lot related to earnings going on this morning and a lot of really big moves off the back of them. One of them being PayPal. It's actually less about the quarter they reported, more about news that Elliott Investment Management, the activist investor, is now a major shareholder, and the company is introducing a $15 billion buyback. So that is leading the stock up more than 11% before the bell. You also have SoFi getting a nice lift. It's up about 9% after a beat and raised quarter, so a higher full-year outlook. Plunging to the downside, though, down 22% before the bell, is Match Group, of course, the online dating company. It reported worse guidance than expected, really speaks to a slowdown coming out of the COVID-19 pandemic. Also, foreign exchange headwinds, a big issue for them when it comes to overseas sales. Finally, AMD also down about 5%. It, of course, is a big chip maker. Waning PC demand leading to a pretty lackluster forecast, so that stock down about 5% and weighing on sentiment more broadly for the semis this morning, Anna.
Even the dating world falls at its knees for the strong dollar. Kaylee, let's have a look at what we have on European markets right now. Pretty flat right now. The stock's 600 Europe, not going anywhere. Lots still to talk about, though, when it comes to oil and data and rate hikes this week. So a lot in the mix as we head towards the end of the week. Insurance doing well here in Europe today. And AXA, the French insurer, up by 4.7%. A buyback that was unexpected by the market, sending that stock higher. BMW, the car maker in Germany, down by 4.9%. A lot of questions hanging over energy supply, of course, for this sector and the economy as a whole, but specifically around BMW, questions around chips, questions around orders, just raising a few flags for some analysts. And I put in the natural gas price here, and this, not because it is moving all that much today, but just because it should still be, of course, on our radar with the issues that Germany is having with regards to gas. We then hear from EDF, and Matt flagged this story to me earlier on today. We're hearing from EDF that they are having to dial back expectations around nuclear energy coming through from France because, of course, higher temperatures, Matt, mean higher river temperatures, and that weighs on their ability to generate electricity.
Yeah, we're seeing rivers dry up, and so the one country you think should be all set in terms of power generation, France, because it's not reliant on Russia for gas with all its nuclear reactors, can't really do it. I think it's really a fascinating story that we'll see play out. Let's get, though, right now back to the markets and specifically to FX, because Vasilios Giannakis joins us. He's Citi's head of European FX strategy, and I noticed today we don't really see much of a bid for the Swissy or for treasuries, nothing for the yen or for the dollar index. So, Vasilios, it doesn't look like there's any safe haven seeking going on. Everything is pretty calm, right?
Well, for today,
yeah,
probably that's absolutely right. But I think you also have to factor in that not a lot of people are actually actively trading right now. There is a lot of thin liquidity. A lot of people are on vacation, on holidays currently. Look, I think there is one thing, well, there are a couple of things that stand out to me in terms of dislocations in the market. I think, one, the fact that natural gas prices trade where they are right now, above 200 euros. This is going to be a major headwind for the euro. I don't think the euro yet reflects that related risk premium. And on the other side of the equation, I think the market really jumped the gun on the Fed during the previous FOMC meeting because I think it was interpreted as far too dovish relative to what it actually was. And especially if you look at the data, you know, you look at the employment cost index, you see the underlying price-wage spiral, which still remains very much in place. I don't think that we should be pricing a pivot by the Fed anytime soon.
Okay, so if that's the view, good morning to you, Vasilios. If that's the view then, the Fed's still hiking, no pivot, does that mean more strong dollar to play for?
I think so, I think so. Look, I don't think that we are going to experience the speed or the magnitude of the strength of the dollar that we've actually seen up until May and early June. But nonetheless, I still think that the dollar is going to gravitate higher against the euro and against commodity and high beta effects.
Yeah, I was going to ask you against what? So against the euro, against the Aussie dollar, I think you argued, and against the yen, maybe?
I think the jury is still out on the yen. I think, in my view, the yen has bottomed out against major peers. Whether it strengthens or not against the dollar, it will depend on how much repricing higher we're going to see on the Fed. But the reality of the matter is that basically we are in a period where there are a lot of global recession risk premia getting priced into the market. You can see that in the inversion of the yield curve, especially the 2s, 5s, which is less volatile than the 2s, 10s. And historically, what you see during these periods, every G10 currency, with the exception of the yen, depreciates quite notably against the dollar during the early phase of the inversion of the yield curve. So that's really our story. I'm not entirely convinced that we're going to see substantially higher levels in dollar-yen, but I'm far more convinced that we're going to see the yen higher against the euro and commodity effects.
I want to ask you about one other central bank and country that hasn't been mentioned yet. The BOE is coming up tomorrow. There seems to be really just not a lot of conviction as to whether or not it's going to go 50 basis points or 25. What is your base case, and what does that mean for sterling?
Well, look, our house view is for 25 basis points hike with potentially a split, a 5-3 split with 3 people voting in favor of 50 basis points. I know that's out of consensus. Gun to my head, I think, you know, the likelihood of them doing 50 basis points is quite high. I think the important thing, especially for sterling, is going to be, one, the magnitude of the hike, the split of the votes, but equally the language about what's going to happen further. Now, it seems to be coming in vogue right now that the theme of nowadays is incoming data dependence. And I think the BOV is going to be no exception into that. So I don't think that the hike of, even if they do 50 basis points, I don't think this is going to be bullish on sterling, because largely this has been priced in. And I don't think cable is the main story here. Sorry, Matt, you wanted to ask something.
Well, I wonder, you know, we keep seeing these pictures of Liz Truss, and apparently she's leading, and I can't keep up with the horse race. But I wonder how much it affects something like the pound, the cable rate.
I think, well, let me put it this way. Irrespective of who actually wins the race for the next PM, I think it's quite clear we're going to get some fiscal stimulus. It will depend on the final outcome, but we are going to get some sort of a fiscal stimulus. I'm going to put aside medium-term implications, because we all know UK has a large debt to GDP. But in the short term, I think any fiscal stimulus is going to be good for sterling, especially against the euro. So if you put these two together, you have euro, the main vulnerability, Italian politics, you have natural gas, very high recession risks. And on the other side of the equation, if you get some sort of a fiscal boost to cushion the blow from monetary policy, at the same time from very low savings rates, I think this will be good for sterling, also because it will have hawkish implications for the BOV.
Okay, thanks very much, Vasilios. Good to speak to you. Vasilios Giannakis on set with us here from Citi. Coming up, more on US-China relations with George Magnus, Research Associate at Oxford's China Centre. We will get George's perspective on all we've learned with regards to Taiwan over the last 48 hours or so. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
We want Taiwan to always have freedom with security, and we're not backing away from that.
U.S. House Speaker Nancy Pelosi pledging her support for Taiwan, saying that now more than ever, American solidarity with Taiwan is critical. China, of course, strongly protested Pelosi's trip, which just wrapped up. She's the highest-ranking U.S. official to visit Taiwan in a quarter century. To retaliate, China will conduct military drills around Taiwan in the coming days. It is also restricting some trade with Taipei. Joining us now is George Magnus, research associate at Oxford's China Center. He is also the author of Red Flags, Why Xi Jinping's China is in Jeopardy. So, George, you are the perfect person to speak with today. As we look at the moves China has already taken, in some sense, they are not the most extreme scenario that I, at least, could have thought out. Do you think we've seen all of it?
Probably not. I mean, we haven't seen the sort of, bifurcated sort of scenario that a lot of people have been talking about, like they're either going to go to war or they're not, or they're either going to intercept her plane or they're not. And, maybe that was always a little bit kind of fanciful, a little bit kind of comic. So obviously, the approach to Taiwan, came from the kind of the eastern side, and, they didn't want to obviously risk anything over the South China Sea, where Chinese naval patrols were already in existence, and the Chinese regard that as their home turf, So, but the point is that I think that this is a process, and it's a process of coercion, and it's a process of bullying, in which China will want to bring a lot of pressure to bear on Taiwan, and certainly before the 20th Party Congress. After that, we must hope that there can be some sort of diplomatic agreement, if only to differ on, some things, but agree on others. But for the moment, I think it's an escalating situation and very, very dangerous.
George, one of the things I haven't seen many people talk about is how strong of a desire the Republic of China actually has to be independent from the People's Republic of China, because clearly they're very close trade partners. There are probably, countless families that live on both sides of the strait. How serious is Taiwan about independence?
Oh, I think they're pretty serious about not wanting to be part of the People's Republic, and certainly not wanting to be part of what the Chinese used to call, perhaps they still do, sort of one country, two systems arrangements, not least because they've seen what that leads to in Hong Kong. And they don't want to be part of the People's Republic, and they certainly do want to jealously protect, if they can, their democratic system and their alliances and allegiances with the United States and other friendly countries. So I don't think we should underestimate their seriousness. I mean, there may be kind of a tendency, or certainly a sense deep down amongst Taiwanese thinkers about, what the future portends and whether they can, in the long run, hold out against their huge neighbor. But for the moment, I think that's not really the issue. I think the issue is they feel very protective and very jealous, not jealous, but jealously guard their independence.
Okay, and we have heard from China some of its response to Kaylee's point about how they would respond. We've heard a bit about imports and exports. There's sand, there's fruit, there's biscuits, there's all of that. We've also heard, though, more threateningly about the military maneuvers that are planned and the military drills that are planned between the 4th and the 7th of August. Give us a sense of how significant that is, George, because if you look at the graphics that have been put out by the Chinese government about what they intend around Taiwan, it looks kind of threatening.
It is, and obviously it's designed to be so. And, you've got the prospect of the sort of easterly, westerly, northern and southern drills, basically firing missiles at one another across the island, obviously into the sea. But they've warned all other craft, military and air, to stay away. Some of those red zones that you showed on the map are believed to intrude into what the Taiwanese regard as their internal, waters and sovereignty, what they regard as their sovereignty over their waters. So this is playing, I don't mean playing in a kind of a jovial sense, obviously, but this is playing blockades, right? So there's the military drills, it's live fire, everybody's supposed to stay away. But this is the kind of thing which is designed to show Taiwan that it's easy for China to blockade the island if they so chose at some point in the future. And, that's something we all, I'm sure the, Pentagon, State Department are acutely aware of what the signaling effect of that is. Other countries have to be aware, companies have to be incredibly aware about what the implications of this might be.
Well, I'm just going through kind of a list of challenges that Xi Jinping is now facing. Obviously, there is this Taiwan issue, tensions with the U.S. on the foreign policy front. Then when it comes to domestic policy, China has a real growth problem, real turmoil in the property sector, an inability, it seems, to escape from COVID-zero policy. Just how tenuous is Xi Jinping's position heading into the Party Congress later this year?
Okay, we could talk about this for a long time, and we don't have a long time. Bottom line is, I think he's probably still nailed on to be nominated for a third term, or perhaps for as many terms as his enemies and his health allow for. But he's not all is going swimmingly, and obviously the domestic situation is poor, as you've made out. And I think partly for that reason, and for many reasons associated with what's going on in real estate and many other parts of the economy as well, it's important, that he should show the party that he's standing up to what they regard as this provocation, and wants to act tough. So I don't think there'll be any tendency for him to ease off or back away anytime soon, to be honest. I think if that's going to happen, or there's going to be any sort of dialogue with American counterparts, it's going to be after the Congress is over.
Okay, George, thanks so much for joining us. George Magnus of Oxford University, thanks for giving us your thoughts. Coming up on Balance of Power, Asia Society Vice President Wendy Cutler joins the team. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now. You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight. You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Bloomberg Green, bringing you the business, data, and innovators fighting climate change. Reinventing climate news on TV, Quick Take, and Bloomberg.com.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller, Kayla Lyons here in New York. Anna Edwards with us out of London. Now, Tom Keene, the co-anchor of Bloomberg Surveillance, joins us now. So, Tom, what's your single best chart of the day?
It's a Wednesday on a jobs day on a Friday. Let's start framing out that really, really important series. And this is what is sort of understood but not shown. Let's go right to the chart. It is the 1-year moving average of non-farm payrolls. Real simple. And all you need to know is we're still at a very elevated level off that boom in job formation off of the grim part of the pandemic. And we've moved from a moving average of 180,000 out to a still ginormous 524,000 with a hope and prayer that that will roll over and come back down near 200,000 here at some point.
It's amazing how much you now need to look at this data set very carefully, don't you, Tom, given the huge distortions we saw to it during the pandemic. So who have you got lined up on the show to talk about, yes, the jobs picture in the U.S. and other factors beyond?
We're going to talk to Kathleen Beth-Johnson about the jobs picture. We'll do that at the 8:30 hour. But also the laureate, Joseph Stiglitz, will stop by. And Joe Stiglitz, the economist from Gary, Indiana, knows that his Gary, Indiana is flat on its back with 8-9% inflation. We'll address micro 101 and a little macro 101 with a professor from Columbia.
All right, Tom Keene, taking me back to my days at the University of Virginia. Thank you so much. Looking forward to surveillance over the next 3 hours. Now, as for what else we are watching today, I will be watching oil, more specifically the OPEC Plus output decision. It's basically going to go one of two ways. Either they do what President Biden would like to see them do and decide to raise output for September, or they don't. And of course, after the president made that very contentious trip to Saudi Arabia last month, he exited hopeful that they would indeed start to pump more in order to keep oil prices down. But the traders and analysts we've surveyed here at Bloomberg think that they're probably going to hold it steady, Matt. So it'll be interesting to see what the decision actually is as we have WTI and Brent both trading south of $100 a barrel.
Yeah, and there's an easy seg from oil and gas to BMW, which I'm watching after the company actually beat expectations with earnings, but released an outlook that was concerning. Anna mentioned Todd's earlier, which is doing incredibly well today in Italy. They make the perfect shoes with which to drive a BMW, or the BMW of old, when they had stick shifts, manual transmissions. Now those are dying off, as are the gas engines. Soon we're going to get just an electric fleet, but maybe even a hydrogen fleet. Apparently, Oliver Zipse, the CEO of BMW, says he sees a real chance for hydrogen-powered cars and that we need to relook at that possible solution.
We still have quite a few stick shifts here in Europe. I'll fly the flag for those for just a moment in the very short term. But your more serious point about where we get our energy from in the future, Matt, a key factor to watch here in Europe, of course, we know about the issues surrounding Russian gas delivery into Europe and a lot of people revisiting their assumptions about where that goes. We showed the natural gas price earlier. It's not moving all that much today, but there are real questions about where it heads into the winter, of course. We've seen 2 days of gains on this, and we talked about the issues that France is having with nuclear power. We saw Olaf Scholz, the German Chancellor, making a visit to the German factory that has repaired the turbine and has a turbine ready to go back to Gazprom. They say that there are no issues on the German side with sending it back. Gazprom and the Russians continue to blame, of course, delays in delivery of that turbine for reduced flow. Storage at 70%, which is in line with normal levels, but of course flow is not normal right now. A lot more still to come on surveillance. This is Bloomberg.
Companies need to think about how they normalize Blackness and they normalize the Black aesthetic and what it really means to be inclusive. And that means to recognize and appreciate and respect and celebrate all aspects of culture and different cultures. And so it's critically important that we recognize that this is an issue, just as my sisters have said, and make sure that we recognize how that issue shows up in the workplace and how we can be advocates and allies in action to ensure that no person, no Black person in this country feels marginalized or disrespected or diminished in any way because of their hair or their race.
So the challenge is not everyone understands that race-based hair discrimination is a reality. And so we find ourselves constantly educating people, including lawmakers, to ensure that they understand that hair discrimination is racial discrimination. And so we are working collaboratively, the four of us championing this work together, along with the Crown Coalition, to ensure that race-based hair discrimination is outlawed nationwide.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics? Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
The Fed had articulated a bit of a focus on growth. We know that they're not there yet.
The Fed is focusing on inflation. Inflation is still rising.
They want to create some slack in the economy without causing a recession.
The view here is that the Fed actually will remain aggressive in trying to curb inflation and as a result, increase recession risk.
I think they want to be really cautious about pivoting too soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures positive 0.4% on the S&P. TK, Fed officials lining up to push back.
I'm going to let you keep the scorecard and let me know. I was watching the Major League Baseball trading. That was more interesting, but you know, there it is, and the markets move. The markets move one way, the markets move the other way, more Fed. Are we back to forward guidance? Maybe we're back to backward guidance. I'll let you decide.
The two-year yield, Tom, a coiled spring going into that Fed speak yesterday. Up 18 basis points. I have to tell you, TK, it was
Look
Mary
at the
Daly.
5-year.
Mary Daly of the San Francisco Fed that unleashed things, saying we're nowhere near being done. So yields up a great amount. Equities down by not much, Tom. Down about 1/10 of 1%, 2/10 of 1% lower on the NASDAQ yesterday.
Julian Emanuel moments ago publishing at Evercore ISI, and he says, look, service sector has resilient consumption, and maybe you see that within equities holding on here, and a certain kind of equities. I like we've got Sam Stovall later this morning.
Gramo wasn't watching the baseball. Neither was I. Lisa, I know you were looking at the data. Job openings in America coming in, and aggressively so.
How much does this actually mean, though, that you're starting to see a real weakening in the labor market versus all those false advertisements for jobs basically being taken off the market because a lot of companies are ratcheting back their hiring plans? What I'm basically getting at here is how do you read data that is soft, that is not necessarily so clear, that isn't exactly the hard data that we get in the jobs report that we'll get on Friday?
A bit more data later this morning. Lisa, the academic debate of the moment on the economic data, can we bring job openings down without pushing unemployment higher? A lot of division out there on that topic at the moment.
You know, there is this perfect reality that people are looking for. There is some mystery behind why the participation rate in the labor market has not ticked up, why we aren't seeing more people come back and say, okay, we need to actually work now. And that, I think, people are hoping will resolve itself and get us back to some sort of equilibrium at a time where that's not happening quickly enough to get inflation back down.
Anything else to say on the baseball, Tom, before I hit these markets?
It's fun. It's fun. You know,
you had a good time.
And frankly, I think the Premier League does just as good a job. I mean, you know, you keep up with that way more than I do, but it's fun, and the Padres,
I love you, Tom.
The Padres look good.
2/3 of the show prepared for today.
Yeah,
that's good, Tom. Futures positive, 4/10 of 1% on the S&P, on the Nasdaq 100, up around 4/10 of 1% as well. Equities
Josh
doing
Hader
okay.
came out on the mound, and it was
good to know,
exciting.
Tom.
Goosebumps.
Good to know. Yields up about a basis point on a 10-year, 275.92 on a 10-year yield.
Still look good.
A real turnaround, Lisa, in the last 24 hours.
It's really been shocking to me because everyone knew that the Fed would come out and push back on the huge rally that we saw in stocks and basically say that the bond yields were not responding to something that the Fed was actually going to do, which is back away from rate hiking, and yet here we are. I can rant about that through the rest of the show. I'll spare everybody. Today, here's what we're looking at. Yes, there is a slew of Fed speak, and we'll be tracking it throughout the day, but when it comes to the hard data, OPEC Plus is expected to agree on a modest output hike at today's meeting. How much do you get some sense that they are going to increase output in response to the trip that President Biden took to Saudi Arabia? How much do they respond to a softening in demand because of how much activity is declining? Do we get some sense of that push-pull in the latest read on the economic outlook from the big oil producers? At 10 a.m., this is going to be interesting because we actually have seen softening in the services industries. We get the U.S. ISM Services Index for the month of July. How much does it continue to decline at a time when we were supposed to see a shift from goods to services? We've seen a shift away from goods, but we've also seen services start to really bleed lower. And then the next read on that we're going to get today is a slew of earnings. We've already had about 80% of S&P companies reporting earnings. The latest will be Under Armour, MGM Resorts, and Host Hotels and Resorts. I'm curious about some of these discretionary spending companies, because how much does it show people are seeing prices go up for the basic staples of life? They're pulling back from the other less basic items in life. And how much do you start to see that in the anecdotal data as well as the more collective ones, John?
I was going through some earnings calls data from Bank of America yesterday afternoon. That's what I was doing. Tom was doing something else. And the word weakness came up repeatedly for consumer discretionary. But Lisa, when you look at the stock price performance, consumer discretionary on the S&P 500 is up more than 20% from the lows of the middle of June.
People are moving on from the weakness now and looking at the beginning of the next cycle. And they're saying the consumer discretionary is the place to be if we are seeing the bottom, if we are seeing the downturn now. That's the real question. How much more weakness is there to go? And do we get a sense with some projections from some of these consumer discretionary companies?
What a squeeze in that part of the equity market. What a squeeze higher in yields yesterday as well off the back of the Fed speak. As Lisa pointed out, more Fed speak to come through today. Jens Nordvik joins us now, the founder and CEO of Exante Data. Jens, let's start there. A coiled spring, 2-year yields going into Fed speak yesterday. What did you make of that pushback from Fed speakers across the country?
I think they essentially just reiterated the message they've been trying to send over the last month or two, and really the the reason why we had such a violent move was that we had a very dramatic rally in fixed income over the last few weeks, and it was a reversal, if you will. I think that the big issue we have in the market is that the Fed is not about to pivot, and it's the same issue we have for many central banks around the world, right? Inflation is so high that it's just too early for central banks to come out and explicitly signal something new. But at the same time, the growth data we're getting is soft, right? So the market is kind of looking through what the Fed and other central banks are saying right now and saying, okay, they will have to pivot. So it's kind of this tension between what they're actually saying and the market trying to think just one step ahead of that, or two.
Jens, I got like 14 questions. Let me devolve it down to what OECD just said. They just handed us double-digit developed world inflation. It's out at 10.3%, announced moments ago, up from 9.7% and 9.2% and 8.8%. You get the theme here in the recent months. We've got this global inflation. What is the dollar dynamic, if we're ever so lucky, is to get U.S. inflation from a 9% down to a 7%? Does dollar move?
Yes, I think what we've seen over the last 2-3 weeks is that we have this incredible tension between the weak growth I mentioned a second ago and then the fact that the long end of the U.S. yield curve is reset lower, right? So the dollar has kind of been stuck between those two things.
Yeah.
And I think from a medium-term perspective, you will often find that the big cycles in the dollar are really determined by the global growth cycle than anything else, right? So it's sort of hard to see if we don't have any green shoots in the global economy, it's hard to see the dollar really weakening dramatically. But we can have for a couple of weeks a big reset in the yield curve, and that tactically moves the dollar around. And that's exactly what we've seen over the last couple of weeks.
Jens, yesterday we were talking all day about Nancy Pelosi visiting Taiwan. Is this going to be a game changer, not just for geopolitics, but for markets? And we saw a big reaction the first part of the day in yields going lower. Then the job opening from the Fed sent it the other way. Is this going to be a lasting story for markets, or is this going to be a blip on the road to whatever's going to happen with the economy and Fed speak?
Yeah, I think the big issue that I speak to about with ex-ante data clients and everybody who's involved in the market is really, okay, exactly where is inflation going to land, right? And I think in coming months, we're going to have a situation where goods prices are going to come down. We all know that gasoline prices are down in the U.S. That's going to impact headline numbers. We can actually see it around the world that the July inflation readings that we're getting are a little bit different, but that's not enough for the Fed. The Fed needs to see that on a broad basis, there's something new going on with inflation, i.e. lower, meaning services prices. So it's going to take some time before we can have conviction that there's something really different going on. And I think it's going to be a really, really difficult period for the Fed where they're going to judge, okay, headline is coming down a bit, but services prices is still very sticky. How do they handle that? That's why the market is trading so erratically right now.
Jens, just quickly, favorite trade right now, what is it?
Well, so you need to be very, very careful with your entry points, but I do think there's some rate markets where even if we had some retracement yesterday, there's a too quick a pivot price. So for example, in European rates, we think even if growth in Europe is weak, there's going to be a need for the ECB to do meaningful steps to get off negative and get into positive. And that's been priced out too much.
Interesting. Jens Nordvik there of ex-ante data. Thank you, sir. TK, I have to say, we've talked about this a few times over the last week. The debate around ECB rates, very one-sided, not divided like the debate around Fed rates. It's just a complete lack of belief about how far they can go, and Jens seems to be pushing back against that just a little bit.
And where are we on Bank of England, which I believe is it tomorrow, John? Am I
Tomorrow.
right on that?
Tomorrow morning.
I can't convey enough how these are three different dialogues, forgetting about Japan for a moment, and Bank of England with the inflation story there and the politics, John, that I can barely keep up with, trust Sunak. I mean, what does the Bank of England step back in honor of the politics, John?
And no, they have to step in honor of the data. And right now that requires another rate hike. According to many people, it could be 50 basis points. Tom, I'm looking ahead to next week. CPI out of America, 8.8%.
Yeah, that's a key data.
Is the year-over-year figure people are looking for. That's the median estimate, step down from 9.1. Core to stay elevated. Month-over-month changes to inflation is something President Mester mentioned yesterday, Tom.
Yes.
That's going to be the focus for this market.
We got to stop here, John. This is really important. As you mentioned, core on August 10th, folks, actually models up. And as Dr. Messer mentioned yesterday, John, Dallas trimmed 1 month data was nothing short of stunning. Liz Ann Saunders featured that yesterday, and she's dead on. I'm sorry, the inflation metric on a 30-day basis is up.
Elisa, that's what this market's going to be focused on next week.
It's not going to give people comfort, and perhaps that will cause doubling down on the trade that we saw in the second half of yesterday, where people realize the Fed cannot take their foot off the brakes that quickly, and that seems to be the move. Although you pointed this out this morning, John, we saw the move in bonds. We didn't see it in stocks.
Resilience is the word of the moment, isn't it? We're throwing a lot of this equity market and pretty resilient. Up again today by 0.4%. We'll get the view of Kristen Bidley as Citi coming up in about 50 minutes' time, and we can confirm Speaker Pelosi has taken off from Taiwan.
Yeah, I got it, John. She's here. She just passed incoming from San Francisco. She's heading due east. I'm watching it on Flight Radar.
Very cool. We'll catch up with AMH down in D.C. next. Tom's got two screens. Lisa, baseball on the one side and Flight Radar on the other.
No, the Padres are killing it. I mean, they got to do the Rockies again. They took 2 yesterday, and then it's on to the Dodgers. Padres, Dodgers in honor of Vince Scully is going to be great.
Very cool. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. House Speaker Nancy Pelosi pledged that the U.S. will not abandon Taiwan. She reaffirmed American support for the democratically elected government in Taipei, despite new threats of Chinese military action. Pelosi met with Taiwan's leader and left today for South Korea. Meanwhile, China announced military drills to protest Pelosi's visit. It also halted some trade with Taiwan. The Federal Reserve is pushing back against the idea that policymakers may pivot away from tightening. 4 Fed district bank presidents highlighted in remarks on Tuesday that there's no sign that inflation is easing, and that helped trigger a surge in Treasury yields. Voters in Kansas have refused to change the state's constitution to declare there's no right to an abortion. It was the first referendum on abortion since the Supreme Court said each state can set its own policy, and voter turnout was high. 4 other states will hold similar votes in November. In the UK, Liz Truss extended her poll lead over Rishi Sunak, suggesting she's on track to succeed Boris Johnson as the next Prime Minister. The YouGov poll of Conservative Party members showed the Foreign Secretary with a 34-point lead. It is a timely boost for the Truss campaign. Earlier Tuesday, Truss had to make an embarrassing U-turn on a plan to align civil service pay to the regional cost of living. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, You know, when we look for these subprime, the reason why we shorted these subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, today on Bloomberg. Brought to you by Workday.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
This week, will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labor market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
Our delegation, of which I'm very proud, came to Taiwan to make unequivocally clear we will not abandon our commitment to Taiwan, and we were proud of our enduring friendship.
Speaker Pelosi just yesterday taking off from Taiwan earlier on this morning, about an hour ago. She's heading to Seoul now from New York City this morning. Good morning with Tom Keene, Lisa Abramowitz and Jonathan Ferro. Futures positive, just about 0.4% on the S&P. On the NASDAQ 100, we're positive 0.33%. Yields higher, much higher in yesterday's session, up another basis point this morning to 276.65, 276.47, dancing around on a US 10-year. Here's the latest tweet from Richard Haas of the Council on Foreign Relations. This one, Tom, got my attention. The reason Speaker Pelosi's Taiwan visit is getting attention is because of China's reaction. He goes on to say, if the mainland prioritized relations with the US, it would have downplayed the visit, saying it expected the US to live up to the one China policy. This crisis, in inverted commas, is about mainland politics.
Well, he took that from you yesterday, John. I think you were really out front on that yesterday, that the dynamic of America is pretty much the same as it's always been. We'll do nuance that with Anne-Marie. But, John, you were dead on yesterday about this is simply a changed China.
They're saying the same thing, Tom, a changed China under this leader, and ultimately a changed economy in a big way over the last couple of years.
You know, with Taiwan, with 30% of Taiwan exports to the mainland, and of course we saw some kind of sand yesterday was cut off by the Chinese. Anne-Marie Horton joins us now for a brief, our Bloomberg Washington correspondent. Anne-Marie, Speaker Pelosi is north of Ishigaki, which is Trenchant in World War II history, on the way to Japan, on the way, I believe, to Seoul right now. And it brings forward the proposed meeting of the Chinese and American leaders. Was that blown up yesterday, or are we still going to see a meeting? Do you have any reporting on that?
Nothing has changed so far. What we do know is that taking away from that call Xi Jinping had with President Biden is that they tasked their teams to set up an in-person meeting. We should note that during that call, there was already a lot of talk and speculation, and everyone pretty much assumed Speaker Pelosi was going to make this trip to Taiwan. So Xi Jinping was already pretty much well aware that the Speaker of the House would be going to Taiwan when he directed his teams to also start setting up that in-person meeting. And I believe that at this moment, they are still working to do that, and likely that would potentially come in November, because the president will be in Asia. He'll be in Bali for the G20 meeting, and that could potentially be the first time the two meet in person with Biden as president, because of course they've met in the past.
There was respectful silence yesterday, maybe given dangers or worries of Speaker Pelosi's safety. And as she leaves Taiwanese airspace, out come the knives, out comes the criticism. Give us the distinction that this was not bipartisan. The Post has a fabulous photograph, folks, of Speaker Pelosi 30, 40 years ago on China. Anne-Marie, what's the significance that Republicans weren't invited?
Well, Republicans I believe they were invited and they decided to not go.
Okay.
But you had heard from Minority Leader Kevin McCarthy saying that if he's Speaker, he would love to lead a delegation there as well. But I would say that the Republicans have supported this trip. They immediately released a statement, about 24 of them, saying they are very much so in support of Speaker Pelosi's visit to Taiwan, and they applauded her visit, and they think that she should be doing this, standing firm in the face of China, but also wanting to make sure that the United States, they're reaffirming that they have not changed their policy of this ambiguous, many would say, one China policy. So there has been a lot of support for her on the other side of the aisle. This has gotten a lot of bipartisan support. You know, going into this trip, if she didn't go, that is really where you would have seen a lot of the political backlash, and the Republicans would have said that the Democrats look weak in Beijing, which really is not advantageous 100 days out from a midterm election.
Anne-Marie, what's the sense that we get about additional ramifications from China, the response that we've already seen being some of the military exercises and some sanctions on certain goods being exported from Taiwan? What's next?
We don't know yet, but you can imagine it's more of the same. I guess for the military exercises, they've given exact dates. Potentially, those would linger. You also now have a lot of Asian flight carriers having to divert around Taiwan because the Chinese military of the actions they are doing. So I think the big question on the military front is maybe this continues, but for how long does this continue for? And then, of course, when it comes to the trade sanctions, you have China not allowing exports of sand that now Taiwan will likely have to get from the Philippines. This is to make concrete. And at the same time, one of Taiwan's biggest exports is fruits, and China is cutting that off. So you really see the repercussions not on the United States for Speaker Pelosi's visit, but on Taiwan. But at the same time, Taiwan certainly welcomed this. You can just see when the speaker left, you had people trying to get any sort of moment with her, a selfie, a handshake. You know, that would not happen in Beijing.
AMH, Anne-Marie down in DC. Anne-Marie, thank you. We'll catch up with you in the next hour. Lisa, looking forward from here, how do we get these two leaders to meet in person, 1 and 2? Are we anywhere close, anywhere near to removing tariffs on Chinese goods?
Well, okay.
That's been talked about how many times over the last few months?
And it seems like that's off the table. I mean,
Totally.
pretty much people are saying, okay, that potential peace leaf is gone. The question that I have is, how significant is this going to be in terms of accelerating the breach between U.S. and China economically? And that, I think, is what a lot of analyst notes were trying to gauge out. Yes, there are the military exercises. People are not expecting necessarily a huge military altercation. The issue is, how much does the U.S. pull back from China, and the other way around, as China starts to retaliate economically more than anything else?
China's got its own problems. Mandy Zhu at Credit Suisse put it well yesterday on this program, Tom, when she talked about COVID zero. That's the #1 issue for anyone looking at investing there at the moment. It's COVID zero, it's the mortgage boycott, it's the direction of the economy, the data's weak. We've gone over it again and again and again.
To review it, folks, and the math is shockingly simple. The run rate in your brain is China's 6%, and the answer is 3% is unacceptable, and 3% signals global recession. And there's many surveys, John, that look at where China's set right now is beneath those two statistics.
I just looked at the ECFC function on the Bloomberg, Tom, entered China. 4% is the median estimate right now for this year, 4%. There are others, Tom, looking for that 3 handle in that economy.
It is gospel that domestically it's all about jobs. It's keeping people employed and busy. within the unique government of China, if you want to call it that. And it'll just be fascinating to see. They need growth badly, and that's going to play into their response to Speaker Pelosi and, frankly, to President Biden.
And trying to avoid any kind of social unrest, you know that. Tom Keene, Lisa Bravitz and Jonathan Ferro. Your equity market's shaping up as follows. Up 1/3 of 1% on the S&P, on the NASDAQ, up 1/3 of 1% also. Yesterday, dramatic move higher in a 2-year yield, higher by 18 basis points. Yields creeping higher again today on a 10-year by about 3 basis points to 278. From New York this morning, good morning, on TV, on radio. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question.
Great question.
Great question. Great question. Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Live from New York City this morning, good morning. Futures tracking lower, down about, up rather, 1/3 of 1%, just used to saying down. On the NASDAQ, up by a third of 1% also. And this market up by more than 11% from the lows of June 16th. That's the S&P 500, a big move. Have we seen the lows? Two things matter, earnings and the Federal Reserve. On the earnings front, both Bank of America and RBC pointing out that maybe we haven't seen sufficient cuts to estimates to say with any confidence or conviction that we have seen the lows of this equity market. RBC's Lori Calvasina saying just that this morning. I'll be catching up with her a little bit later. On the Federal Reserve, yesterday was like a coiled spring going into Fed speak. Two-year yields came all the way in, then pop. This is what they look like now. 2s, 10s, and 30s up 4 basis points to almost 3.1% after traveling higher by more than 18 basis points in yesterday's session. And what's happened with the curve? We've done that, haven't we? 2s and 10s have just done that and got even deeper. Negative 33 basis points at one point this morning. Right now about negative 31. And Tom, you've got to go all the way back to the early 2000s to see this curve, this flat, this inverted.
Well, it's a rate of change, John, and I'm going to say it as clear as I can. Q3 early, the call of the quarter, pre-Misra, TD Securities. It's not only that we're here at negative 32, it's how quickly we got here.
Lisa, what was she looking for? Negative 40. We're getting closer and closer.
We're less than 10 basis points away, and it seems like that is the road of travel, as a lot of people have conviction to buy the long end, and they move away from the front end because the Fed has to do a lot more in the eyes of so many.
The work is not done, Tom, according to the Fed officials yesterday, and I imagine you'll hear the same thing today.
Into November. November is as important as September. We'll have to see. On that, futures, again, up 15, and the VIX 23.51 signals a trading range as we await the jobs report on Friday. We need to recalibrate on equities. That's been our theme here Monday, Tuesday, and into Wednesday. Linda Dissel joins us now, senior equity strategist at Federated Hermes, who can take it back to Westinghouse Credit, a name from another time and place. What that does signal, Linda, is you came out of high school. You've got a lot of experience looking at how you participate, trying to figure out when the bottom is. The drawdown right now is Standard & Poor's negative 14%, down negative 11%, NASDAQ a more painful negative 22%. But you've got to participate. How do you participate not knowing where the bottom is?
Well, you know, I have been around a long time. I was around in the 70s, and I can't help but continue to think that we may be in the 70s again. And if I'm right about that, we had that long period of malaise. We had about 10 years, as perhaps you will recall, when we saw peak inflation 3 times. So to think that we're done with this is silly. And so we at Federated Hermes are suggesting that we will probably be in kind of a malaise, wide range trading market for, who knows, maybe the next 18 months. And we're at the high end of that now. So we wouldn't be particularly aggressive at this point, and we're just suggesting patience.
Well, we're suggesting patience, but you can't be 100% in cash. So what do you go into? Are you suggesting the theme we've heard the last couple of days, which is quality and persistency of free cash flow is the only thing that matters?
Well, indeed, and of course that is often what really only matters unless you're in a momentum market, which we're not. So when you see pockets of the market getting hit hard or racing, then you have a chance to adjust. And this is a kind of a really nice market for traders. You know, so what you've seen lately is what you saw in this last month, which was very strong, is you've seen money going back into small cap and growth. Well, these two areas of the market had been pummeled. So it's that kind of a trading range. And so what I think is a wise thing to do is to continue to look for quality yield, get yourself paid if you don't want to be a trader, and we don't suggest that to anyone. Get yourself paid and look for quality income when you can find it. But so that's where we are right now. We are suggesting quite an overweight in cash, but also value and defensive value.
Linda, consumer discretionary is absolutely ripped off the lows of the middle of June. What business does consumer discretionary have rallying into the weakness many people are anticipating?
Well, it doesn't, and it goes to the kind of trading range that we're in and the momentum market that says, you know, I want to buy the dips. There's simply too much money still out there sloshing around looking for what's next to buy. And, you know, I mean, I travel in my job. I speak to a lot of investors, and they say, tell me what to buy. Tell me what to buy. Does this sound like, you know, a very afraid group of investors, while at the same time, the Bloomberg count for stories looking at recession is at the highs you haven't seen since the lockdown.
So we're
So
gloomy.
it's really a mixed market.
So, Lindy, we're gloomy and we're putting a gloomy picture and we're portraying the worries, but not perhaps the actions of investors as well as consumers. The view forward, though, that you have is somewhat different from other people in terms of going back to the 70s, that the Fed will act aggressively and it still won't be enough, and that you will see inflation remain higher than they would like for even longer. How do you partition that into this idea of what's safe? I mean, I think about this, I know you focus in the equity world, but from the bond perspective, that doesn't give people confidence to go into the long end of the yield curve, even though that's what they've been doing. How does that translate into the equity world in terms of safety?
Well, yeah, no, and as the long bond goes, or the 10-year bond goes, we're thinking maybe, you know, you finish at 3.25% this year, and maybe you finish 2 years from now at 3%. So if you can get a 3%, the head of our bond department is suggesting to me that, you know what, by the end of this year, you may get 3% on the shortest term money. So we're suggesting, you know, stay with quality there, stay in the short end. And we're not happy at all with investing in credit right now on the bond side.
Okay, but in stocks, where are the safe spots? Is it big tech? Is it a big oil? Where are you seeing the sense of a ballast?
Yes, and that of course is where you have to ask yourself if we're going to get into a recession or not. We still like energy very much. We still believe that the dynamics, even though this globe could go into a synchronous recession, we still think that the dynamics for oil are very, very strong. Right. Even look back 15 years, they're the cheapest sector. And the FANG stocks, the big tech stocks, the big growing stocks that gush cash flow probably still will if we go into malaise situation. So you're getting more into that range again, where they're starting to look interesting.
We've got to advance this further, Linda. You are remarkably cautious, and I would suggest cautious for the optimism I've seen over the decades at Federated Hermes. If that is the case, Linda, and you say this is the dismal 1970s, what do the other stocks do that don't have that ginormous and persistent free cash flow? Are you talking single-digit multiples? Are you talking a blended sub-15 PE multiple?
Well, no, we wouldn't go that far right now. We still think that the economy is still reasonably strong. I mean, we did all the damage this year to date, as you know, in the PE multiples. They look pretty good right now. So what we're suggesting, and if you were believing in a kind of a malaise situation, which, you know, maybe has something to do with I'm getting to be an old lady over here, you know, is that it's not terrible, but we should just temper our expectations for returns. Tempering your expectations for returns can get you back to where you might say, well, if I get an 8% return for the whole year, that would be a good year. And so that's the kind of thing to look at. Not crushing earnings, just slowing down of earnings. We're near record earnings. We still are near record cash. We have a job market that is as tight as a drum, which means that we're probably going to see, you know, continued strength. But I do want to make this comment to you, which is the consumer confidence of the more well-to-do income segments is below that of the less well-to-do. That is a rarity, and you generally only see that when you're going into recession, which we're not calling for, but I'm just saying.
Linda, thank you. As always, Linda Dussel there on this equity market. Speaking to what basically Andrew Hollenhorst is saying, a city going into payrolls on Friday, Tom, which is that the labour market's still going to show some strong data, and ultimately the Fed's going to have to go big again in September.
Yeah, but they're from two different worlds. I mean, Hollenhorst is doing economics, and Linda Dussel's practicing what to do in the equity market. And John, I can honestly say I've never seen a harken back to the 70s like that in years, 22, 21, 20, whatever there. And, you know, you go back to the dismal 70s, and I didn't hear her saying this is the dismal 20s, but, you know, you know, I'm thinking back, like, John, to the songs of the time.
Okay.
The dismal 70s.
Is there something you want to share?
No, she stood there bright as the sun on that California coast.
Goodness me.
He was a Midwestern boy on his own. She looked at him with those soft eyes, so innocent and blue.
You serenading me.
John, what depresses me is how many people
really
younger
touching.
have no idea who
That's
Bob
what
Seger
depresses
is.
You.
I mean, Bob Seger defined the dismal 70s. It wasn't Olivia Newton, whatever her name was.
I'm going to tell you what Laurie Calvasina of RBC's got to say.
Yeah, great note this morning. Great note.
Much better than expected 2Q22 results have painted a picture of resilience for corporate earnings and supported that any coming or current economic downturn is likely to be short and shallow. That's been supportive of stock prices over the past few weeks, but going forward, it also tells us, and here's the important piece, that the rally in stocks is fragile, given the possibility of further downward earnings. RBC's talking about that. Savita Subramaniam over at Bank of America is talking about the exact same thing, Tom.
Yeah, I mean, there's a lot of different opinions out there, but John, what I'm watching here, and I don't know, John, if this is an August story, the people with a very cautious equity view, do they start migrating upward because of the resilience that we've seen in revenue by 100 S&P points?
Did they get crowded in? Did they get crowded in? BNP Paribas, Lisa put out a note in the last couple of days. They say yes. This is going to crowd some investors in the short term.
Yep,
in the short term. How much does this mean, though, that in the longer term, people are not aware of the weakness in some of the areas of strength that people have been talking about, whether it's services sector spending and the travel sector, whether it's the balance sheet of the household? If you take a look at the savings rate, it is absolutely plummeted. At what point does that start to bleed into retail sales more than we've already seen, and then into the forward projections of earnings?
Can I finish on a tweet from Chancellor Scholz?
Oh, please.
Here's one for you. Nord Stream 1, as we all know, is running at reduced capacity. You've got the Russian side saying this is about turbines and servicing turbines. Chancellor Scholz on Twitter 10 minutes ago, I saw it with my own eyes at Siemens. The service turbine is there and ready for operation at any time. It just has to be requested by Russia. There are no technical reasons for reducing gas supplies, Tom. That from 10 minutes ago.
But was it just a photo op? I'm lost. Javier Blasted and France is brilliant, by the way. I'll put that out on Twitter.
Futures positive, a third of 1%.
You don't want to hear more Bob Seger?
Coming up, Ellen Wald of the Atlantic Council may or may not be joining us because she might have run away
He'd headed
after
west
hearing the
because
singing.
he felt that a change
Moments
would
ago.
do him good.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. House Speaker Nancy Pelosi says now more than ever, American solidarity with Taiwan is critical. Pelosi spoke after meeting with Taiwan's leader. She's now on her way to South Korea. China has strongly protested Pelosi's trip. She's the highest-ranking U.S. official to visit in a quarter century. To retaliate, China will conduct military drills around the island. It's also restricting some trade with Taiwan. Traders are waiting to see whether OPEC and its allies will heed a U.S. call to increase oil supplies. The OPEC Plus coalition is meeting virtually today. A Bloomberg survey suggests that the alliance, led by Saudi Arabia, is more likely to keep output steady in September. And in Turkey, inflation was almost 80% in July, and it may be months away from peaking. Turkey's central bank is sticking with its ultra-loose monetary course. The rise in consumer prices has already forced economists to rewrite forecasts multiple times this year. And water levels in Europe's Rhine River are getting close to the point where it would have to effectively close. That would put the transport of large quantities of goods at risk. Coal shipments are already restricted by low water levels. That makes coal more expensive, which raises the price of operating coal-fired power plants. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Across the board. Some of that, in some of the base metals and things like that is due to zero COVID policy in China, which could reverse in the fall potentially. But the charts don't lie. And they're telling me that we've seen a peak in commodities, and if we're going to have a recession, then they're probably going lower. So we're continuing to be neutral in energy.
That was Mike Wilson of Morgan Stanley from New York City this morning. Good morning, Tom Keene, Elisa Brabbits and Jonathan Ferro. Futures positive, 1/3% on the S&P, and the Nasdaq 100 positive too, up 1/3%. Yields higher yesterday by 18 basis points on a 2-year, just unleashed by President Daly by just saying we need to do more. Everyone lined up to say this, and then it happened, and then markets still responded like they were surprised. Yields up by 3 basis points on a 10-year today, 277.93. If you like the Fed speak, you get more of it today. Bullard, Mester yesterday, Harker, Daly, Barkin, Kashkari. That's your lineup for today. Tons more Fed speak still to come, Tom.
Okay, we got to stop here, John. I thought forward guidance was dead. Didn't we get that memo like 2 cups of coffee
They need to
ago?
tell us how they're going to interpret the incoming data, Tom. Just re-establish the reaction function. I'm with you, it's frustrating, I know. But based on what happened with markets over the last week, the easing of financial conditions, we had guest after guest saying this is an unwarranted easing of financial conditions. This Fed has more work to do. They reaffirmed that effort just yesterday. Tom, this tweet from Javier Blas. Speaker Pelosi, of course, has left Taiwan. She's on the plane right now on her way to Seoul. This is what Javier Blas has got to say on that visit to Taiwan. Quote, "It's fair to assume that the chances of China ever joining the US G7's Russia oil price cap initiative have gone considerably lower." He goes on to say, without China, you don't have India. And without either, well, you don't have any emerging nation. And Tom, some people might go on to say, without any of that, you don't have an oil price cap on Russia.
I'll just say, as we mentioned with Anne-Marie Horton, that right on cue, the moment she left airspace, you saw led by the Washington Post, the beginning of criticisms of her trip. And we'll have much more on that through the day, and particularly as Speaker Pelosi goes to South Korea. Right now in oil, Ellen Wald with us, senior fellow at the Atlantic Council. Ellen, I want to talk about the mystery that's out there right now. I've been humbled by this over the years. We game supply dynamics of oil, we game demand dynamics of oil, and we get one or both or all wrong. How great is the mystery right now of supply and demand into next year?
You know, it really is a big question because, you know, there are considerations in terms of whether we're going to see a recession and how deep that would go. If we remember back to 2008, there was a huge drop in oil prices that even necessitated OPEC taking some very significant action when the recession hit. So we could definitely see something like that. But, you know, the jury's still out on whether we see that, or, you know, the jury's still out on whether we see that, or whether OPEC Plus group, you really can't exclude Russia and the UAE as the other really big important players right now. And so it's really going to be about what they, not just what they want, but also how they see the market, especially for the OPEC players. They're really very much into their assessment of where they see the market. Do they think there will that we are in a supply shortage, or do they foresee a supply shortage emerging probably between now and the end of the year? That could trigger them to do some sort of a modest increase in production quotas. Of course, the question then arises, will we actually see any output increases because so many of the OPEC players are tapped out?
Well, that's exactly where I was going to go, Ellen. How much more can they increase output at this point?
Well, if you look at Saudi Arabia, which is the big player that has the most spare capacity, they are producing either at 10.55 million or 10.65 million barrels a day, depending on whether you believe the Saudi reports or an external source. Starting now in August, their quota is up to 11 million barrels a day, but that's not something that they have regularly produced at ever, really. I think twice we've seen them hit that mark, and then once we saw them hit the 12 million barrel a day mark. It's not a rate that they are really comfortable producing at, particularly because they're focused on the health and the long-term health of their reservoirs. So I think we could see Saudi Arabia increase a little bit, but I would not expect to see 11 million barrels a day from them anytime soon.
Ellen, perhaps this meeting is going to be 12 minutes long, perhaps 14 minutes as they make some decision. I am wondering whether they have any assessment of how much demand has actually been destroyed in the face of higher prices versus the ongoing requirements that people have to just get around and the demand for travel.
Yeah, I think that the demand for travel this summer and the fact that people have made a lot of plans is potentially masking some of the demand destruction that we might be seeing from the higher prices. Inflation is really starting to bite, especially in the U.S. It's going to bite more in Europe as well. And so I think that we will see OPEC looking at that and looking at signs for demand destruction as the summer travel season winds down across the U.S. Many schools are starting up, and that kind of signals the end of a big demand season. Of course, then they've got to look, though, at China and India, which are the big emerging players in the demand picture, and whether or not inflation is biting there.
Ellen, awesome to hear from you. And I understand you're down in Florida and the aircon just broke, so our thoughts are with you this morning. Ellen Wald of the Atlantic Council. Ellen, thank you. Just to guide you through this morning, or rather this afternoon over in Vienna, 1 p.m. local time is when the Joint Ministerial Monitoring Committee meets. Then the OPEC Plus ministers meet about 30 minutes later. So that's all going to take place in the next 30, 40 minutes or so. And Tom, the main event for so many people, after that meeting in Riyadh between the Crown Prince Mohammed bin Salman and the President of the United States, will President Joe Biden get anything whatsoever from these upcoming meetings?
But this is well said, John. Is that the dominant theme or is that a sideshow? And I would suggest because of Europe, what we saw with Scholz and the photo op with a, whatever it's called, a combine reactor, whatever, all of a sudden maybe the Biden discussion is secondary. I'm not sure on that.
I would say the regional bias from this perspective is whether the president gets what he wants. Tom, at this meeting in Vienna, I have to say you'd have to be looking at the recession story that's emerging worldwide and the deceleration in global growth. China's got difficulties, Europe's suffering, and the United States, in the minds of many people, is heading in the wrong direction. Lisa, do you want to loosen up supply going into what could be a deceleration in demand?
That's the reason why I'm curious to see if they give any guidance about how much demand destruction they're already seeing. If they emphasize that, if they emphasize the slowdown, could that be basically an indication of just what you're saying? They don't want to release all of their supplies at a time of cooling growth.
We'll guide you through the headlines as they come through from the team here at Bloomberg as they monitor that OPEC Plus
we were
meeting.
supposed to be there, weren't we?
You thought we should be there. I'm not sure anyone else was on board with that.
I mean, we sold them. It's a 12-minute meeting. We got to be there.
You wanted to be in Frankfurt, then Vienna for 12 minutes. The 12 minutes thing drives me nuts.
I know, that's why I said it.
I know you did. I was sitting here laughing as you said it. 12 minutes to have a meeting. Come on.
We each get 4 minutes.
What are you discussing? What are you actually discussing?
The world.
Really?
Politics.
Really?
Oil.
No.
Done.
Up a third of 1% on the S&P from New York. This is Bloomberg.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, you know, we have a unique way that we look at big new investments. And I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs, you know, and the ultimate output for a company is share price, you know, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
stay. We will never.
The Fed had articulated a bit of a focus on growth. We know that they're not there yet.
The Fed is focusing on inflation. Inflation is still rising.
They want to create some slack in the economy without causing a recession.
The view here is that the Fed actually will remain aggressive in trying to curb inflation and as a result, increase recession risk.
I think they want to be really cautious about pivoting too soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
This hour comes with a warning. Tom has been singing repeatedly over the last 60 minutes. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures turn positive a third of 1% after a tidal wave of pushback from Fed speakers yesterday.
Oh, the Fed speakers are there today as well. And all of it, John, to me, frankly, is into what really matters, which is Jobs Day on Friday. The importance of this off the JOLT survey of a couple days ago is, I think, way more important than what Fed speakers are going to say.
And Tom, looking for something like 250,000, a step down from the pace of the last few months. Yeah. 250,000 is the estimate, the previous number, 372.
When I got in this morning at 552, I'm sorry, a little exaggeration there. John, I'd really emphasize that the jobs number is way above normal. We're miles from a normal non-farm payroll report.
Compare it with the job openings of yesterday, Bramo. Things are starting to happen in this labour market in a way that they weren't last year.
And we're hearing it anecdotally from companies as they report earnings. They're pulling back their hiring intentions. They're not expecting to be as ambitious in their expansions. And yes, you have seen resilience in some of these earnings, but Lori Calvasina's note, which you've been mentioning throughout the morning, John, really highlights, have companies really adapted to what is to come? And I point to Under Armour coming out, ratcheting back, cutting their full year forecast for this year and next year in the anticipation of that weakness.
We haven't ripped off the Band-Aid.
Yeah.
I think that was the line in her research this morning, Lisa.
How much is that the case? And then other people would push back and say, people are still spending. You're still seeing that resilience. Maersk came out and said that they see that the U.S. is really a beacon of strength because of people continuing to spend. It's the American way.
But this is really important, Lisa. I'm glad you bring this up. You can't conflate a cash flow monster like Maersk with all the challenges at Under Armour. There's a whole group of stocks out there that were troubled before this mess, and they're still troubled into it, and they're adapting. I mean, they're not all Peloton, I get that, but there's a group of stocks that can't be conflated in with the power players like Maersk.
Consumer discretionary, Tom. On that particular part of this market, those companies are going to have a difficult time if this economy plays out in the way so many people on this show anticipate it will.
Cut to the chase. Am I going to wear Lululemon or am I going to wear Under Armour? I mean, it's a no-brainer.
Lululemon have a great new line of sneakers for women, and I'd like to see them do it for men too. Because I like the look of them. They're very sleek.
I do too. They're out front. I mean,
I noticed that recently.
You know, I'm not going to give up the Jack Purcells, but hey.
Lisa's super excited for more style talk from you and I, Tom.
I'm picturing
Are we
you
all
both
three
in yoga pants and
in the gym,
wondering
or just doing yoga together.
Oh, we've
doing
seen
yoga.
that at the mats that the walk-up
meditation.
I live at. We've seen Pharaoh and me and Lululemon. Are all three of us together for Jobs Day?
We are, Tom.
Yeah,
I'll be there for
good.
payrolls. Lisa, I once went in the gym in our old building, and I enter and there's Tom working out. TK working out, putting in the effort. He's got a weights regime from his ice hockey days. Yes.
Was he wearing Lululemon pants?
Weights everywhere. Weights everywhere. As you can imagine, the bench just sort of like toppled over. Anyway, that's a story for another day. Futures right now at 0.4 of 1%
next hour.
on the S&P. On the Nasdaq at 0.4 of 1% as well. Yields climbing higher by 2 basis points on a 10-year, 276.83. Yesterday, the 2-year yield up more than 18 basis points. Crude this morning down about 0.9 of 1%. Lisa, 93. Let's call it 50.
We are not in Vienna, but if we were, we would be tracking that 12-minute OPEC Plus meeting. They are expected to increase output. And John, you were mentioning earlier how much they're going to give a nod to President Biden. That that meeting with Saudi Arabia was successful, that they got what they wanted, the U.S., from Saudi Arabia in terms of increased output. But my ultimate question is, how much can these oil producers increase production at a time where they're coming up, bumping up against their peaks? At 10 a.m., we get U.S. ISM Services Index for the month of July. How much do we see an ongoing softening in the service sector that's supposed to be rebounding? This was supposed to be the rotation from goods to services. We've seen the rotation away from goods, but even services is showing some signs of pulling back. And we saw that with certain travel stocks actually coming off some of their highs recently because there is a weakening in the underpinning data as people pull back on discretionary spending. And we are getting a lot of earnings, but we are also getting a whole host of Fed speak. We were going to be hearing from Patrick Harker, Mary Daly, Barkin, Kashkari, all of them coming out to talk about this. Does it make sense to see the 2-10s yield curve going down to the most inverted going back to the year 2000? Does it make sense that the market was basically pushing back against the idea of rate hikes to the extent that they were a couple of months ago, John, given that we are expecting still 8.8% next week on the CPI? Inflation may be coming down, but to what and how quickly?
And core's going to remain punchy, according to the estimates we've all seen so far. Elisa, thank you. That's your day ahead, the data, the meetings, and all of the above. Kristen Bidley joins us now from Citi Global Wealth Management. Kristen, I was going through the notes from you, and this just jumps out to all of us. We have shifted to our most cautious yet still fully invested portfolios since the first quarter of 2020. Kristen, what does that mean?
So what we've said, and we've said this for the past couple of months, is really looking at where we could go from here. And so there's 3 different scenarios that we could see for markets and for the economy: robust, resilient, or a recessionary scenario. Robust, really strong growth. I don't think anyone is really calling for that. We have right now about a 50-50 chance in terms of tipping over into a true recession, not a technical recession, or seeing that resilient, slowing growth environment. And what we want to do is prepare our portfolios for both. So the changes that we recently made in terms of investing in high quality equities, we've been there all along, really year to date and starting in Q3 of last year, upping our quality in our fixed income portfolios. And we also pulled back on some of our commodity positions, energy positions, due to the fact that we're seeing some of those inflationary pressures abate. And that was really more in our portfolios for a hedging purpose than any type of long haul.
Kristen, you're so good down the income statement. What did you learn about margin dynamics? I believe we've got 70% of earnings in right now. What have you learned about what we need to study down the income statement?
So what we need to look at really going into Q2, the end of Q2 earnings and Q3 earnings, I think when we look at this rally that we saw in July, I know a lot of people pointed to that there's a potential Fed pivot, some dovish comments. I don't think that was it at all. I think earnings showed some resiliency that was not anticipated.
But where was it on the income statement? I get the earnings were there and we chat up revenues as well. Was this about gross margin? Was it about EBITDA dynamics? Where operating income? Where was it on the income statement that you saw?
It was actually a top line revenue. And so I think when you look at the top line revenue growth that we saw, I think that was surprising because everyone was looking, I don't care what sector you're looking at, you are looking at consumer spending. Consumer spending is 65% of GDP, and we were trying to look for cracks in the consumer backdrop in Q2. We started with financials. We looked at the loan loss reserves, better than feared. Basically, everything came out better than feared when it came to the consumer. The only real cracks that we started to see were in the mass market retailers, right? Like Walmart, Best Buy. We saw some commentary there in terms of the shift in consumer spending pattern. And this is why when you look at our portfolio and how we're allocated, we want to prepare for those 2 different situations, resilient or recession, because from here, if consumers are shifting their spending patterns, if they're pulling away from services, if we're seeing some of that dynamic over the summer that really was just revenge spending and travel and getting a lot of that out of the system, and now they're preparing for a recession, along with companies preparing for a recession, that's going to start to flow through to earnings. And we're going to see some estimates revised down from here.
We hear the phrase data dependency all the time. What is your data dependency as you try to gauge whether there is a broadening out in that weakness of consumer spending that we saw anecdotally in the Walmarts and the Targets, but not that much elsewhere?
Yeah, so I think what we're going to have to look at is really some of the data around whether, so take inflation, right? And I think what people can agree upon right now, growth is slowing, core inflation is actually proving persistent, but headline inflation is slowing on energy prices. So I think this tightrope walk that we're going to have is really on the sense that some people, the more resilient bulls, are pointing to commodity prices coming over, gasoline prices coming down. But I think you still have the shelter costs, right? You still have that housing affordability has deteriorated substantially. And so that balance that the average consumer is really walking through. So I think you can see spending patterns in credit cards. You can see overall consumer patterns there. And then looking through in terms of the inflation dynamics that we're facing and whether some of that core inflation is stickier than expected.
Kristen, super cautious. It's great to catch up. Kristen Bidley there of Citi on the latest. Here's the latest out of Taiwan. Speaker Pelosi has left Taiwan. We confirmed that about an hour ago. She's heading to Seoul. We had a couple of people on the program yesterday who said it was Speaker Pelosi's visit might end up being Taiwan's problem. A couple of ministers speaking at the moment, Tom. Here's one. Taiwan's transport ministry said all flights in and out of Taiwan will use alternative routes. That's one headline. Here's another. This from the digital minister out of Taiwan, commenting on cyber attacks at a briefing. They've strengthened security for key infrastructure. Just some of the headlines, Tom, coming through at the moment.
Well, yeah, those are. I guess those are expected, and I think the geography of the South China Sea is what it is and immovable. But to me, it's just very sequential. And John, it's got to be centered, as I mentioned at the top of the show. I think I was here for that. Is the basic idea of how does he meet with President Biden? How does he play a meeting with Biden back with all the domestic challenges of China? I don't get it.
I can just about confirm that you were here for the top
Was
of
I
the
here?
show.
I was away.
Just about. I can confirm that. Just about.
Well, you know, there was celebratory last night over the Padres.
I can tell you've been having a good time.
Well,
I know. Lisa, to Tom's point, to put that meeting together, face-to-face, in person, gets a little bit harder after yesterday.
Although I wonder how much they knew that this would all happen, how much this was basically the conversation that they had last week, because as people started to talk about it, it started to have a more and more contentious tenor to it, given some of the communications, the most contentious in years between the U.S. and China.
We'll guide you through the latest headlines and the latest headlines from this as well. The Joint Ministerial Monitoring Committee over at OPEC Plus, that meeting has just started, according to delegates. We'll bring you the headlines as they come through on this day in Vienna with OPEC Plus meeting, and some people speculating whether we get an OPEC Plus output boost. It's OPEC Plus Wednesday, Tom. You excited? I know you are. It only lasts for 15 minutes.
12.
Futures up 0.5%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Nancy Pelosi has ended her trip to Taiwan after pledging the U.S. would not abandon it. The House Speaker reaffirmed American support for the democratically elected government in Taipei, despite more threats from China. Beijing has announced military drills to protest Pelosi's visit. China also announced limited trade sanctions on Taiwan. The Federal Reserve is pushing back against the idea that policymakers may pivot away from tightening. 4 Fed district bank presidents highlighted in remarks on Tuesday that there's no sign that inflation is easing, and that helped trigger what was a surge in Treasury yields. And voters in Kansas have refused to change the state's constitution to declare there's no right to an abortion. It was the first referendum on abortion since the Supreme Court said each state can set its own policy, and voter turnout was high. 4 other states will hold similar votes in November. Over in the UK, Liz Truss extended her poll lead over Rishi Sunak, suggesting she's on track to succeed Boris Johnson as Prime Minister. The YouGov poll of Conservative Party members showed the Foreign Secretary with a 34-point lead. It's a timely boost for the Truss campaign. Earlier Tuesday, Truss had to make an embarrassing U-turn on a plan to align civil service pay to the regional cost of living. And CVS beat expectations for second quarter profit. The drugstore chain also raised its outlook for the full year. CVS saw growth across its pharmacy, retail, and insurance divisions. That was helped by sales of over-the-counter COVID tests. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
most fascinating entrepreneurs, because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
When big tech reports earnings,
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they're not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
From New York City.
In London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This week, will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labour market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
The United States will not seek and does not want a crisis. We are prepared to manage what Beijing chooses to do. At the same time, we will not engage in saber rattling. We will continue to operate in the seas and the skies of the Western Pacific as we have done for decades.
John Kirby there, the spokesperson for the U.S. National Security Council, following Speaker Pelosi's visit to Taiwan. With Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Futures are positive. Another lift here, up 0.5% on the S&P, on the Nasdaq, up 0.5%. Also, yields creeping higher by 2 basis points on a 10-year, 276.65 on a euro. Stronger euro, euro-dollar 101.91. And a look out below crude, down about 0.4%, $94 on WTI. That OPEC Plus meeting, Tom, over in Vienna, starting in about 11 minutes' time.
I know, and it'll be 12 minutes long.
And ending 12 minutes later.
Each of us gets 4 minutes coverage. And
Tom, I mean, I joke about it, but whenever we speak to them, I find it infuriating, given what's going on in the global economy at the moment. The energy crisis that so many parts of the world is facing, and the cartel gets together and has a discussion that lasts 15 minutes.
You know, they have the same PR people as I have, you know.
I think it's ridiculous, Tom.
There's what it is, and we'll continue to monitor that seriously. And again, Javier Blas and our hydrocarbons team just doing a great job covering these dynamics. Right now, Emery Horton joins us our Bloomberg Washington correspondent. Anne-Marie, Speaker Pelosi, after Seoul, after Tokyo, will fly back and perhaps we'll have to do an end around and fly around the state of Kansas. Extraordinary election results last night. And what it's about is what put Biden in the office, which is turnout. All of a sudden, there'll be lots of stories on turnout. Let's get out front. Anne-Marie Horton, brief us on how important turnout is for both parties.
Well, it was huge last night for Kansas. I mean, you look across the primary map, and it wasn't any individual candidate that stole the show. It was this referendum in Kansas about whether or not there should be amendment to the Constitution, which would give the lawmakers in that state the ability to either restrict or ban abortion. And overwhelmingly, individuals in Kansas came out and said no. And this is a state that the former President Trump led by 15 points. So now, as you say, Tom, there's going to be a lot of stories, going to be a lot of momentum for the Democrats to say abortion is a live issue for the midterm elections and even the 2024 presidential election.
But will people turn out for someone as ancient as Biden and Trump? How does turnout play into the gamesmanship to 2024?
Well, I think if you look at it based on issues, these individuals came out like it was a November election to vote on a specific issue. If the Democrats or Republicans are able to harness an issue and attach that to a candidate, potentially. But what you're talking about here is, do these two individuals, can they get the fanfare of people to come out and be excited to vote for them? And a lot of the reporting is that from both parties, they want to see a shakeup. They want to see a younger generation.
Anne-Marie, harnessing an issue, and one of them has been gasoline prices in addition to the abortion issue, very much bringing people to the polls. We are going to be hearing, after what we assume will be a very short meeting for OPEC Plus, what their decision will be about output. What does this president want to see after making that visit, making those outreaches to the kingdom, and now expecting something in return?
So the president said when he was in Jeddah that the Saudis shared his urgency and that he expects more oil to come on the market in the coming weeks. This is that coming week. This is the OPEC meeting, August 3rd. And while really everyone is expecting the status quo to maintain, if you look at the Bloomberg survey, some potentially are saying a modest increase. The White House would view a modest increase, I imagine, as a win, because when you look at the global oil supplies, there's not much spare capacity left. So even if the Saudis are able to pump a little bit more, this would be a win for the White House. They would just need to explain the dynamics to the American people, that they don't have potentially a whole lot to give, and you don't want them going to max capacity because that can blow back. So that's going to be the issue they need to play in terms of the messaging. I would say if there's nothing out of this meeting, potentially that would be harnessed by the Republicans as saying that was a failed meeting of the president going to the kingdom. But we should know, we've already seen Riyadh over the past 2 months incrementally start to increase production. So there already has been some goodwill outreach from this meeting for the president.
And where you covered OPEC for years, why are the meetings so short?
Well, that's a great question, because I've been to meetings where they've extended into literally days and weekends. I've been stuck in Vienna covering them. Yeah, you milked that. Yeah, the expenses were pretty good, too. Listen, what I would say is this meeting is no one is reaching their quotas, right? You have a number of countries central to OPEC not being able to hit their targets. So you pretty much come in, know where everyone stands. There's no major issues at play that are huge debates, besides, of course, whether or not Saudi Arabia or the UAE is going to pump more. A lot of this is agreed upon behind the scenes, and a lot of it is agreed upon at the highest levels of the kingdom and also Russia. Russia is going to be a difficult one for the Saudis to thread. They need to make sure they keep Russia on board of this alliance. Russia does not want lower prices. They're already selling their crude at discounts. They need to keep the price as high as possible for maximum profit.
Hey, mate, you can't talk about the expenses live on air. It's just not the way forward. Anne-Marie, thank you. You sound like Tom. I mean, Tom can say things that I just can't say. Calling the former president, the current president, ancient. Can you imagine what would happen, Lisa, if I said that?
Why are you asking me to weigh in on this? Go ahead, Tom.
They're going to be 80, Tom, please.
No, I think this is a valid issue, and it's featured. Greg Valliere mentions it.
I agree.
And Mike Allen of
Thomas,
Axios
what people are
has
thinking.
it this morning.
Thomas,
it's
what people
are talking about.
Couldn't agree more. This is what Javier Blas is saying. Do you know what, Tom? I love Javier Blas Unleashed on Bloomberg Opinion, This is what he says out on Twitter right now. At the current rate, I fear that President Joe Biden consumed more jet fuel traveling on Air Force One to Jeddah than any extra oil barrels OPEC Plus may agree to provide the market in September, Tom. The OPEC Plus meeting starts in about 5 minutes' time.
This is not the topic at hand. What matters is somebody out there, I'm sorry, folks, I don't have it in front of me, is going after Taylor Swift, who's living the summer on a private jet.
I saw that.
I mean...
Biggest polluter on private jets.
This is like
all the big celebs.
They call it, in Sweden, they call it like jet guild or something. They got a phrase.
She says she lends it out to friends, though. I mean, this is a, Taylorgate.
So the friends don't fly commercial either. They fly the private jet.
It's a real consideration.
We keep very careful track of this with the surveillance Gulfstream. I mean, we're really trying to be responsible. Francine's on my case nonstop.
Are these like 20-minute flights? Are they those really short flights where it's sort of up and down?
No, but, I mean, Teterborough's Teterboro.
You're asking him because he's got Flight Tracker on one side.
I think if you're a high-profile individual with a security entourage that is going to disrupt my commercial flight, go away.
My carbon
If you're lending the jet to planes... If you lended the jet to friends, I mean, come on, what's the point?
I mean, the problem is we got the surveillance Gulfstream, and at least his carbon footprint is Birkenstocks.
Bramo, it's all Bramo.
Yeah.
It's all Lisa's fault. It always is.
Always.
Futures, upper half of 1%. Do what you like for your friends, okay?
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, today on Bloomberg. Brought to you by Workday. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Equities doing okay here, up 0.5% on the S&P this morning. Good morning. On the Nasdaq, up about 0.6%. The outperformance on a Russell of small caps up 0.8%. And a long list of people just lining up to tell us that we might not have seen the lows because ultimately we haven't seen the cuts to estimates. Recession on the story on the horizon, Tom, and yet everyone's saying that earnings haven't been cut enough. It's Citi. Just moments ago, Kristen Bidley, 30 minutes ago. It's Bank of America, it's RBC, all saying the same thing.
We're going to get to this with Mike Schumacher in a moment with a real global view from Wells Fargo. But, John, I'm sorry. What we're missing in America with our American focus is Europe is a mess, and critically on a marginal basis is messier than a week ago, a month ago, a quarter ago.
It's the problem that Europe could get messier, Tom, on the energy front. And that dispute between Russia about what's going to happen with that gas turbine. To see Chancellor Scholz, Tom, out on Twitter, effectively saying, the turbine's ready to go. I've seen it at Siemens. The Russians just aren't asking for it.
Well, you know, and Javier talking about France, I mean, it's there. And part of it's the calendar. Guess what? It's August. August is closer to November than July was.
Getting closer and closer to the end of the year when it starts to get colder and colder. In the bond market, Lisa, very frustrated with all of this. Like a cold spring, we talked about the two-year yield coming all the way into the Fed speak. Every single guest on this show said the same thing, that they're going to have to push back, yields are going to pop, and guess what they did? This market was surprised. 18 basis points higher on a two-year yesterday. This morning, up another 3 to 3.1%, let's call it. Much more Fed speak through today. Look out for that. The spread between 2s and 10s inverted. You know that story. Inverted so much that we're back to levels we haven't seen since the early 2000s. That's your bond market. Here's the commodity price story. Going into the OPEC Plus meeting, which starts, I believe,
it's already ended.
And finished, perhaps, already too. Crude, Tom, WTI and Brent crude 100, WTI back to 94. Someone messaged me moments ago, Tom, and said that maybe Phil Mickelson could get the Saudis to pump more crude. That's a golf joke for people that appreciate
a
golf joke.
It's a golf joke.
And Phil's relationship with the Saud. Anyway, whatever. That's the cross-asset price action. Bramo got it.
She'll save us.
Let's get to Lisa for more. Hey, Lisa.
Let's look at some of the earnings that we've gotten because they're actually really interesting, and they show a very differentiated backdrop depending on which company you look at. CVS Health came out this morning with earnings that beat estimates because of COVID-19 tests. They were actually seeing increased revenues because they're selling so many tests to get acceptance into various places as we've all become to live with. Those shares up 3.6%. Starbucks reported earnings after the bell yesterday that beat expectations. People are buying more, at least on the overall amount. Part of this is the fact that they've increased prices by 5% over the year. Those shares are up about 1.8%. Airbnb, this is a fascinating story. Missed expectations. Their forecast isn't that optimistic. Is this a story about weakening demand by consumers for travel, or is this a story about the world righting itself, going from a pandemic era where people could travel anywhere and stay there forever to now they actually have to come home? And how much is that really the reality? In other earnings news, PayPal very much front focus, Elliott Management taking a stake. It's all about cost cutting. Those shares up even further, Tom, as they are looking for some sort of way to right size a company that had expanded in the eyes of some too quickly.
I missed this story. This was a good news story for PayPal, right?
Yeah, basically you have the activists taking a stake, asking for some cuts, and the market is cheering them. They're also oddly cheering Under Armour after that company came out with weaker than expected earnings, saying that they are seeing some resilience in the U.S., but in China there definitely is weakness. How much that's going to continue. And Yum Brands. Tom, I know that you have a very close feeling toward Yum Brands. This is, of course, the parent company to the likes of KFC and Pizza Hut, which didn't do so well. Taco Bell, though, did very well. Those shares, Bell Talk, those shares up 0.5% as they look toward people buying more burritos.
Lisa, driving the conversation forward, Kristen from 601 Lexington Avenue emails in and says, loves the Bob Seger. And I was going back and forth with her about when you were in Kathmandu, you were singing, you know, you were doing Bob. I think I'm going to
We're not doing this.
I think it's really where I'm going to.
Tom, I don't know where you thought that I was traveling, but people were coming up to me saying, how was Kathmandu? How were the Himalayan mountains? Did you really get oxygen?
Well, it was a good view.
Thank you, Tom.
Kristen Bitterly, thank you so much for driving the conversation forward this morning. Right now, helping us out, Michael Schumacher with us, Global Head of Macro Strategy at Wells Fargo. And Mike, I'm going to go all John Farrow on you here because buried in your note is something to watch for August, and that is Italian-German spreads. Your team says this is something, a thermometer, if you will, on Europe that could redound back to the Fed in the United States.
Yeah, Tom, we see that spread going out a fair bit. I know the ECB is watching this like a hawk. It's introduced a new program to try and combat it. But let's say 10-year Italy goes out to 300 basis points over Germany. Does it signal a crisis? No, but it signals a lack of confidence. And I think that's something markets will focus on pretty intently.
John,
so
I think this
one
is
more barometer.
John, absolutely critical. I mean, you're on it all the time, but right now, all of a sudden, it matters.
Just quickly, Tom, just getting a headline around OPEC Plus that they're proposing a 100,000 barrel a day output hike for September, and TK, that's basically nothing.
Yeah,
that's a drop in the ocean.
Yeah, Brent 100 to 101, boom.
Yeah, crude too. Lisa, turning around, WTI up 0.75% off the back of these headlines.
This is basically just an olive branch to this administration saying, we heard you, we're taking some action, but it has no mental bearings on a market that otherwise is constrained by macro events.
An olive branch or a backhand slap? I mean, Lisa, I think they wanted more.
Maybe so, but what kind of Anne-Marie's point, they don't have the capacity to. So at what point do you have to pay lip service to a president who's looking for a political win? It's unclear even how much that would really even affect gas prices, considering that it's a refinery issue more than just a crude one.
We joke about how much this OPEC Plus meeting might go on for. It could be over in about 5 minutes' time, so I'll bring you the headlines when it concludes in just a moment. Mike Schumacher of Wells Fargo is still with us. Mike, forgive me for that. Just wanted to bring our audience the news. I want to get back to this Fed speak that we're going to hear through the week, through today, into next week, into CPI next Wednesday on August 10th. Mike, you came out up front at the start of this year, and I remember when you said it, I just thought, wow, Mike, that's nuts. 150 on a 2-year, what a call. And we got there so quickly and more, back to 3%, Mike. How much work do you think this Fed still needs to do to get inflation down from 9 back towards 2?
It's amazing even to say it, John. Inflation at 9%, core, headline, CPI, PC, whatever. It's all some huge number. The Fed's got a lot of work yet to do. I mean, we think inflation is going to be running still at 4+ in core at the end of this year. So let's say the fourth quarter. And probably pushing 2.5 to 3 end of next year. So a lot of work yet to be done. 2-year yield's very vulnerable. We think it goes up substantially from here. So, and I think the Fed's been trying to reset and say, hey guys, we didn't really pivot. You may have thought that, but we didn't do it. So let's get back to basics.
Does Jay Powell, Mike, have a communication problem, considering this is not the first time that he sent a message that was very different from what other committee members wanted to hear, at least wanted the market to hear?
Yeah, Lisa, I think for Jay Powell, being hawkish is kind of like taking cough syrup when you've got a cold. Your parents say you got to do it, it's good for you, but you don't really want to do it. So he has that sort of unpleasant grin and says, okay, I'll go out there and talk about it, but my heart's not really in it.
So how much is it really important for this market to see him do more than just take his cough medicine and actually buy into a message that the Fed has to raise rates significantly before they believe the story that right now they're basically rejecting? I mean, honestly, I am frustrated. John said, everyone came out and said the Fed's going to be unhappy. The Fed hates to see this rally. They're going to push back. The markets are oblivious. The Fed officials push back. The markets throw up their hands. Oh, my goodness, look at that. I mean, honestly, how much do you have to see before the market believes the hawkish tilt that the Fed is basically saying?
I think what the market needs to see is more and more tightening, not 75 after 75 after 75, but a steady stream of 50s would probably do it. Chair Powell said at the last meeting, hey, look, we're going meeting by meeting. We're going to back away from guidance. Well, the Fed's offering guidance right now. It's going to give us more today. I think the market needs to see those actual rate hikes. So go another 50 or maybe 75 in September, set the stage for more at the end of this year. And I think, oh, by the way, if the Fed were to indicate, hey, we're not going to be done tightening this year, it's going to extend for at least a while into 23, that would catch a lot of people off guard. There's this view that tightening will end in December and then boom, by March, potentially it's easing mode. That seems incredibly unrealistic.
Mike, just quickly, are you over at Hudson Yards now?
I am, that's right, John. Great place, come on down.
Amazing, I'll come and see you soon. Tom, the reason I say this,
Please
Wells
do.
are over there now, others are joining them. Who's downtown anymore, apart from Goldman? TK.
That's a big issue.
Deutsche
Yeah,
Bank
no,
taking
it's a
over the
big
Time
issue.
Warner Center.
No, it is.
I can't think of many banks that are still downtown.
It's like anything else, and to Stephen Ross, and I know he's in the news right now on other matters, but John, in the building of these things, they sort of they're there, and then they get a critical mass, boom. And I wonder if this is a year coming out of the pandemic where Hudson Yards gets a critical mass.
They hope. Mike Schumacher over at Wells Fargo. Mike, awesome to catch up. Lisa, Midtown West is stacked. You've got JP on Park, and I can't think of many names left downtown at all, with the exception of Goldman.
Yeah, I was actually just doing some research, and I can't find a lot of them. I wonder also, part of this is how many people actually go to the floor of the New York Stock Exchange anymore.
Oh,
how much is that not the center anymore?
I've heard it's a TV studio now. That's what I'm told.
I'll get in trouble.
Really?
I might get in trouble for that. It's a joke. It's just a joke. It's a joke, okay? It's just a joke. Anyway, let me get back to OPEC Plus, because the team over at Bloomberg on the commodities side is absolutely fantastic. Julian Lee said this,
What's
Tom.
he say?
If they deliver a 100,000 barrel a day increase, shared pro rata among the OPEC Plus members, it would raise Saudi Arabia's target by 26,000 barrels a day. That's not even enough to fill one Suezmax tanker a month. That from Julian Lee. I think that's such a great way of breaking this down, Tom.
It is. I mean, you get, and what's great about that, it gets down to the process involved. It's not financial intangibles. This is all tangible assets, like a lot of other things we're worried about, including food.
It's a nice TV studio. Anyway, just for anyone still wondering.
Oh, you're killing me.
It's a bit of theatre.
Theatre.
Futures up 4/10 on the S&P.
I'm glad you mentioned
on the
theatre,
NASDAQ
John.
100, up at 30.
People emailing in like crazy.
Sure
Bob
they are.
Seger, November
What's-
of 1975.
Okay.
Coventry Theatre.
Nice.
I believe some of the Pharaoh clan was there. Big tour on the way down to 5 nights in London.
Coventry. Plus, remember, half the family were down in Sicily in the mines, Tom.
Well, not
Back in the
1975. Come on,
Got to
John.
go a few more decades before that, I imagine, Tom. Sure. Futures are higher, Tom. It's a great day for it.
It is a great day.
An OPEC Plus meeting wrapping up sometime soon. There we go. It's just beautiful. It's beautiful. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Nancy Pelosi's reaffirmed the U.S. commitment to Taiwan. The House Speaker ended her visit there today after pledging the U.S. would not abandon its commitment to the democratically elected government. China reacted to Pelosi's trip by announcing a series of military exercises. Beijing also imposed trade sanctions on Taiwan. OPEC Plus delegates say the coalition has proposed an oil increase production at today's virtual meeting. It would be a small hike, 100,000 barrels a day for September. This comes after President Biden took a political gamble with his visit to Saudi Arabia and asked for more oil to be pumped. In Turkey, inflation was almost 80% in July, and it may be months away from peaking. Turkey's central bank is sticking with its ultra-loose monetary course. The rise in consumer prices has already forced economists to rewrite forecasts multiple times this year. And France is likely to curb nuclear power generation. The utility EDF says high river temperatures restrict its ability to cool power plants. The reductions threaten to further push up power prices, which are close to record levels in both France and Germany. Under Armour has cut its profit forecast for the year. The athletic wear maker is being hurt by higher freight and production costs and by foreign currency fluctuations. Investors are also concerned about the outlook for Asia. Meanwhile, the Under Armour CEO they're searching for a CEO to replace Patrick Frisk, who quit abruptly in May. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Strong enough to stay. We will never.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
We don't talk about recession per se. It's, are we growing below or above trend? And, you know, my forecast for this year is that we'll be growing below trend, but that's necessary in order to get price increases, inflation under control.
That was Loretta Mester of the Cleveland Fed, just a chorus of Fed speakers yesterday. She was speaking with the Washington Post and pushing back against these dovish expectations after Chairman Powell's news conference last week. Was it a communication failure or was it a communication interpretation?
I think that's an important question.
Failure. One or the other, Tom. One or the other, but you shouldn't get two-year yields moving the way they have done in the last couple of days.
Or the five-year yield. I mean, it's extraordinary.
Couldn't agree more. Futures right now at 4/10 on the S&P, on the Nasdaq up about 4/10 as well. Yields creeping a little bit higher, up 3 or 4 basis points to 278.29 on a 10-year. Crude reverses losses, now gaining by 8 or 9/10% to 95.23. And that meeting has just started, according to a delegate. The OPEC Plus ministerial meeting has just started. So, Tom, set the stopwatch. 7:47 Eastern Time is when it started.
Maybe it'll last as long as Kriti Gupta's chart that she's going to show us right now on bond volatility. Extend it out, Kriti. What do you got?
Well, of course, you were talking about the 2-year yield and the 5-year yield. Well, I decided to look at bond volatility via the MOVE index because yesterday's move in the 10-year yield, I should say, was the second largest move since we saw that COVID crash of March 2020. In fact, it only rivaled what you saw on June 13th when the bond market was pre-pricing in 75 basis points ahead of the June FOMC decision, of course, following the reporting coming out of the Wall Street Journal. So once again, that repricing is really crucial. And that's what you're seeing in this particular index. For our radio audience, this measures bond volatility, like I said, which, by the way, has been on an uptrend since about mid-2020 and is now very close to levels that you saw once again back to March 2020. Cameron Kreis over on the Markets Live blog made a very key point. There is still a significant gap between what the market is pricing for the end of next year and the Fed's projections. And when you have that kind of gap, it means that these swings are going to be more and more common because it means repricing is going to happen on the daily.
Pretty Gupta, thank you so much. Greatly appreciate that. With a fixed income brief, we've ignored fixed income with the equity markets that we have, and so we need a brief. Now, Ira Jersey, Bloomberg Intelligence, U.S. rate strategist, joins us. Ira, when I see the 5-year do what it did yesterday, at the minimum, I know that's unusual. Let's start with a why. Why are we seeing these gyrations?
Yeah, I think there's two big things. And number one is either a misinterpretation of the Federal Reserve, or like you mentioned, the communication from Powell was reversed basically yesterday, with all of the plethora of Fed speakers basically all saying we're going to be more hawkish than the market thinks right now. That's number one. And then into that, you have not only summer liquidity, but poor liquidity overall. This year, liquidity in the Treasury market has just been very, very poor, basically since the Federal Reserve stepped back from its bond buying purchases. And it doesn't seem like liquidity is going to increase anytime soon.
Let me take an audible. Is China stepping back? And, particularly with what we see in the tensions of the recent week, can they step back and adjust our fixed income space?
Well, it's really unlikely. So most central banks, and China would be included in this, when central banks own Treasury securities, they usually own shorter-term securities. So call it 3-year notes, 2-year notes. So maybe a little bit of some of the front-end moves might come from central banks either not buying or outright selling, although I doubt that they're outright selling. They just let their portfolio run off instead of outright selling securities. And China and Japan have not been net buyers of Treasuries for the better part of 7 years now. So it's not like they've been increasing the amount of Treasuries that they own. And the market's gotten so much bigger that they're not as big of a player as they used to be. So it's really, our foreign private investors tend to be much more risk takers. And so the question there is, are they stepping back in an environment where yields in their home jurisdictions like Germany are actually positive now, where they had been negative for several years?
Ira, you're talking about the poor liquidity and the price swings that we have seen that are historic in terms of their scope. I believe that the rally that we saw in the 10-year Treasury, or the sell-off, I should say, in the 10-year Treasury was the biggest, was the fourth biggest in the past 5 years. What does that say in terms of the risk being baked into markets? What's the potential consequence from the deepest, most liquid market not being very deep and not being very liquid?
Well, it still is very deep and liquid, but it's relative to the size, right? So things like the plumbing, so the things like the repurchase agreement market, which is the way that you fund your Treasury positions if you're a levered investor, that hasn't grown, and the market is significantly larger. So you go back to 2007, the repurchase agreement market is basically the same size as it was back then, but the Treasury market is 5 times larger. So you can see how the plumbing is going to be affected by regulations, by just the fact that you have dealers that aren't willing to take as much risk as they used to be because of both regulations and also their own risk management processes after the global financial crisis. So all of these things have contributed to a much basically liquidity being very good, and then all of a sudden it's not. I call it very fickle liquidity, and I've been writing about this for 9 years now, it's not surprising that we have days like yesterday where liquidity is fine on Monday, and then on Tuesday suddenly poof, there is no more liquidity. And I think that's the risk in the Treasury market right now, is that you're going to see these air pockets where liquidity just completely dries up because everyone's one way and positioning can't shift so quickly, and I think it's just going to happen more and more, Lisa, and it's going to be a fact of life going forward.
It's happened tons over the last year, that's for sure. Ira, thank you. Ira Jersey there of Bloomberg Intelligence. We've got to pick up on the story out of Vienna. That OPEC Plus meeting started about 7 minutes ago. And what they're considering, we understand, is just a 100,000 barrels a day increase. The team here at Bloomberg, Tom, they're putting together a fantastic live blog on the Bloomberg terminal. Just give people a flavour of it. They're calling it a negligible increase to output, Tom, just 100K. Also highlighting, this is Grant Smith highlighting this, that the Saudi Energy Minister, Prince Abdulaziz, is fond of springing last-minute surprises on the market. So this 100K hasn't been approved. It's not been done, Tom, but that's the direction of travel, at least right now. And crude's turned around. We're up 1% on WTI at 95.
Well, yeah, but it's a different kind of 1% at a 101.39 on Brent crude. And, you know, again, the gap between the two is narrowed here. You just wonder how many people are really looking at 110, 120 again? And I'd say that's a pretty lonely crowd, John.
I love what the team is saying right now. If an increase of just 100,000 barrels a day is approved, it would be the smallest increase in OPEC history. Lisa, it couldn't get smaller without being a cut.
Yeah, and this is Grant Smith, and he goes on to say, President Biden said he was confident of further steps from the Saudis, but this is more like the moving walkway you get in an airport. How much is this basically a courtesy, a nod that won't be received well versus what they can do? In other words, how much is it capacity constrained versus we don't really need to raise output, but here you go.
Well, there's the headline. According to a delegate, OPEC Plus agrees on a 100,000 barrel a day supply hike for September, Tom. That headline just coming through.
Well, it's there, and you wonder what it's going to do to commodities in general as they've had the setback here. I wouldn't look for metals to move, but on the hydrocarbons, you got to say it's been a lift, and all of a sudden blinking hard in its
You wonder, Tom, how Washington responds to this one. We'll pick up on this story in just a moment with Tom Keene, Lisa Bravitt and Jonathan Ferro. Futures up, crude up too. From New York, this is Bloomberg.
Companies need to think about how they normalize Blackness and they normalize the Black aesthetic and what it really means to be inclusive. And that means to recognize and appreciate and respect and celebrate all aspects of culture and different cultures. And so it's critically important that we recognize that this is an issue, just as my sisters have said, you know, and make sure that we recognize how that issue shows up in the workplace and how we can be advocates and allies in action to ensure that no person, no Black person in this country feels marginalized or disrespected or diminished in any way because of their hair or their race.
So the challenge is not everyone understands that race-based hair discrimination is a reality. And so we find ourselves constantly educating people, including lawmakers, to ensure that they understand that hair discrimination is racial discrimination. And so we are working collaboratively, the four of us championing this work together, along with the Crown Coalition, to ensure that race-based hair discrimination is outlawed nationwide.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts, great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The conditions are changing where U.S. data is deteriorating.
I don't think this is a high conviction rally. If anything, I think this is much more a bear market rally.
Market pricing rate cuts by the Fed the next year make absolutely no sense.
There's probably going to be a fairly narrow window between the final rate hike, whenever that is, and the first rate cut.
I think ultimately it has to be a hard landing. The runway is just too short.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. Welcome to the Gloom Hour. John, what a set of gloom there at the opening of the program. The caution out there, it's seriously, it's an extraordinary caution we're hearing guest to guest.
Tom, there's a worry that we're going into recession. There is a worry that we have to cut estimates more than we have for earnings. And for that reason, you're seeing the likes of Bank of America, RBC question as to whether the June low was the ultimate low for this sell-off.
Well, it may be the ultimate low, and, you know, equities are up this morning as well, but it is about Fed speak. We had 14 speakers yesterday, 12 speakers today, and on we go. What are they speaking about? What's there to say about September 1? We don't know.
We've got more work to do, seems to be the bottom line. We've got more work to do. We heard that from Fed President Mary Daly of San Francisco yesterday. Apparently some people didn't, Tom, because it unlocked a big move in the front end of the curve. Yields up 18 basis points. Right now, we're super focused on the OPEC speak, Tom. That OPEC meeting starting about 15 minutes ago.
I'll take
we
your
understand,
point.
According to a delegate, they're going to boost output by just 100,000 barrels a day. Tom, that's going to go down like a lead balloon in Washington, D.C.
We've got our experts on it, and again, Grant Smith and company watching every move of the extended OPEC meeting. We watch Brent crude, John. I want to get to Lisa, but John, Brent crude just breaching out 101.70.
We've gone from losses to gains, Tom, in the commodity market.
Well, there we see the commodity market. Well, Lisa, here quickly as well. With the bond volatility we're talking about, what have we seen in IG and high yield? Are they enjoying the full faith and credit volatility of the last couple of days?
Well, one thing that's fascinating is that companies have enjoyed the rally, and they've been selling bonds at the fastest pace that anyone could have expected. That investment-grade bonds, investment-grade companies have already sold all of the bonds that people were expecting for the entire month of August in just 2 days. How much is this taking a window of opportunity that is going to evaporate, or that's how people feel, based on how this pushback from Fed officials is trying to get bond yields higher, saying, we have more work to do. We are nowhere near, in Mary Daly's words, getting closer to where we need to be to fight inflation.
On this theme, Sam Stovall is scheduled to join us here in a moment. John, I want to get back to the general gloom that's out there, and it's a caution into a jobs report. Do we presume that the jobs report will be dampening, will be negative?
We're looking for a robust read on the headline, a number of 250K. There's a question, though, as we go deeper into this year, will we see the weakness elsewhere spill into the labour market at a time where the consumer has really struggled with high prices? Energy's come down a little bit over the last few months, Tom. That's good. We've seen gasoline prices decline, I think, every single day since the middle of June. That's good. We need more help than that, though. And right now, Tom, we're not going to get from OPEC confirmation from OPEC Plus that they've agreed on a very small increase in September oil production. They've agreed to just 100,000 barrels a day. This after a meeting between the President of the United States and the Crown Prince of Saudi Arabia, Mohammed bin Salman. And the administration was hoping, Tom, that we'd see some signs of this OPEC Plus cartel doing more. And right now, I don't think that's a sign at all, Tom. I don't think that's a good sign.
On the data, $3 up, 99.00, and we're going to print 102 here in about a cup of coffee. What do you got, John?
Futures shaping up as follows, up 0.5% on the S&P. On the Nasdaq, we're higher higher by about 0.5% also. Yields coming higher by 3 or 4 basis points again. So yields bleeding high yesterday. Again today, Lisa went through the Fed speak. You've got tons more of it today. You've got the ISM services data point coming up a little bit later at 10 Eastern. Look out for that too. The PMI from S&P Global a couple of weeks back, sub 50. Let's see if we get any confirmation whatsoever from the ISM a little bit later. But Tom, front and center for me is just crude, 95.85 at 1.5%. I'm very, very intrigued to see what the communication from this White House sounds like this morning after going to the Middle East, sitting down with the Crown Prince, being heavily criticized for doing so, and they follow it up with just a 100,000 barrel a day supply hike for September.
And it's not a 120 question, John. It's about getting out to 105 or 110, and we've moved there rapidly.
From the perspective of the Middle East, Tom, and this cartel and OPEC Plus, and that extends to Russia too, if you're setting supply right now, you're asking yourself what the demand picture is going to look like into the year end, into next year, especially with the deceleration out of China, the problems you see in Europe, and ultimately the deceleration here in the United States too. 1. 2, Tom, we still don't really know how much spare capacity these countries actually have. And that's something we keep digging down on every time we catch up with an oil guest. How much spare capacity is there? Because they're struggling to meet the current quotas.
Nobody knows. No, I don't think anybody knows. Ellen Wald was brilliant there this morning. I know Netherlands, TTF, the natural gas over there, really breaching out to new highs going back to the beginning of the war in Ukraine. Right now in the equity market, Sam Stovall joins us. And Sam, I want to look to a headline from Facebook out a bit ago. Meta saying they're going to issue a bond. This gets down to Stovall 101, Sam. Is a dividend increase the same as increasing share buybacks?
Well, I think that not really. It depends on who the investor is. If you're an income-oriented investor, you want the dividend because then you can spend that. Whereas the share buyback, certainly that could help support or even propel the price later on. But you can't really spend the price unless you bring down your principal. So depending on whom you ask, I would say young people like you and me would probably like the dividend.
Sam, what should I do with my energy winners of 2022? They've been hammered over the last month or so. What should I do with them now?
Good question, Jonathan. I would say hold on to them for a couple of reasons. One, I just mentioned dividends, and their dividends are very strong. But if you also look at relative PEs, right now, the S&P 500 energy sector is trading at a 60% discount to their 20-plus year average versus the S&P 500. So this is a group that's going to continue to do fairly well in terms of earnings, in our opinion, going to continue to pay a nice dividend yield. Obviously, from a trading perspective, we've come off of a very, very high level, but I think that the potential for growth is still there.
What's the backdrop for that call, Sam? Is it the expectation that demand hangs in there, the economy doesn't cool as much as expected, or is this an issue of capacity and production, a lack of supply that is going to be met with demand that's enough to keep prices elevated?
Well, I hate to be wishy-washy and say both, but I'll be wishy-washy and say both. Reason being that when you look to the demand aspect, I mean, the market itself possibly going through a bear market rally, possibly starting a very real new bull market rally, because expectations are that maybe this recession won't be as deep as many are currently predicting. And I think if we break above that 4,200 level on the S&P and stay above there for a little while, then that would be a confirmation from a technical perspective that we are headed for much more than simply a bear market rally. So we could end up seeing increase in demand. In terms of supply, sure, I think there has continued to be challenges from supply disruptions. And so when the demand does not fall as much as expected and supply continues to remain challenged, I think that does offer some support.
I don't want to be overly simplistic about this, Sam, but I was looking at the reaction of the bond market as we saw oil prices go higher on the backs of this smaller than expected rate increase or output increase from OPEC Plus. How much are we trading around inflation driven by commodities? In other words, how confident are you that you could see a revival in the economic momentum at the same time that prices for oil stay elevated, leading your energy bets to be valuable and outperformers?
Well, it depends on how you define elevated, because expectations are that we're going to average around $96 for the remainder of this year. And so the feeling is that's certainly a lot better than what we had been experiencing earlier. Also, when you're looking at the materials group, the other commodities category that is seeing a sharp decline in terms of share price, that does anticipate a softening in demand for particular areas as well as the price of them. So I would tend to say that because we are anticipating that we're going to be seeing a gradual decline in year-on-year percent change in CPI, averaging 7.2% by the fourth quarter of this year, and then continuing to decline into 2023, I think that people are going to start to feel a little bit better about that, and that would end up bringing people out. I was at the restaurant the other week, and I had a very hard time trying to find parking. So anecdotally, I'm having a hard time finding a recession.
Sam Stovall, thank you, sir, of CFRA on the latest in this economy. Got to talk about the latest in this commodity market. The intraday chart of crude captures this story perfectly. All of a sudden, we're only considering a 100,000 barrel a day increase to output for September and POP. We go from negative to positive just like that, up by a little more than 1%. It's not a major move, but it's not a major move from OPEC Plus either. And that's the story this morning. 100,000 barrels a day is the smallest output increase from OPEC, Tom, and OPEC Plus in its history.
I want to fold that, John, into what Sam Stovall just said. How much of our audience is framing 7.25% inflation in 6 months? I would say it's a handful of people. I mean, if you have oil here, can you get inflation down to the Stovall level? I'm not sure you can.
We know that people's perceptions of future price growth are shaped a lot by what happens with energy prices, Tom. And energy prices have come in over the last 6 weeks. That's the good news. We also know that when you go to pay your rent and you renegotiate what that rental story looks like each year, Lisa, that story is getting harder and harder for people to meet month on month on month on month. And that's going to be sticky. And that's the call, ultimately, into year end, that even if energy comes in and headline comes down, core CPI remains elevated. That story's sticky, and this Fed has got more work to do.
Yeah, and it's not just rents, it's also medical expenses that people are seeing with increasing elevated inflation. I want to hear what the communication is from OPEC Plus as to why they made such a small move. Is it because of a lack of demand, or is it because of a lack of supply or constrained supply? That is going to be key.
They can't meet their targets. We want to hear from them. According to the team here at Bloomberg, we're not sure whether we actually get a press conference from OPEC Plus after this decision. It will be interesting to hear what DC and this White House has got to say about this call. We'll catch up with Isaac Boltansky of BTIG up next.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Nancy Pelosi has ended her trip to Taiwan after pledging the U.S. would not abandon it. The House Speaker reaffirmed American support for the democratically elected government in Taipei, despite more threats from China. Beijing has announced military drills to protest Pelosi's visit. China also announced limited trade sanctions on Taiwan. And OPEC Plus members have agreed on an increase in oil production for September, but it is the smallest in history, 100,000 barrels a day. This comes after President Biden took a political gamble with his visit to Saudi Arabia and asked for more oil to be pumped. Voters in Kansas have refused to change the state's constitution to declare there's no right to an abortion. It was the first referendum on abortion since the Supreme Court said each state can set its own policy. And voter turnout was high. 4 other states will hold similar votes in November. In the UK, Liz Truss extended her poll lead over Rishi Sunak, suggesting she's on track to succeed Boris Johnson as Prime Minister. The YouGov poll of Conservative Party members showed the Foreign Secretary with a 34-point lead. It's a timely boost for the Truss campaign. Earlier Tuesday, Truss had to make an embarrassing U-turn on a plan to align civil service pay to the regional cost of living. CVS beat expectations for second quarter profit. The drugstore chain also raised its outlook for the full year. CVS saw growth across its pharmacy, retail and insurance divisions. That was helped by sales of over-the-counter COVID tests. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
When big tech reports earnings,
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority.
From New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labour market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
Markets should not look for any kind of major moves on tariffs. The Biden people have been signaling that, firstly. Anything other than completely lifting tariffs doesn't provide any inflationary impact. So markets shouldn't look for that either.
Always going to catch up with Terry Haynes, the founder of Pangea Policy. We caught up with him in just the last couple of days. From New York City with Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Futures positive 0.6% on the S&P. On the Nasdaq 100 up 0.6%. Also yields higher by 3 basis points on a 10-year to 278.29. That story turning around in the last 24 hours. Bit of data out later. The ISM services read, so some PMIs through the week. Then we get payrolls on Friday. Before that, a ton of Fed speak too. Focus on crude in the last hour or so.
Yeah.
At 1.7% to $96 a barrel. OPEC Plus agreeing on a very small increase in September oil production of just 100,000 barrels a day, their smallest increase ever, Tom. And this comes after President Biden went to the Middle East to meet with the Crown Prince of Saudi Arabia.
The bid's got a real resiliency to it. I would suggest, John, on Brent crude, 100 to 101 or 99 to 101 is that okay? So what? If we get a 105 print on Brent, on the global price, what does that say to the White House?
To Tom, the politics of this. Do you remember that fist bump between these two?
Oh, yeah. Don't get me going.
That fist bump, what was it worth?
I'm not allowed to
100,000 barrels a day from OPEC Plus?
I don't know.
I don't think that was what they were looking for.
I think the first time you and I met, we fist bumped.
Did we?
Yeah, I think so.
Maybe we did.
I think there's a photo
of you and I fist bumping. Less controversial that, though, Tom.
We're going to get a briefing on this now. Isaac Boltanski is a perfect person to speak to. He's with BTIG and, yes, Director of Policy Research, but writes very informed notes on the synthesis of legislative into presidential politics as well. Isaac, I want to go to a photo op past, the fist bump, and maybe a photo op forward, which is the president meeting with the leadership of China. I mean, what does Mr. Biden need on the photo op past and the photo op forward when we see this morning's slap of OPEC plus?
You know, it's hard to overstate how disappointing this OPEC plus decision is for the Biden administration. Frankly, it's the geopolitical equivalent of a slap in the face. The Biden administration made a huge miscalculation. Their bet was they could go to Saudi Arabia, they could have that fist bump picture with the crown prince, which carries a bit of political complexity to it, but that would help make an increase in production easier for OPEC. This 100,000 is not worth it, or any of the political baggage that came along with it for the Biden administration.
You are perfect about the machinery of our legislative branch. What does the people of Capitol Hill think about a change in the gallon of gas? They're not looking at every nickel move, are they? But what are they looking at?
Well, look, for a lot of these economic data points, there is it's almost a political Rorschach test, right? Where depending upon where you are on the ideological spectrum, you can use any of these data points in your flyers, in your press releases, on the campaign trail. But the reality is, folks are feeling it at the pump. They're feeling it in their rent. They're feeling it at the grocery store. And I think that is going to pull through to the election. And even though we had some sort of cross currents with the primaries and decisions last night that tell us a little bit of a jarbled story, to me, one of the reasons I have so much confidence that the House is going to flip, Tom, is because of the inflation story. That impact on the pocketbook gives me confidence that Republicans are going to take the House.
Isaac, how much can President Biden come out and seem angry about this, say this is a repudiation of the good graces that he showed? How much does he message that sort of disappointment in this versus at least it's something? In other words, how does he pivot from what you just called a slap in the face from the Saudi Arabian kingdom?
I mean, what we've seen thus far from the Biden administration is that the president will still speak optimistically and positively about this. He will focus on attempting to cajole OPEC Plus on the next decision. But we're going to hear some, I think, pretty sharp commentary from the cabinet members around this. I don't know yet what the underlying justification is. As you said earlier, is this a supply or demand decision? What really drove OPEC Plus's thinking here? But for the Biden administration, they were desperately hoping to get more than 100,000 barrels a day to alleviate the pressure at the pump in the coming weeks and months before the midterms.
The good news is that gas prices have been down every single day since the middle of June. If they weren't heading in that direction, Isaac, this would be much more controversial. Isaac, we always appreciate your time, sir. Great to catch up with you again. Isaac Boltanski there of BTIG. Isaac made the point there at the end, and I think it's an important one. Lisa, we can focus on the political fallout of this decision in the White House, and I look forward to see what they've got to say, particularly after that meeting, especially after that meeting in Riyadh. We also need to be talking about the supply dynamics, the spare capacity that exists at OPEC Plus right now, because oil watchers are fixated on that. Just how much spare capacity is there actually across some of these big nations at the moment? And does that speak to their reluctance to do more than what we've seen today?
Anne-Marie was talking about this, how a lot of the OPEC Plus members have not been able to meet those target output figures. So they haven't even been able to produce as much as they say they will. At that point, how much is this an issue of we're not getting the oil out of the ground we already have? We cannot do it faster. And then you come up with this conundrum where perhaps you have demand coming down at the same time that you have supplies coming down or being constrained. Prices remain elevated even in the face of some sort of slowdown in activity.
Yeah, I don't think this is as simple as what's happening with, say, Russia into Europe right now, where seemingly experts are telling us that they're almost pretending there's a problem with the turbine, Tom, but ultimately it's a political decision to hold back gas into Europe. For the kingdom at the moment, I think people looking at oil markets, when you speak to the people we speak to, they're leaning towards the subject that Lisa is discussing, that perhaps they just don't have the spare spare capacity people hope is there.
Maybe the three of us can all get in the same studio for a fist bump on August 10th, John, because what Isaac said there about inflation folds right into the oil discussion, and that we're looking for a crude elevation, and what Dallas Tribune has done in the last month or so clearly indicates, as Isaac said, inflation is the topic.
The good news about headline CPI, as you know, Tom, energy's come down so much that we could get just a little bit of easing of things on a headline read year over year, considering the base effects. I get that.
Yeah, base effects.
I get that. We come down to the 8s, away from the 9s. That seems to be the call. Though if we've done many times over the last months, we've
what
said
are we
peak
base affecting
inflation,
on rent?
we
What are
haven't
we
got
doing
that.
on rent?
Tom, it's going to be about month-over-month core, and that's what you've got to be looking for. And rent shelter costs seems pretty sticky to me and pretty sticky to others.
Way sticky.
It's going to be something that lives with us through the rest of this year, and that's a big reason why so many people think this Fed is going to go further, Tom.
Well, I get that. We know they're going to go further, but it's the how much of it. I'm
with you. What did Larry Summers say about Chairman Powell? He was pretty blunt, wasn't he? How are we at neutral if inflation is where it is at the moment?
I'm surprised David Weston didn't stop him in his tracks.
Indefensible, that's what he said.
Larry,
and we're getting that pushback within the Fed as well, that certain people don't think we're there either. Futures are up, crude is too. We're up 1.8%.
New high.
There we go. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, today on Bloomberg. Brought to you by Workday.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Futures positive here, up 0.6% on the S&P this Wednesday morning. Good morning, up 0.6 on the Nasdaq too. Yields are higher by 3 or 4 basis points again, 279. Just Fed speaker after Fed speaker at the moment, pushing back against whatever you thought Chairman Powell said last week. Yields keep creeping higher. Again, yesterday much more so by about 18 basis points on a 2-year. You will notice a big turnaround in crude, up 2% now on WTI to 96.29. Given the volatility we've had in this market over the last year, that's not a big move. I get all that. But Tom, OPEC Plus coming out with just a 100,000 barrel a day increase at a time when this president has been to see that Crown Prince and basically suggests we need more. That's not much more at all.
I'm going to go to a global price, Brent crude, John, and it just printed moments ago, 102. I want to make clear we have not seen a pullback in the bid. I mean, technically, the chart on an intraday basis out of Vienna is still up. And as I said, 102 is not 105. At 105, that is the level of embarrassment the White House will have to face.
How the White House responds to this, Tom, will be interesting. And we wait for that response now.
And it's compounded by this Pelosi trip and all the rest of it. We'll have to see. It's going to be eventful. A balance of power, I'm sure we'll touch those themes here today at 12 noon on radio, television as well. Right now, we got 8 ways to go here with Kathleen Best-Johnson, just so wonderful at Oxford Economics, as their chief U.S. economist. Kathy, let me set the groundwork for what Lisa and John want to talk about, which is just simply, where are we on the guesstimate of Q3 GDP now that July has closed? Do you have any handle on it, or is it just too early?
Hi, John and Tom. Happy to be with you. Third quarter GDP is going to be quite important because we had the 2 negative prints for Q1 and Q2, so-called technical recession. We don't look for the large inventory drag that you had in Q2 and also to Q1 to some extent. So that's going to make things arithmetically look better, right? So we're looking for, roughly around 1.5% annualized real growth for Q3. But we don't have many hard data points, right, to really corroborate that. And particularly consumer spending is always at the heart of, GDP.
Well, then link that into oil. I mean, we were 120 on Brent, 124, whatever it was. We come down, many guests talking about we'll get some real good news on oil. We've got the news this morning, and I get it's just OPEC plus and that. How sensitive is consumer spending to oil in the modern day versus in the 70s when we were driving around VW Rabbit diesels?
The consumer is still very sensitive to energy prices, particularly gasoline. So oil obviously is going to be a big input to gasoline prices, but gasoline prices have really weighed heavily on consumer sentiment and confidence, and also consumers' pocketbooks. So the fact that gasoline prices are down 17% or so, that's big news. Still high, right? Still, well above $4 a gallon. But the fact that we're seeing the decline, that may lift spirits a little bit and help ease things a little for the consumer. But, just keep in mind what the Federal Reserve wants, and you mentioned the Fed officials still sounding very hawkish. They want things to slow down. They want the economy to slow down. They don't want it to crash. They don't want recession. But they do need things to slow down, for inflation to continue to go lower.
How much, Kathy, is the Federal Reserve inadvertently tracking oil prices? In other words, you were just talking about how people will have lifted spirits if gas prices come down. They might spend more. There might be a dip in some of the headline CPI figures. How much will the Fed use that to back away versus say, you cannot count on this and it could change on a dime?
Well, that's a good point. And we see the volatility across many asset classes, including particularly oil, and things could change. But I think what they're going to be looking at is the fact that the headline number can influence inflation expectations. So whether it's market expectations, but more importantly, consumer and businesses, that's going to be important. And as long as gasoline prices continue to trend lower, that is really good news for all together, right? For all expectations and the actual prints. Core inflation is going to matter though too, right? The service prices, which we know have been rising, that's going to continue to still be an issue for the Federal Reserve, and they're not going to take their eye off the ball. Let's put it that way.
So today is either OPEC Plus Wednesday or ISM Services Wednesday, depending on what you think. Tomorrow is jobless claims. It's also the Bank of England. And on a Friday is the big jobs report. Which data, what type of data are you watching? And I keep asking different guests the same question because that has been the key question for the Federal Reserve. What data matters to determine their policy?
Well, every little bit matters because it's part of the jigsaw puzzle, the broader portrait of the macroeconomy. But I would say of this week, I would be looking towards the payroll number, just for the fact that many of us have been saying, we're in a technical recession, but not a true recession because the labor market is so strong. When the labor market is strong, it provides income, and that's the wherewithal for consumers to keep spending, even though they're getting hit by still high prices. If you start to see cracks in the labor market, that becomes a very different story.
Kathy, you and I have been through thick and thin on this. And right now, as I was kidding John Farrow, I'm drowning in gloom. I mean, the level of gloom out there, worry, the hand-wringing, it's, is it 07? Is it 09? Collapse of the great financial crisis? No. How bad is it out there, Kathy? Help me.
Well, it in our opinion, is not anything near the great financial crisis or the COVID recession that we just went through. At worst, it would be, a moderate recession in our opinion. But we think if we do fall into recession, it could be quite shallow. We're not in the camp that thinks that unemployment rate needs to go sharply higher to bring inflation down. We're already seeing goods inflation trending lower, and we think eventually, rental prices will come down because home prices.
Sam Stovall of CFRA was just on modeling 9 down to 7% or something like that. Do you detect a pause on the way down, or is there an inertial force to it that really gets us back towards the vaunted 2% that the Fed speakers talk of?
Well, we have a similar forecast actually for this year. We think 9%, we're kind of trending around 9%, maybe 8.8 for the next few months. By year end, somewhere around 7%. Wow. But the year-on-year comparisons get much easier next year. And that's the key. And you don't need outright price declines, right? The levels don't have to decline. Just the month-to-month change has to slow. And we need to see service price inflation start to cool. But again, you don't need outright declines in price levels. And I think that's important to keep in mind.
Kathy, how much does the policy mix in Washington, D.C. change the picture at all for you, whether it's the policy internationally with China or some of the domestic bills that you're seeing proposed?
Yeah, right now the size of the Build Back Mansion bill is rather small, right, compared to what we've just gone through in terms of fiscal policy, and it's over a 10-year period. So it incrementally could be positive for the economy, we believe, overall, especially if it starts to boost innovation and technology, but not a big game changer for us. I mean, it's just right now, there's not a reason for fiscal policy to pick up a lot and boost the economy because we want to see things cool down. In terms of geopolitical, that is always a bit of a wild card, right? We didn't really know what was going to happen with Russia and Ukraine. We don't really know what's going to play out with China and Taiwan. A lot of brinkmanship, and I think that makes us nervous, makes the markets nervous. And we'll have to see how that plays out. But that's always a wild card for us.
Kathy, can I get to the academic debate of the moment in economics? And it has implications for financial markets. It's being led at the moment by Olivier Blanchard over at the Peterson Institute. And the question I'll ask is the question they ask, is do declines in vacancies involve less increases in unemployment when the initial vacancy rate is this high? Kathy, have you spent some time looking at that? Because that seems to be the debate from Blanchard et al. Going against, say, Governor Waller over at the Fed.
Yeah, I mean, traditionally, when the vacancy rates decline, you do see a large increase in the unemployment rate. But we think this time is quite different. There is, even though the economy is slowing down, we still have a really tight labor market, and there's still more jobs out there than workers. So I think it is possible to cool the labor market and cool the economy without seeing a real large increase in unemployment rate. We may get some, right? But we're talking, are we going to go to, 2%, 3%, 4% higher? We don't think that's necessary to bring inflation down. We think there is a way to kind of thread that needle, even if we have a bit of a mild recession.
Kathy, awesome to catch up with you, as always. Kathy Bosch-Jansch is there of Oxford Economics. Tom, that is the soft landing, hard landing debate of the moment.
Well, it goes to the demographics, and this goes back to Meltzer. And, my huge respect for Professor Blanchard. But, John, is it a homogenous America, or is it two-part with a wide body of people that are just flat out lesser employed or unemployable? And if you do that, you get a Bosch-Jansch outcome, which is, unemployment goes up, but, does it go up to fearful levels? There's a school of thought saying no.
Larry Summers is fired up about that one, Bramo, with Governor Waller on the other side of it, of course.
Basically saying that you're underestimating the tightness in the labor market. Behind this disagreement is a real misunderstanding or a lack of understanding of why the participation rate is as low as it is. And we heard a number of different academics try to understand how much the labor market has shifted post-pandemic, post-COVID. And really the reasons why are unclear. And until you get that participation rate up or understand that it's going to stay here, that's going to remain an uncertainty in terms of tightness.
This conversation is not academic. In the last hour, OPEC Plus agreed on a very small increase in September oil production of just 100,000 barrels a day. About an hour ago, Julian Lee put out this comment, and we shared it with you. If you missed it, I'll share it with you again. He said a 100,000 barrel a day increase shared pro rata among the OPEC Plus members would raise Saudi output by 26,000 barrels a day. The Saudi target for output by that much, that's not even enough to fill one Suezmax tanker a month. I mean, come on. How DC responds to this is going to be fascinating. I'll bring you the headlines in the next hour if we get some with Anne-Marie. I'm going to be catching up with Eric Newson of Neuberger Berman as well, alongside Michael Purvis of Tallback and Capital, and Laurie Calvert-Senior of RBC around the open in ballast to why maybe we haven't seen the lows of the year yet. Laurie's got a lot to say on that around the open. That does it for me on this show, Tom. I'll be on Bloomberg TV in the next hour.
Oh, another property.
We take the reins into Bloomberg Radio at 9 o'clock. Tom Keane, Lisa Bramis and Jonathan Ferro. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Nancy Pelosi has reaffirmed the U.S. commitment to Taiwan. The House Speaker ended her visit there today after pledging the U.S. would not abandon its commitment to the democratically elected government. China reacted to Pelosi's trip by announcing a series of military exercises. Beijing also imposed trade sanctions on Taiwan. In Turkey, inflation was almost 80% in July, and it may be months away from peaking. Turkey's central bank is sticking with its ultra-loose monetary course. The rise in consumer prices has already forced economists to rewrite forecasts multiple times this year. And water levels on Europe's Rhine River are getting closer to the point where it would have to effectively close. That would put the transport of large quantities of goods at risk. Coal shipments are already restricted by low water levels. That makes coal more expensive, which raises the price of operating coal-fired power plants. And Facebook parent Meta Platforms is considering its first ever bond sale. Bloomberg's learned that Morgan Stanley, JP Morgan, Bank of America Securities and Barclays will arrange a series of fixed income investor calls today. That may lead to a Meta senior unsecured debt offering. S&P has assigned Meta a AA- rating. Moderna posted second quarter results that were stronger than expected. The drug maker says it will buy back $3 billion in stock. Plus, it reiterated its expected COVID vaccine sales for the year. Moderna is hoping to expand the reach of its shots. In June, U.S. regulators cleared its vaccine for children under 6 years old. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments, and I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do, and any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine, and in the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs, and the ultimate output for a company is share price, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
I think that the big issue we have in the market is that the Fed is not about to pivot. The market is kind of looking through what the Fed and other central banks are saying right now and saying, okay, they will have to pivot. So it's kind of this tension between what they're actually saying and the market trying to think just one step ahead of that.
Early this morning, we pivoted with Jens Nordvig of Exante data there, of course, on dollar and some dollar dynamics, but of course on price change, which is affecting all of us. Lisa Bramwitz and Tom Keene, and right now the honor of the laureate from Columbia University, Joseph Stiglitz, joins us. And on any number of the topics we could talk about, we go to something dear to his heart, is a gentleman from Gary, Indiana, long ago, knew different bouts of inflation fear and inflation scare. Joe Stiglitz, your basic message is, would everyone calm down? Why is this inflation not like the inflation of Heller's 70s?
Well, first of all, it's mostly a supply side inflation. And think about some of the things that are really driving it. Take the price of energy, the price of oil. It's way up. We have a war in Ukraine. We understand that. But we know over the long run, and when I'm talking about the long run, it's not that long, the price of oil, energy, is going to come down because the backstop, as we call it, we know we can produce an unlimited amount of renewable energy at the equivalent of about $30, $40, $50 a barrel. And that number keeps coming down. So that is the number that energy is going to be at. So we're going to be disinflation. We're going to go through disinflation in the future. Well, I can't tell you when it's going to happen.
Right, oh, fair, okay. You know, what's so important here, Joe, and if people even redux back to 1947 out to the Eisenhower disinflation and the two bouts of disinflation we had into the early 1950s, once inflation begins to disinflate, do you believe it keeps going, or do we come down and stay at a certain point, which causes an uproar? Is there a momentum to a disinflation?
Well, the people used to think that there was a momentum on inflation and then a momentum on disinflation, but the forces for that momentum are much, much weaker today than they were, say, 50 years ago. 50 years ago, unions were strong. When prices went up, they demanded higher wages. The higher wages led to higher prices. Unions are weak. And so we're back to, you might call, normal competitive forces. And what we saw in the years before the pandemic, that overall supply was extraordinarily robust and prices were kept down. And I think we're going to be returning to that kind of a world.
Well, what's the Fed's role in this then? Because there is this belief out there that this is a different moment, and people point to not just oil prices and commodity prices, but also this fissure between the U.S. and China and a reshoring of some of the supplies, which is naturally inflationary. Also, some of the conflicts inflationary by nature with Russia and Ukraine. How much are you looking at a Fed that, even if they don't want to, has to raise rates substantially to get ahead of inflation that may disinflate down the line, but not quickly enough to create some real threats to this economy?
Well, first of all, you know, almost all those forces you cite are either long-term or relatively small. Yeah, we're going to be reshoring. We have low-cost suppliers that are alternative to China. Vietnam and Asia, Latin America has a lot of capacity. So yes, costs are going to go up, and there's going to be a readjustment. But it's going to take over a number of years, and it's not going to be that big. We ought to get prepared for it. What I worry is on the other side, that the Fed works too fast and too much. Remember, it takes about 18 months for the full effects of monetary policy to be felt. And in that span of 18 months, if the war in Russia comes to an end, the energy prices will come down, and that will be a strong disinflationary force. Food prices will come down. There are already signs of that, and that will be a strong disinflationary force. You remember, over the last 50 years, public policy has been telling farmers, don't produce.
Yeah.
Don't make so much food. And if we just reverse that policy, prices of agricultural goods are going to come down.
Yeah.
So again, we have a backstop here that it's hard for me to believe that we'll sit by and simply let prices be so high while we continue to subsidize our farmers. We're going to tell our farmers.
Joe, it seems like you think that the potential error is worse, but the Fed going too fast rather than too slowly, which is the opposite of what a lot of people are saying, including some Fed members. What would you have to see to change your mind in terms of the data, in terms of the incoming developments on the ground in the economy?
Well, I would be looking for a particular acceleration of inflation. You know, right now, wages are not keeping up with prices. Really the opposite of what you would expect in a very tight labor market. So if I saw real wages going up dramatically and I saw inflation start to take off at a higher rate, rather now the rate of inflation is dampening. It's still going up, but it's at a much lower rate. Those are me to take stronger action.
Professor, we're going to stay with you on Bloomberg Radio. I look forward to speaking to you here in a number of minutes with Paul Sweeney. Joseph Stiglitz, the laureate of Columbia. Lisa, it's unambiguous. Oil now breaking up. We really have not seen any erosion to the bid coming off the OPEC announcement. Is it a big deal? I'm going to say no, but I'm sorry. It is headline making, and it is becoming tangible here. Brent crude, Lisa, 102.33. 102 is not the 101 of 90 minutes ago.
And there's a question of why, and this comes on the heels of OPEC Plus saying that they're going to increase output by a mere 100,000 barrels, given that this is the lowest increase in history, and it comes after a plea from President Biden. How much does this indicate a lack of ability to produce more by Saudi Arabia and other OPEC Plus members? How much does this indicate a disbelief that the demand will be there? In other words, a softening in the backdrop. And that, I think, is key in understanding the price dynamic here, Tom, considering that is the push-pull of this market right now.
To me, it's the calendar, and there's a tradition here on the midterms once the primaries get squared away, and I know Ms. Cheney of Wyoming has an important primary coming up, I think, in, 2 weeks, Lisa? Maybe exactly 2 weeks from now. But all of a sudden, it's September, and all of a sudden, a gallon of gas matters.
Well, and it's been mattering, and it's been mattering to the benefit, given the fact that it's come down steadily. But at what point does that reverse? Or if it stabilizes, how does that factor into things?
Yields across the curve higher right now by a solid 7 basis points in the 2-year yield. The 10-year bond, 2.80%, with continued new curve inversion down to a negative 33 basis points. Futures, a nice lift to equities off the challenges of yesterday. Futures up 29. Please stay with us. An interesting day. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Yields are up, stocks are up. Live from New York City this morning. Good morning, good morning. The S&P up by 0.6%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Ferro.
Live from New York City, we begin with the big issue. Fed officials pushing back.
They essentially just reiterated the message they've been trying to send.
The pivot that everybody's talking about.
It's just too early.
For headline, CPI, PCE, whatever, it's all some huge number.
The Fed is actively trying to be hawkish.
Powell really endorsed this message of data dependence.
Seemingly quite a dovish tone and rhetoric.
I don't necessarily think they were that dovish.
Now we're actually having Fed speakers come out, be quite hawkish. Evans coming out and others saying, no. We're still really focused on inflation.
I think it really did catch markets somewhat off guard.
We're going to have this fast and furious data rush.
To come out and explicitly signal something new.
It's too early.
The market is looking for a pivot.
We don't see it.
This was not a pivot from the Fed.
Joining us now, Tallbacken's Michael Purvis, Eric Knudsen of Neuberger Berman. Eric, is this enough, this pushback from this Fed, enough to bring the bond bear market back to life?
I think they're going to need to do some more work, as was mentioned yesterday. You've seen real yields, which were at negative 1% at the start of the year and did rise up to 0.7, 0.8, which felt reasonable in terms of the level of tightening that was needed to calm inflation over the long term. Post the Fed meeting, go back down to 0.1, very accommodative levels. They're now up 30, up to 0.3. Probably need to, see those at the 0.5, 0.6, 0.7 level again to begin to really tighten conditions sufficiently to get inflation under control.
Michael Purvis, we've been absolutely whipsawed in this bond market. The two-year yield on Wednesday, when Chairman Powell spoke, went from about 3.05% down to 2.99. The day after that, it plunged by about 13 basis points after GDP. Yesterday, it popped by 18 basis points. In your opinion, Michael, was this a communication failure or an interpretation failure after Chairman Powell spoke last Wednesday?
It seems like it's a little bit of both. Look, I think, just following up on Eric's point, you saw after the FOMC, you saw nominal yields coming in below a key technical level with break-evens going higher there. And I think it was really the break-even story that the Fed had to react to this week, saying, hey, wait a second, we don't really need 10-year real rates back into negative territory. And it really looked like that was going to happen. If you just look from a technical chart point of view, that 10-year yield, you could see 2.5, even 2.25 there. The break-evens even just hung there. You'd get real interest rates back into substantially negative territory. And so if the Fed has a gamble, like if they're going to look at, well, what if the next CPI print has a 9 handle on it, right? They're going to look like they really screwed up there. So I think there's no question the Fed had to aggressively come out this week to say, hey, wait a second, guys, let's not get too comfortable. And we're not back to sort of the pre-COVID era type of Fed policy.
This is what I don't understand, though, Eric. What Michael just said, everyone was saying it over the last 3 days. They were lining up on this program, on surveillance with Tom, Lisa and I, to say the same thing, that the Fed would have to push back, yields were going higher. Why was this market like a cold spring going into Fed speak that we were all waiting for? Why were we so surprised by yesterday's comments?
Well, I think that we're in an unprecedented territory in many of our investing lifetimes. And I think that's what's creating so much confusion and uncertainty. We're in a world where real growth could be negative and nominal growth is 7, 8, 9%. As I said, in most of our investment lifetimes, we have not seen an environment where nominal and real growth was that different. And I think many of us are struggling to think about how to play this in our models. Are we playing tightening financial conditions? Are we playing slowing growth? But maybe slowing growth doesn't have the same impact on EPS it did because we're in a very, very different nominal world. And what that's doing is that's pushing outcomes into the tails of the distribution instead of being in more normal parts of the distribution. And I think we're going to continue to see this volatility.
We're in a different world in the oil market as well. I'll just bring you an update on what's happening with crude at the moment. We are higher by about 1 full percentage point on Brent, 101.53, on WTI by 1.15% to 95.51. A couple of hours ago, we had the smallest increase in OPEC plus output in its history of just 100,000 barrels a day. This is what OPEC has got to say at the moment. Chronic underinvestment has led to low spare capacity. They are severely limited when it comes to spare capacity, and that spare capacity must be used cautiously. I'll catch up with Julian Lee in about 20 minutes from now, and Anne-Marie down in DC, because we all want to hear what the White House response to this actually is. As we look at this market, the equity market, futures positive, about 25 minutes away from the opening bell. We've heard a tenor Fed speak. Unleashing that move higher in yields was this person right here, the San Francisco Fed President, Mary Daly.
Oh, nowhere near almost done. We have made good start, and I feel really pleased with where we've gotten to by this point. But let's just remember the last numbers on inflation, 9.1%. Those are far too high. People are starting to think that the economy is downshifting. But we can't stop there. And it really would be premature to unwind all of that and say the job is done.
Mike McKee, the job is not done.
Nope, and the way you've been talking this morning, John, you just got me thinking about the movie Cool Hand Luke. Did you ever see that movie?
I did watch that.
Paul Newman?
Is that when he consumed a lot of eggs?
One of the most famous lines in movie history, and you take a look at where we are with what the market expectations are for the Fed over the next 6 to 12 months, and all I can think of is what we have here is a failure to communicate. The market thinks the Fed is going to cut rates, and that basically kind of comes out of the fact that the economy has slowed a bit, and then you had Jay Powell saying we were near neutral, but as you heard, Mary Daly yesterday, Charlie Evans, the Cleveland Fed President Loretta Mester, and Jim Bullard all saying, no, we're not there, and we're not going there yet. And here's something that Bullard has pointed to in the last 2 days, and that's the Dallas Fed Trim Mean CPI number. He said he likes this one because you take off the top most movers and the bottom most movers, and you get the middle, and as he pointed out, it's over 4%, and it is not showing any signs of rolling over, so their job is not done. And he went on to say, as have others, that no, we're not at neutral yet, and on an effective basis, we're right below it, but they think they're going to have to go above that to bring down inflation. In fact, Bullard thinks we may need to go as high as 4% to get it down. So the Fed's work is not done, and they're trying to make that clear to people. Wishful thinking on the part of Wall Street isn't going to make the Fed react.
We had a lot of wishful thinking over the last week. Mike McKee, thank you. Looking forward to a ton of Fed speak through today as well. Mike's going to drop by again in about 30 minutes' time to go through some PMI data. Then the ISM services number comes out in about 53 minutes or so. Yields are higher again by 5 basis points on a 2-year at about 3.1%. Yesterday, higher by 18 basis points. What was interesting about yesterday to me, if I told you up front today we'll have an 18 basis point move on a 2-year and the Nasdaq would fall by just 0.16%, I wonder how many of you would believe that. Michael Purvis, that raises a big question. What do you make of how the bond market's taken this down, one, and two, how the equity market hasn't really responded to it?
Look, on the bond market side, and I think this is very much connected to sort of the equity market reaction here, is that, you know, the terminal rate has moved, the timing of the peak rate in the cycle has moved from December 23 to September 23 to April 23 and now to really the end of this year. And even if that rate gets higher, the closer it gets is really, really important, I think, to the equity markets, right? You know, in other words, the brighter the light is at the end of the tunnel, the closer that terminal rate is perceived to be. But I think Michael McKee's points about, you know, hey, you know, why is the scale of cuts next year priced in, like, where is that really coming from? And is that a healthy, condition or a stable condition, I think is a really, really important question there. And really one of the things that's sort of really undermining or underscoring so much of this sustained rate volatility. But as it relates to equities, look, like if we are getting to the point where we can actually sort of really get to a sense that we are seeing sort of, the terminal rate, triangulate on that to some level, and that we don't know what the future of the rate hikes after that is, but we're past like peak, Fed hawkishness in terms of like, these sudden, surges higher in pivoting and in rate expectations. And earnings are cranking away. This season so far has been, again, one more, really pretty good season. And I continue to be sort of an earnings bull here, you're going to start seeing equities get supported. I don't know I'm very skeptical as to how far the NASDAQ can really rally to, just simply based on my measurements of equity risk premium and such. But, do we have to get to 3,400 on the S&P 500? Well, I think that requires a different set of facts to start really showing up, and that really means recessionary dynamics, and we're not seeing those just yet.
Futures right now up 0.6% on the S&P. Maybe Marko Kolanovic is right over at JP Morgan. Eric, maybe he's right. We've seen the worst of it. BNP Paribas think perhaps we could get some crowding in. This is what they have to say. With the Fed laying the foundation for a more moderate approach in the back half of the year, alongside resilient earnings, they go on. We see scope for further upside in the near term as market participants get crowded in. Eric, does that resonate with you?
Absolutely. As we think there is potential for another leg higher in the short term rally. We still think it is a bear market rally, and that we're going to revisit lows, if not see somewhat lower lows in the 3,400 to 3,600 range. But I think many investors were expecting earnings to come in not just weaker in the quarter, because I think people thought that there'd still be a reasonably good earnings season, but that forecasts and guidance would be marked down significantly more than they have been. And I think this is getting to that difference between real and nominal. Everybody's thinking, we're going to slowing growth, going into recession. That means earnings should be down on in our real world, in our last 20 years reference, 15, 20% or more. But in fact, in the nominal world, where corporations are earning and revenues and earnings in nominal terms, and still able to pass on a fair amount of that to consumers, earnings may not be down that much, even in a slowing real growth environment. And I think some of that is changing the pricing, including in NASDAQ, which you would expect to be more damaged by the rising rates in the short term. So as investors recalibrate this kind of expectation around earnings, you could see another move higher here. And then you're going to have to deal with the fact that financial conditions need to tighten again. And I think that's going to cause another potential leg down in equity markets.
And nominal GDP speaks to exactly that. Eric Knudsen and Michael Purvis, thank you, gents. Futures right now up 0.6% or so. Let's get you some movers. We can do that with Abby.
John, well, lots of big names to take a look at on the move this morning, starting out with AMD, the world's second largest maker of computer processors. Well, it is down. This after a little bit of a miss in the last quarter and weak guidance for the third quarter. The company is seeing a little bit of weaker demand for computers. Airbnb also slumping, this as they put up what's being considered a mixed quarter. The third quarter, though, the guidance a little bit soft, and this has to do possibly with a pullback from the post-pandemic demand boom. PayPal, on the other hand, surging up 13%, a very strong liking the idea that Elliott is such a large holder, and the tough love, they're saving $900 million, so those cost savings investors really liking. And then finally, Meta. Well, this is really interesting, John, because of course Apple earlier this week issuing $5.5 billion worth of bonds over 4 offerings, tranches, and you can see Meta up 2.4%. They've never done a bond offering, but they're considering it. They're meeting with some of the major banks today about this possibility. They have $50 billion worth of capacity, but it's probably $10 billion. So perhaps another big tech bond offering is ahead, John.
Abby, thank you. Coming up on this program, we take it to Vienna. OPEC Plus agreeing to the smallest production hike in its history.
It's hard to overstate how disappointing this OPEC Plus decision is for the Biden administration. Yeah, frankly, it's the geopolitical equivalent of a slap in the face.
That conversation up next.
satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
This week, will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labour market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
The energy markets are tight and will remain tight and volatile. The thing that's exercising every airline's chief executive at the moment is oil price.
Brent oil will be above $100 per barrel.
That's the single biggest cost in terms of fuel. And at the moment, there's probably risk in that going forward. Where we are today, there is more upside than downside.
What we do see is continued volatility and very tight markets going forward.
OPEC Plus has just delivered one of its smallest oil production increases ever in its history at 100,000 barrels a day. From New York City this morning, good morning. I'm pleased to say in DC, this will teach a policymaker never walk past Anne-Marie's camera because she'll snag you, put a mic on you and put you in front of a camera. Right now, we're joined by the US State Department Senior Advisor for Energy Security, Amos Hochstein. Amos, great to catch up with you, sir. Fantastic morning for it. So let's start right here. Your reaction to what we just got from Vienna an hour ago.
Well, first, thank you very much for having me, and it's good to be here with everybody this morning. Look, today we continue the same policy. We're at 50. This is the 50th day that gasoline prices are down in the United States. We were about $5, over $5 about 6 weeks ago, and today most Americans are seeing gasoline prices that are below $4. Prices at oil markets, oil prices were at about $120 a barrel about 6 weeks ago. And today we're at about $95, $96 here in the United States. So that's a $22, $23 decline in oil prices in 6 weeks. That's remarkable. And so the president wanted to see oil prices down, wanted to see gasoline prices at the pump down. That's what we're seeing. And I think what's very remarkable here is that we're seeing that happen while one of the largest oil producers in the world is in the middle of a war in Europe and is under sanctions. So this is not an easy time to manage energy markets. We want to see lower prices. These are lower, but not low enough, and we're going to continue to try to do that.
I'd like your understanding of what you think happened in Vienna specifically. BTIG and Isaac Boltanski in the previous hour was on Bloomberg Surveillance with us, Amos, and he called this, quote, the geopolitical equivalent of a slap in the face. Is it a geopolitical equivalent of a slap in the face of this administration after that meeting between the Crown Prince and the United States President?
Well, as you know, that the OPEC decision just about a week before the president traveled to Saudi Arabia, they announced the increase in production in July and August. Yesterday, I believe your network published that Saudi Arabia had increased production at remarkable levels in July. So, no, look, the president went to Saudi Arabia not about oil. energy was clearly a very important topic, but think about what happened on that trip. The president was able to save thousands of lives by extending the ceasefire in Yemen. So after 7 years of people dying on a daily basis, we now had 16 weeks of a ceasefire. And yesterday we announced the extension of that by another few months. Israel is more integrated into the Middle East, and we have a more stable Middle East than we had when we inherited and came into office. At the same time, oil prices were at $120 6 weeks ago when we announced the trip. Look where they are today. So the importance that the president has is not discussing barrels with any country. He has been very clear that he wants to see oil prices come down and he wants to see gasoline prices come down. Both are down and not enough. It's not just a global issue. You've seen just a week ago the results, the second quarter results of oil companies in the United States and around the world. They were record profits. What we want to see is those record profits that have come on the back of the consumers be invested back to increase production here in the United States as well. So we're calling on, whether it's OPEC or it's here at home, to increase production when possible and at the degree that it is necessary to keep these prices coming down. And I think we've been able to achieve exactly that.
Amos, as you know, for them to make those long-term investments with confidence, they need policy continuity. How can that be guaranteed to them at the same time as a conversation is ongoing about ending their activities full stop completely? You understand the difficulty around that story. How do we promise these producers any kind of policy continuity over the next decade, the next 2 decades?
Well, let's if we put away all the hyperbole from the industry a little bit, let's look at this for real. Here in the United States, most of the production that we're talking about increases is onshore in the United States. Those are short cycle productions that don't need 10 and 20 years of investment certainty in order to be able to make profits. At these oil prices today, they can invest those dollars today and get the profits that they need and give the relief for the American economy and the American people. We know that. Second, we're in the middle of a transition. We want to see declining demand for oil over the medium and long run, and that's what we're trying to do. That's why we're trying to accelerate electric vehicles. But you and I both know that that's going to take the time. And so we need to do 2 things at the same time. We need to make those investments today in order to have enough of the energy resources that the American economy and the global economy needs while we accelerate electric vehicles and renewable energy. Demand for energy is growing at a remarkable and unexpected. Nobody thought it would.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
Best for their investor base. That's capitalism. At the same time, you're describing what you would like to see from a public utility. Well, that's a sovereign state. And we can talk about sovereign states making those decisions today. They're not making those decisions to boost output. Now, can you take me into the room with the Crown Prince Mohammed bin Salman? And you said that that meeting wasn't just about that. I want to understand what your expectations are now from the kingdom on oil output and whether they were met this morning off the back of that very short meeting from this cartel.
Well, to be honest, we did not really discuss oil markets in that meeting. We had far more pressing issues to discuss. We obviously discussed energy as part of it, but it wasn't the lion's share of the meeting. As far as what they did today, look, I will say this again, I am concerned that oil prices continue their trajectory of going down and maintain the stability in the markets as we are continuing to follow developments in Europe in the war and the invasion of Russia and the remarkable impact that it's had on the global oil market. So this is not just about spare capacity, it's also about what's happening as a result of the war. I want to see that OPEC, our expectations are that OPEC will continue to increase production and meet every month to decide what it needs to do to maintain adequate supply on the market. I'm looking at the price today. I'm looking at the price not just on an hour-by-hour basis, but as we broaden that aperture. Over the last couple of months, we've seen the oil markets react in the way that I wanted, but it's not enough, and we want to see more. So we have the decision today to continue increases that, quite frankly, were supposed to go to zero, and we'll see at the meeting next month where the market is and what OPEC does then. And we will continue to have the same message, whether it's a sovereign or if it's a private company. This is the time, if you have the capacity, to invest in it and to be able to make sure that the global economy has what it needs to continue to grow. Because if it doesn't, both the sovereigns and the private companies will suffer the consequences as well. And most importantly, the American people will. And that's not what we want to see.
Amos, you can see why some people are frustrated by the rhetoric. The administration has been very keen to go after the domestic producers, and quite aggressively so. Yet when we talk about OPEC Plus, we kind of tiptoe around the story a little bit, and I'll allow you to jump in on that in a moment. I just wanted to share this stat with our audience and with you as well. Julian Lee here at Bloomberg has broken down this 100,000 barrel a day increase today. Shared pro rata across OPEC Plus members, it would raise Saudi Arabia's target by 26,000 barrels a day, not even enough to fill one Suez-Max tanker a month. Amos, why the harsh rhetoric on private companies in America and not a harder line with the Crown Prince and the Kingdom?
In fact, I don't think I've had any harsh rhetoric at all. I'm saying that I would think that producers in the United States should invest more. We've been meeting with them. I talk to them all the time. I don't think that that's harsh rhetoric. In fact, I think that if you listen to the comments by some of the CEOs of the major U.S. producers, they themselves over the last several weeks have said that they intend to increase production and to invest in additional capex. So I think that as long as they do that, we're on the same page. When it comes to OPEC, I've said it clearly. I think that we wanted to see additional increases. We saw that at the beginning of June for July and August. We saw the numbers that you published yesterday at Bloomberg, where Saudi Arabia had increased production in July. They're going to continue the increases in September. Whether or not it's adequate, we'll find out as we continue to monitor the oil markets. We expect producers, whether they're sovereign or private, we have the same expectation that they increase production where their capacity allows it, and to support global economy to continue to grow and to make sure that the price of oil allows that. That's what we want, and I don't see any difference between the two.
I wanted to get to the final topic, and thank you for your time this morning again, on the oil cap, on Russian prices of Russian oil. How's that working out, Amos, and is anyone else on board when it comes to the likes of China and India?
Well, I think what we would like to see is to see continued supplies on the market. We're not trying to reduce the number of Russian barrels on the market. We're trying to reduce and to cap their revenues. And we already know that they're open to that. They're selling their oil today at significant discounts on the market already. We've worked with the G7 allies. We were in Europe last week discussing it with some countries as well, and we continue those discussions. As far as other countries joining, I think we're still putting the mechanism together and discussing it with other countries.
Does it work if you don't have the likes of China and India on board? Amos, just from me sitting here listening to this, how it's played out over the last few months, I just don't see how it works without those two countries on board. How does it work?
Well, I think, John, that whether they join formally or not, at the end of the day, if countries are buying Russian crude at significant discounts, I'll let you decide if that's working or not.
Alice Hogstein. Alice, thank you. Run away from Anne-Marie in future. Then you want to get dragged in front of a TV camera to catch up with me. Alice Hogstein there, of the administration, off the back of this decision from OPEC Plus. Just 100,000 barrels a day for September is the smallest hike in its history. And you've heard what others are saying about this. BTIG called it a geopolitical equivalent of a slap in the face. Amos Hogstein just moments ago saying that that meeting with the Crown Prince, Mohammed bin Salman, in the last month was not about oil. This is what the market looks like around the opening bell. Equities up by 0.5% on futures on the S&P. On Nasdaq 100, futures up by around about 0.6%. On the Russell there, up by 0.75%. Equities elevated. If you switch up the board and get to the bond market, going to take a look at yields for you. Yields higher by about 3 basis points on a 10-year to 278.29, 278.11 at the moment. Euro dollar positive by about 0.1%. Crude just slightly negative. We turn around again. We're down by about 0.1%, 94.28. A ton to talk about in this commodity market. Let's get you to the opening bell, though, and get you some movers. Here's Abby.
John, well, one stock certainly contributing to the bullish tone that we have this morning. PayPal, the stock is surging after they put up a solid earnings report, but it's really the composition of the beat. They beat earnings by 6%, and that has to do with cost-cutting savings on the year of about $900 million, expected to be $1.3 billion next year. They also announced that Elliott Management is a major stakeholder, and some analysts are calling it that firm's tough love that is really helping out PayPal. So you can see investors really cheering that on. Devon Energy up just a little bit in the wake of this OPEC Plus increase, the smallest in history, as you've been talking about, or one of the smallest, now flipping slightly lower, in line with oil, basically about unchanged as well. But just wanted to check in on that sector. Wells Fargo up 1%. Interestingly, yesterday when yields surged so much, that 2-year yield up nearly 20 basis points, the bank had been down about 1.5% in that sector, weaker, but today a bit of a bounce back. And then finally, Ford up 3.1%. They reported July sales that are very strong, including trucks and EVs up 36.6%, the total U.S. vehicle sales, and very strong on the EV side too, Johnson. You can see investors rewarding the shares of Ford.
Abby, thank you. Earnings very much in focus. We are positive, 2 minutes in, by 0.5%, up 0.8% on the Nasdaq. Pretty amazing what we've seen in the Nasdaq over the last week. In fact, the last 2 days, given what's been happening with Treasury yields. Yields are much higher, and the Nasdaq looking more and more resilient by the day. On the earnings front, 70% into earnings season here in the United States, with the latest results out from Under Armour, cutting its profit forecast. Let's get the latest with Taylor Riggs. Hey, Taylor.
And John, I think what's interesting, and I'll let you decide how much we've been cutting estimates coming into this earnings season, but I guess the positive news is that about 74% of the companies so far that have reported are actually reporting a beat here on the bottom line, and maybe more better forward-looking guidance. About 34% of those companies are also guiding higher in terms of the bottom line as well, though about 30% guiding lower. Again, though, the big question here is how much had we really cut some of these estimates coming into this earnings season. What goes for the year goes for the earnings season. Energy, utilities, of course, the best performers on a price basis on the S&P 500, and also sort of the best performance in terms of actually the top line surprise here. Maybe showing some of the pricing power and whatnot, at least when we think about some of the inflationary environments underway and the top line translation of that. As we think about going forward, what's left, about a fifth now of the S&P 500 in terms of value is left to report. You still do have a lot of tech, some healthcare, maybe some discretionary. I know Walmart's in there, Home Depot, Eli Lilly, NVIDIA. Of course, as we think about sort of some of the chip makers and the ramifications after AMD yesterday. So that will be a big, again, sort of check post, signpost here going forward.
Taylor Riggs, thank you. Look out for Taylor a little bit later on a closing bell with the team, of course. The focus for so many people is that we just haven't seen the cuts to earnings estimates. Bank of America on board with this. This is what Savita Subramaniam has to say. We're still in the very early innings of the downturn, and estimate cuts too. Was June the big low? Our bull market signposts say no. Kelly Lyons has more. Hey, Kaylee.
Hey, John. Yeah, it's all about that forward view because as Taylor said, the second quarter looks like it actually was okay in terms of earnings, but that's backwards looking. So the question is, the rally we have seen since earnings season started up about 8% on the S&P 500. Can that continue if the picture looking into the future is a little bit more cloudy? Of course, second quarter earnings estimates since earnings season has started really over the last 3 months have actually risen by about 1.7%. But when you look at that forward view, we've seen revisions downward for the third quarter, the fourth quarter, and the first quarter of next year to the tune of about 3.3% for the current period we are in now. And while those projections have fallen, they're actually still about 6% higher than they were when the market was at record highs back in January. And Bank of America, which you just referenced, says that in the past 4 recessions, the S&P 500 has only bottomed after EPS forecasts have fallen either to or below the level they were at when the market last peaked. So clearly, we are not at that level yet. And there's plenty others on the street warning about more to come. Mike Wilson at Morgan Stanley has been ringing that bell for some time. He says the magnitude of cuts are just too modest so far, and he expects things are going to get worse as the economy deteriorates. He thinks the bulk of the cuts will be coming in the fourth quarter of this year. And just today, RBC Lori Halvacina joining him in that, saying in the second half, we could see more cuts coming.
This is the worry hanging over the market, and Kelly, thank you, is that the earnings are too resilient and the cuts are still to come. That's the reality at the moment for a lot of people worried about the future. This is what RBC's got to say. Kelly mentioned Lori Calvacina. The rally in stocks is fragile, given the possibility of further downward revisions to earnings as 23 comes into view. Well, the downward shift is what investors had been hoping for. The magnitude of the declines doesn't match up in our minds with the idea that a recession is starting or is on the horizon. Lori, I'm pleased to say, joins us right now. Lori, your language, we just haven't ripped off the Band-Aid, have we?
We haven't. And, you know, it's funny, John, I spent a lot of time on the road coming into this reporting season, and that's what I heard meeting after meeting. We've got to rip off the Band-Aid. We want one big cut. We don't want to drag this out. That's what investors wanted to see. And we're looking at 2022 forecasts for the full year that have come down $1. We've looked at next year's numbers that have come down by a couple bucks. And so we're left here in a position saying, okay, either the Band-Aid doesn't need to be ripped off or it's still got to be ripped off later this year. I'm inclined to think that perhaps, you know, I'm not quite as bearish as Mike, but I do think that we do need to see a bit more downside. We've modeled out what we think the current macro is forecasting for this year and next. We come up with 214 for this year, 212 for next year. So even if we're too conservative, we still think there's some more froth that needs to come out. And even if we did see the lows in June, it's possible we could go back down and retest them, or we could simply stay volatile until we get this issue resolved. But I just find it very, very interesting that the market has rallied so strongly when investors are getting exactly the opposite of what they said they wanted.
Hey, Laurie, it's doing it again. The Nasdaq's up 1%. I said this at the top of the show. If we had an 18 basis point move on a 2-year, and I guess asked you to guess where the Nasdaq was, I don't think you'd say down a couple of tenths of 1%. That was yesterday. Today, yields are higher again by 5 basis points to the front end, back to 3.1%. The Nasdaq's up by more than 1%. What are you learning about this price action, the resilience of this market in the face of what's going on?
So I will say that when I dig down into the tech and growth-oriented sectors in particular, I feel perhaps a little bit better. So we look at tech in particular. It's fueling some of these really, really strong beat rates that we're seeing, at least on my work, which was through Friday. It was the best sector on earnings beats. So I think perhaps, you know, just some confidence being instilled by the fact that the quarter was so strong. But I will say, John, when we look at the rate of upward revisions in technology, even if the numbers haven't been cut enough in dollar terms, what we are seeing is that basically nobody has been taking numbers up. So the rate of upward revisions is about as low as it tends to get. We're seeing that as well for things like communication services. Now, what that is, that's a gauge of earnings sentiment and how people feel. So perhaps in that tech complex in particular, just the sentiment got so lousy, it's allowing us to really just rally on what's already happened and the idea that a lot of pain is already understood to be coming. I feel like I'm stretching a little bit there, but that is what I think may be sort of fueling this, you know, kind of move in tech. And we do like the valuations in tech, so, you know, I'll take this as a win and not be too greedy.
Laurie, I know you follow the earnings calls as well. Bank of America does too. I'll share with you what I learned from Bank of America, and then you share with us what you're learning from the work you're doing. I read this quote yesterday in their report. It said the consumer's being squeezed by inflation. 40% of Americans are reportedly having difficulty paying their expenses, above the 38% peak during COVID, according to a census survey. Then they monitor the calls, the earnings calls. Mentions of weak demand spiked to the highest level since COVID, with record weakness in consumer discretionary demand. So I'm reading through that. So I go to the chart of S&P 500 consumer discretionary. We're up almost 24% from the June lows. Laurie, what do you make of that rally in consumer discretionary? That is a monster rally from the June low.
Look, I think if you go back and look at that June 16th low for the consumer discretionary sector, it was the decline that we had seen in that sector since the early January market highs was pretty much in line with the average recession drawdown that you do typically see in the consumer discretionary sector. Now, that sector's changed composition a little bit over time. There's more internet stuff in there now than there used to be. But I think a fair argument could have been made that we saw recession essentially baked in at that June 19th low from the perspective of the price performance itself. I do know that when we look through some of the industry revision indicators, things like specialty retail, internet retail, we're similar to what I was just describing for tech before. We are seeing sort of record low type rates of upward revisions there. So perhaps just the sentiment got so bad in that particular space, it allowed that rebound. And I'll tell you, John, I know you and I have talked about this before, but as I've talked to investors the last couple months, it's become crystal clear to me that everybody's got plenty of defense in their portfolio, whether it's high quality, free cash flow story, consumer staples, whatever they wanted to do to play defense, they've got plenty of it. And I think investors have really been worried about what they need to be exposed to in the recovery trade because they know they don't have enough of it. And that's typically where active managers do underperform in recessions, is when the market turns around.
How much more of that do you think we'll see? You know, nothing changes sentiment like price, and price is moving pretty quickly, and I wonder how quickly sentiment follows. I brought up a quote from BNP Paribas earlier this morning, and they talked about this concept of crowding in. Laurie, what do you make of that?
I think that's a fair point. I haven't read that particular piece, but I do think the momentum will start to feed on itself. It's interesting, John, as I was talking to small cap investors last week, we were talking about the parts of that area of the market that look most compelling. And one of the things I talked about was small cap consumer discretionary stocks, which are more pure plays on the domestic economy than the bigger caps, are actually trading at historical lows relative to the broader Russell 2000. So basically at trough relative valuation multiples. And that was something that I found a lot of investors didn't really realize was in place. They felt pretty lousy about the space. They felt pretty lousy about the idea of investing in consumer stocks with a recession around horizon. But when I pointed that stat out, that perked some people up and got them to look at a space that they hadn't wanted to look at for quite some time. So I think if nothing else, that price action just can force people to kind of sharpen their pencils, go back to the drawing board and do some additional work.
We're doing that right now. The S&P up 0.8%, the Nasdaq up by 1.2. Laurie, if I dialed 1-800-CALVACINA and asked you for your favorite trade right now, US versus non-US, growth versus value, large versus small, what would you say back?
By a mile, it's the small cap stocks. I've covered that space a long time, John. I call it my first professional child. And it is crystal clear to me that that part of the market is baking in recession already. If you look at how it trades relative to jobless claims, the Russell 2000 jobless claims year over year move very, very closely together. The damage that's been seen in the Russell 2000 over the past year is commensurate with a big spike in jobless claims already. The move in small versus large tracks ISM manufacturing. That small versus large trade collapsed over the last year and is already baking in a plunge in ISM manufacturing to typical trough levels. And part of the small cap 101 playbook, John, is that when the unemployment rate starts to tick up in the middle of recession, that is when you want to buy. Historically, that is when we had started to see small caps turn around in the middle of a recession. So I understand that nobody wants to see job losses, but there is a consensus that they are coming. And if that consensus is right, that is going to be the trigger to get this small cap trade turned back around.
I hope the actual children aren't listening to those comments about small caps. Laurie, it's good to hear from you. As always, Laurie Calvacina of RBC. There's a rip-roaring rally for you on the S&P, up 0.75%, up another 1% or so on the Nasdaq, even as the Fed continues to push back with the Fed speak over the last 24 hours. We need to talk about crude as well. Coming up, OPEC Plus agreeing to the smallest production hike in its history. More on that from the Bloomberg team and the latest from the White House up next.
The opening bell is brought to you by Workday, the finance, HR, and planning system for a changing world.
To adapt in a changing world, you could hire a professor of theoretical mathematics.
We all know this equation, right?
He'd crunch numbers day and night.
That's it.
To maximize profitability. Morning.
I have quarterly numbers. They're beautiful.
And forecast revenue from every corner of your organization.
Is that important?
Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster. For a solve problems like a genius world. Workday, for a changing world.
Guess who is losing weight and getting healthy with Nutrisystem? Everybody. Teachers, healthcare workers, even airline pilots. Because it's perfect when you're home or on the go. Nutrisystem is backed by science, adapts to your lifestyle, and is simple to follow. With easy prep, cleanup, and meal planning. Simply customize your order to what you like to eat from over 160 menu items.
Within a few days of placing my order, everything showed up on my doorstep. It was all there and ready for me. The meals are labeled, breakfast, lunch, and dinner, and snack. You know exactly what you're going to eat each day. It's one less thing to stress over.
Get started today and receive a full month of our delicious ProSync high-protein shakes that control hunger for up to 3 hours.
I lost 40 pounds.
I lost 67 pounds.
And guess who could be next? You!
Go online or call 877-869-FIT9 to get started and receive a full month of ProSync shakes to control hunger for up to 3 hours.
Every day, big decisions are made without full information. Overloaded by data. Compounded by complexity. Better decisions are made in the light. With clarity and confidence. Aon is in the business of better decisions.
Nothing is coming, as in zero carbon emissions, not through offsets or credits or planting trees. We're going beyond net zero, all the way to real zero, all the way to nothing.
You're an owner. That means that your priorities are ours too. Our interactive tools and advice can help you build a future for the ones you love. That's the value of ownership.
This is Bloomberg's The Open. I'm Rich Gupta live in the principal room. Coming up, Jason Brady, the Thornburg Investment Management President and CEO. That's at 3:30 p.m. in New York. This is Bloomberg.
We are calling on, whether it's OPEC or it's here at home, to increase production when possible and at the degree that is necessary to keep these prices coming down. This is not focused on OPEC. This is a global issue. They do have the capacity to increase. There's no doubt about that. We will continue to have the same message, whether it's a sovereign or if it's a private company.
Fantastic to catch up with Amos Hochstein there, the State Department's Senior Advisor for Energy Security. We caught up with him just moments ago after OPEC Plus delivered the smallest increase to output in its history, just 100,000 barrels a day. Joining us now is the Bloomberg team. Anne-Marie down in DC, Julian Lee joined us too. AMH, you heard what he said there about that meeting with the Crown Prince. He said it wasn't all about oil, it was about other important things.
Yeah, it certainly was. Obviously, everyone's going to point to oil because when Russia invaded Ukraine, energy prices spiked. That was really a tectonic shift for this White House to really start re-engaging on a deeper level with the kingdom, and that really pushed the president to make that trip. But there's a number of issues at play: climate, investment. Yesterday, Jonathan, we had a 2-month truce extended in Yemen. These are all really important factors. Also, the United States yesterday approved missile sales. Needs to go through Congress still, but approval of Patriots to Saudi Arabia, approval of other missiles to the UAE. A number of discussions. And I think one thing the White House wants to make clear, yes, this is tiny. I have covered OPEC before, not as long as Julian Lee, but I've covered it for years. 100,000 barrels a day is very, very small. It's symbolic and it's token. But what the White House wants to show is that the past 2 months, there's also been some goodwill from the group, increasing capacity. What they're looking at is the direction of prices. What the president has tweeted this morning is the fact that a majority of gasoline stations now are actually selling gasoline under $4 a barrel. That's the price that matters to this White House.
Julian Lee's right with us right now. Julian, we can make this political. We can make this about geopolitics and foreign policy. BTIG called it the foreign policy equivalent of a slap in the face. The administration's pushing back against that. I think what we've got to focus on is spare capacity within OPEC. Julian, how much spare capacity is there actually? And what does this decision this morning actually speak to?
I think there's relatively little spare capacity. I mean, you know, the spare capacity, I think, exists within Saudi Arabia and the United Arab Emirates. I don't think there's anything very much anywhere else. Saudi Arabia may have 1 million barrels a day or so. The United Arab Emirates may have about half of that, maybe a little bit more than half of that.
but that's probably it. And if you look at the OPEC Plus group as a whole, in June, and that's the most recent month that we've got complete figures for, they were pumping about 2.8 million barrels a day below their target. So there's a lot of oil that is there in theory, but isn't actually there in practice.
So, Julian, I think this gets to the big important issue right now. Just how fragile is the supply backdrop going to be through the next year or so? We've really aggressively taken down the SPR to attack oil prices. Yep. You've got OPEC telling us that they've got issues with spare capacity. Julian, what does this mean for price going forward?
I think it means that prices are going to stay very volatile. I mean, what we've seen happening in the last 2 to 3 weeks, we've seen Libyan production, which had been hit hard by, again, civil unrest in the country. That's started to come back, so we've had maybe 500,000 barrels a day, maybe even more than that, added by Libya in the last 2 to 3 weeks. That's a significant increase. But Libya's production, I think, rests on some fairly shaky foundations, and that is the country holding together and these two rival governments being able to sort of negotiate the frictions between them. So, I'd be worried about Libya being able to sustain production at its current level of about 1.2 million barrels a day. There's not a lot of spare capacity elsewhere. We've got EU sanctions on Russia that are due to come into effect in early December. I still have huge reservations about how a price cap is actually going to work, and whether Russia would agree to sell under those terms.
I'm with you. Gillian Lee, thank you. And a special shout out to my good friend AMH down in DC as well, who works about 10 times harder than I do to make those interviews happen. Anne-Marie, thank you, down in Washington. I want to get you some economic data. We can do that right now with Mike McKee. Mike McKee, it's almost an appetizer for the big one in about 9 minutes.
It is an appetizer, and it's going to worry some people in the markets. Remember last week when we got the S&P manufacturing numbers, we saw a big drop in the markets. We've seen the S&P 500 fall, but not a real reaction in the bond market to services PMI from S&P Global falls, actually rises to 47.3 from 47, but the global composite stays under 50 as well at 47.7. Both of those just a little tick higher, but both in contraction territory. Now, that sets us up, as you mentioned, for the ISM Services Index. We are expecting a small drop there to 53.5 from 55.3, still positive, but everybody's also going to want to see what happens with prices paid after the ISM Manufacturing Index fell 18.5 points, one of the biggest drops ever in that index.
Mike, you're better at this than me. What's the difference between those two things, S&P Global, ISM? Different weightings, what is it?
The ISM numbers generally are large multinational corporations, and the S&P numbers look at a series of companies in different sizes of the industries. So they're a little bit different in their subsets. The S&P numbers are a little bit, surveys a few more businesses as well.
Mike McKee, thank you, sir. I knew you'd know. I knew you knew, rather. I knew you'd know. Mike McKee, thank you. Mike's going to break down that data for you in about 7 minutes' time. We'll do that with Guy Johnson and I believe Alex Steele at the top of the hour. That conversation just around the corner. Payrolls too. 250,000 is the estimate. Mike's going to break this all down for you on Friday. That's the median estimate in our survey. The highest 320, the lowest 50K. Once you get through that and all the Fed speak, then it's on to next week. CPI Wednesday next week, August 10th. We're looking for headline to come back in, but ultimately for core to remain elevated. And you know the story, the front page of the paper will go with the headline year-over-year figure. On Wall Street, it's about month-over-month core, trying to gauge how sticky the inflation story and ultimately how sticky it is and how much more work the Fed's got to do. Coming up, your trading diary. That's coming up next. This is Bloomberg.
The Principal Room, brought to you by Principal Financial Group, combining actionable insights with specialized solutions to help meet your investment goals. Get to know us at Principal.com.
At Principal, we recognize our responsibility as a financial services leader is to help more people and businesses feel secure in their finances and their future. For us, good business has always been about people, from helping our newest investors get started to providing more valuable insights to our most sophisticated investors. We're committed to fostering a more diverse, inclusive, and sustainable world. And working together, we can create a brighter future for all of us.
What if you were a global energy company with operations in Scotland, technologists in India, and customers all on different systems? You need to pull it together. So you call in IBM and Red Hat to create an open hybrid cloud platform. Now data is available anywhere securely. And your digital transformation is helping find new ways to unlock energy around the world. Let's create a hybrid cloud that can change an industry. IBM, let's create.
What inspires you most about the future?
The young generation, eco-warriors, scientists, climate activists, who have a great interest in a sustainable future. I think these are the true heroes, the unsung heroes of our time.
Let's empower the right people to push the next generation forward.
Hyundai Motor, connecting art and technology.
Let's do it.
I want to.
But what? Dude, you need an upgrade card. I get unlimited 1.5% back in Bitcoin on payments and no annual fee.
Nice.
The Nasdaq 100 is almost 18% higher than its June low, and it's still rallying right now, up more than 1% on the Nasdaq, up 1.4%. On the S&P 500, up 0.8%. What's interesting about this part of the session, about 25 minutes in, like yesterday, is how resilient the equity market is in the face of what's happening with this bond market. 2s, 10s and 30s look like this. Yesterday, 2s up 18 basis points. Stock market down a couple of 0.1% on the Nasdaq. Today, up 4 or 5 basis points, and the stock market on the Nasdaq absolutely ripping. Something to think about. That's the price action. Here's your trading diary. Coming up at the top of the hour, ISM services data. Then we'll hear from the president at 2 p.m. Eastern time. Fed officials throughout the day. Harker Barkin, Daily, Kashkari, all on the agenda. Bank of England rate decision and jobless claims tomorrow morning. Looking forward to that. Then we round out the week with payrolls Friday. That does it for me. I'll see you tomorrow morning. Thank you very much for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
Are you sure you're not overpaying for car insurance? Jerry instantly shows you which carriers can help you save the most. They'll cancel your current policy and get you the best coverage at a lower price. See the savings in 45 seconds at getjerry.com.
Did I mention the Groove Belt is the best belt in the world?
It's the best belt in the world.
It's the best belt in the world.
I can't stop doing that.
Bro.
I did? Well, did I mention you can get yours at groovelife.com? Do it.
Strong enough to stay. We will never.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Guys, got hair loss? I know what you're thinking. Should I shave my head? Comb it over? Wear a hat? Just stop. This isn't 1970. Keep your hair and your confidence because Bosley, America's #1 hair restoration experts, can give you your real hair back permanently. Check them out because they're giving away an absolutely free information kit and a free gift card to everyone who scans this QR code. Dude, you don't have to look like your dad because this isn't your dad's hair loss treatment. People all over the country trust Bosley because they're ahead of the curve. They use the latest technology to give you your real hair back. And the best part, Bosley's permanent solution is protected by the Bosley Guarantee. Let them show you for free how awesome your hair could look with an absolutely free information kit and a gift card for $250 off. Scan the QR code. Don't wait. Scan the code now and ask about the Bosley Guarantee.
It's hard to believe that Brava can go from 0 to 500 degrees in under 1 second. Or that it precisely cooks 3 different ingredients at the same time. It's hard to believe that Brava tells you when your perfectly seared steaks are ready, or that it roasts a whole chicken in half the time. But seeing is believing. And when you cook with Pure Light, the difference is as clear as day. See for yourself at Brava.com.
What are you gonna do?
Here! Grab onto me! We can double up!
No, don't worry about it. I'm good. I don't want to detract from your experience.
It's okay to get help. Find a licensed therapist at BetterHelp.com.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It's 30 minutes into the U.S. trading day on Wednesday, August 3rd. Here are the top market stories we are following for you at this hour. Over and out, Nancy Pelosi wraps up her trip in Taiwan as China retaliates with military drills and trade curbs. Markets wait to see if it stops there. Bond market reset, Treasury yields climb for a second day, and LIBOR hits the highest since 2008 after hawkish Fed speakers push back on the pivot narrative. More economic data is crossing now. And Meta looks to borrow. The Facebook parent is looking to hold investor meetings for its potential first bond sale ever. Other tech companies are in the spotlight too, as after earnings as Airbnb sinks and PayPal soars. From New York, I'm Kaylee Lyons with Guy Johnson in London. Alex Steele is off today. Welcome to Bloomberg Markets. And Guy, we know the Fed is data dependent, and more data just crossed the wire.
Absolutely. I'm trying to get the ISM page to load up. We've got the headline number, and it is a strong one, Kaylee, a very strong one. ISM services coming through, the headline index of 56.7. That is up from 55.3. The survey was 53.5, so a significant beat at a headline level. This data series has been declining, but is still incredibly elevated on a historical basis. Let me just see if I can get the details, further details to come through. We'll deal with Mike McKee in just a moment. He's going to break it all down for us. He's going to lift the hood. But Kaylee, we're also getting other data coming through as well. Factory orders, that beats as well, and a significant revision to the upside. What else are we seeing?
Yeah, well, I'm looking at those durable goods orders as well, beating, coming in 2%. The estimate was just for 1.9%, and transportation beating as well, up about 0.4%. But really, it is that ISM services number that is striking, Guy. 56.7 is well above what estimates were, and of course the prior revision. And it's interesting, you're seeing the moves in the bond market holding after this data. The 10-year yield right now is up the better part of 5 basis points after a monster move that we saw yesterday.
Yeah, big liquidity move yesterday on the back of all of that hawkish commentary we got through from the Fed speak. We are continuing with that today. We've had Bullard pointing to a significant move higher by year end. This basically takes us to our question of the day. As Kaylee says, the Fed is data dependent. The Fed is watching the numbers very carefully, but the market and the Fed in some ways over the last couple of weeks have not been on the same page. But after that recent pushback, that recent hawkish commentary we've had from the likes of Mary Daly, are we all back now on the same page? Let's talk about the data. Let's talk about that question with Bloomberg International Economics and Policy correspondent Mike McKee. We're also joined by Vincent Signorella, Bloomberg macro strategist. Mike, let me talk to you first of all about the data that we are just seeing. Parse it for me. Talk to me about that ISM number. It looks strong. It is very strong, and it's unusually strong given the fact that what we had seen in the GDP numbers was a shift away from services spending, and now it looks like people are going back. It's not just a headline number, but new orders are up strongly to 59.9. Employment is up 49.1, although still a little bit in contraction territory. But here's the one I want to point out. Same thing we saw with the manufacturing number. Prices roll over down 7.8 points to 72.3 from 80.1. Obviously still a high number, but it's a big drop in prices, and we saw that 18-point drop in the manufacturing prices numbers. So it does look like raw materials, at least, going into the making of products and the provision of services are starting to fall, and that will help companies with their the need to raise prices. The durable goods orders, factory orders is also a bit of good news. That's backward looking. It's revisions to what we saw in the second quarter. It is June numbers, but it does suggest that June GDP might be revised a little bit higher. So that is also good news and pushes back, to get to your question of the day, pushes back against the idea that 2 quarters of contraction definitely suggest we're in a recession.
So let's talk about the implications for the Fed then, Mike. We now have a headline crossing the terminal that swaps show 1 in 2 odds of a 75 basis point move in September. How are they likely to look at a services print coming in that strong?
Well, I'm going to say pay no attention to what you're seeing in the swaps market, et cetera now. Wait until next Wednesday when we get the CPI numbers, because you're looking at a number that's going to move around a lot based on the data that we get. And if CPI is the opposite direction, and a lot of people think it's going to be from this ISM number in terms of prices, then we're going to see a move even higher, even stronger into a 75 basis point move. And we get another CPI before the next Fed meeting. So there's going to be a lot of data between now and then, and if you want to bet on a day-to-day basis, go ahead, but it's not really telling you what the Fed is going to do or even what people think the Fed is going to do on September 27th.
Vince, let's try and get a direct answer to what is happening here, though. Mike says we should ignore what's happening in the swaps market. We should wait and see what happens next week with the inflation data. But nevertheless, the pushback from the Fed has been fairly aggressive thus far. Is the market now on the same page?
I honestly would say not. I'm not sure what page the Fed is on, to be honest. I mean, I think Mike made an exceptional point about the prices paid, both in services and in manufacturing. And in the CPI number Mike is looking at next week, we're expecting a moderation in prices once again. So this notion that the Fed needs to raise interest rates aggressively to stave off an inflation that seems to be peaking and rolling over and coming back on its own, where you're starting to get a better supply imbalance, improvements in consumer spending. I just don't get the reasoning behind having to squash the recovery, as some of the Fed speakers were saying yesterday, would dampen the recovery in order to contain prices. It just doesn't appear that way. This isn't the 1970s. And Fed Bullard's comments yesterday in a paper that this Fed has more credibility than Volcker's is absolutely absurd. I had the pleasure of meeting Mr. Volcker, and trust me, the markets absolutely adored him and had a lot of faith in him. So I think the Fed is essentially making a policy mistake to try to correct the transient policy mistake, and I think they're going to do it again and error with their inflation forecasts, which have been awful.
Well, Vince, we asked the question whether the markets and the Fed were on the same page or different asset classes within it on the same page, because right now I'm looking at a bond market in which we're seeing aggressive selling, yields moving higher for a second day. We're back around the 280 level on the 10-year, and yet the NASDAQ 100 growth stocks is what's outperforming today.
Yeah, and I think, to be honest, I think the NASDAQ guys have it right. Normally, I'd say the fixed income guys have it right. But the other thing you need to look at is if we really believed, if the market really believed the Fed was on course to hike in September, to hike again, 2 more times to another 150 basis points, would we really see 10-year yields 70 basis points off the highs? And we see this inversion because people believe it in the short end that the Fed is going to raise rates, but the market doesn't believe that inflation is going to be here into next year. And so think about the logic of this and how silly this sounds, that the market is pricing in the Fed rate hikes for 2022 and then expecting a recession so that they're going to have to cut rates in 2023. That's not what the monetary policy is supposed to be about. It shouldn't be this up and down thing. The markets should be dictating where rates go. I think the markets are dictating. The Fed is dictating in the 2-year, but the markets are dictating in the 10-year. So I think they're on the same page in the sense that they believe the Fed's going to hike aggressively, but they don't believe that the Fed's going to stay at that pace for more than perhaps the next 6 months.
Okay, so the critical question here, Mike, is what will be the data story that we are looking at in 6 months' time? There's this whole debate about whether or not the labor market can see a tighter situation. We'll see a continuing tight labor market, even if the job openings come down. In the data that the Fed needs to see to confirm the answer to that question. Where should we be looking? We've got the payroll number coming up on Friday. How do we resolve this debate right now? This whole kind of sort of argument about a V-shaped kind of story, which Vince is talking about, and this L-shaped sort of story that we're looking at in terms of what some in the market are talking about. How high could we see rates stay at if we are going to find ourselves in a situation where inflation remains elevated? That's the question that we still don't know the answer to here. What is the Fed looking for?
They're looking for a continual decline in inflation. So they'll be looking at the CPI numbers, they will be looking at the PCE numbers and the PPI numbers to get a clue as to what's coming, because they want to make sure that inflation, even if it goes down a little bit in July, is going to continue going down. The point they're trying to make is that they've gotten interest rates high. They need them. They think they need them a little bit higher. That the neutral rate's a little bit higher than that, and then they will sit there until they're sure that inflation is going down. Now the market has decided inflation's going to go down, but how they know, I have no idea, and the Fed doesn't know, so they're saying, well, we're keeping our options open. We can raise 75 if we think inflation is a problem, and we've got a lot of data that will bear on that between now and then, but we don't have to, and we can cut back if we need to. And so the problem is the Fed wants to see what's happening in the economy, and people trading at least the long end have decided they already know what's going to happen in the economy.
Yeah. But the takeaway is no one knows anything. Bloomberg's Michael McKee and Vince Signorella, thank you both so much for joining us. Coming up, we'll continue the conversation on the Fed and the markets with the NASDAQ 100 now at its highest level since May 5th. Almost like the last 3 months didn't even happen. We'll speak with Ellen Hazen, Chief Market Strategist at FL Putnam Investment Management, next. This is Bloomberg. Bloomberg Green, bringing you the business, data, and innovators fighting climate change. Reinventing climate news on TV, Quick Take, and Bloomberg.com.
When you're a small business owner, there's no such thing as 9 to 5. Days are longer, and business hours, well, they're anything but predictable, especially when you have clients like ours. When I considered payroll providers for my business, I looked for a solution that fit into my busy schedule. Sure Payroll makes running payroll easy, and its U.S.-based customer service is there for me when I have questions, after hours, and even Saturdays.
Visit surepayroll.com for a 2-month free trial, because small business is our business.
Guests check in, then check out their phones for financial insights from Merrill. This gentleman, he's learning how carbon-neutral investments could energize his portfolio. And with advice from their Merrill advisor, they've decided that the future is women-led startups. She's got 1 million followers, but she's following trends in next-gen tech.
Personalized advice so impressive, your money never stops working for you with Merrill, a Bank of America company. What would you like the power to do?
Tune in to today's Options Insight, sponsored by Thinkorswim by TD Ameritrade.
Girl, why don't you change those broken shades you haven't been able to open for the past 2 years? Let's tap the Thumbtack app and find a pro to install new ones. With Thumbtack, you can easily find top-rated professionals for every home project.
Thumbtack, the easy way to care for your home.
Baby, you're perfect 10. I wanna get in. Can I get down so I can? I like the way you work it. Yo, Dee, I got to bag it up. I like the way you work it.
This week, will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labour market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
I'd like to see the policy rate get to 3.75 to 4% this year. I think that inflation has come in hotter than what I would have expected during the second quarter. So now that that has happened, I think we're going to have to go a little bit higher than what I was saying before.
That was St. Louis Fed President Jim Bullard, who also made some headlines earlier today saying the neutral rate is still some distance away. And that brings us back to our question of the day. Are the Fed and market on the same page? Joining us now to help us answer that question is Ellen Hazen, Chief Market Strategist at FL Putnam Investment Management. Ellen, does the market have the Fed right now?
Right now, the market is saying that the inflation has already peaked. And you see that in the 10-year, you see that in the yield curve. And the Fed is also saying, look, we're not done yet. So I think that the market is a little bit more sanguine about the possibility of inflation than the Fed is right now. And the Fed wants the yield curve to be higher. That's why Mary Daly came out yesterday and said we're nowhere near neutral. That's why we're seeing many of these comments from the Fed. But the market has said we think inflation is already passed, and we think that the Fed is going to end up cutting later on.
If the Fed does what it says, Ellen, how mispriced do you think equities are?
I think if the Fed does what it says, equities are fairly priced here. So you've seen estimates for both Q3 and Q4, as well as all of 22 and even 2023, come down by about 5% in the last month or so. That was one of the things that we had pointed out a couple months back, that estimates were too high given the rise in labor costs, given the slowing economy. But at this point, estimates have come down, and they may have a little farther to go, but we think that they've come down most of what they need to come down if there's not a hard landing. And so if that's the case, then the S&P is fairly valued right here.
Okay, so that's on the equity side. On the bond side, we have seen 2 days in a row of absolute monster moves in the Treasury market. We were up 17 basis points yesterday. The 10-year is now up more than 8 basis points. We're back at 283. It's interesting how we continue to see these legs higher right around this time, 10 a.m. Eastern or so. What role do bonds play in a portfolio? Because it seems like we've had a switch between you don't want to own them, don't touch them, 60-40 is dead, to maybe it does work as a ballast, and now I just am confused.
Bonds absolutely have a place in a portfolio, but it's best if they have positive real yields. So in order for them to serve their role most effectively, it would be really helpful if inflation came down to the point where we're getting a positive real yield on bonds. But they absolutely serve as a diversifier because they're not perfectly correlated with equities. And even in the first half, when they declined, as did equities, and so they didn't provide that negative correlation benefit that we all wished that it would, they declined much less. And so they can provide dry powder to rebalance in a dynamically rebalanced portfolio to go ahead and repurchase equities. Right now, we think the opportunities in bonds are on both the credit side and the Treasury side. We've been reducing our credit exposure a little bit as the probability of a recession looks as though it's increasing. And certainly with yields higher as they are now, and as they have been for the last several weeks, bonds are more interesting for us as a diversifying asset for clients on both the credit and government side.
Ellen, given the fact that we really don't have an effective crystal ball to tell us where inflation is going to go or how quickly, more importantly, it is going to come down, what's your degree of certainty right now?
It's highly uncertain. I think part of being a good investor and a good fiduciary for our clients is to be humble in the face of uncertainty and to understand what we can and can't know. We do believe that inflation will come down. We have seen commodity prices come down. We've seen energy prices come down. And we may, when looking at a number of different economic models from different forecasters as well as Wall Street analysts, they are forecasting that inflation may come down going forward. And so best as we can tell, it should ameliorate in the second half of the year, not to the 2% that the Fed is targeting, but something much lower than the 9.1 that we saw earlier. But given the uncertainty and that we can't predict the future with perfect clarity, our role is to create balanced portfolios for clients. And by balanced, I mean having some exposure to growth, having some exposure to value, having some exposure to inflation protection. So we still have inflation protected securities in client portfolios because we can't know for sure what is going to happen. And so we'd like to have multiple eggs in multiple baskets, as they say.
And what about regional diversification, Ellen? Where's safe to put your money? Is it Tennessee? There is no alternative country?
The whole world is slowing right now. But I do think that the U.S. is in a relatively better position because it is slowing relatively more slowly than Europe, for example. Japan looks fairly interesting from a valuation and yield perspective, so that's an area that we're examining. Somewhere like Mexico looks fairly inexpensive, and of course their GDP is very closely tied to the U.S., so that's an area we're looking at as well. But we're really staying away from Europe for the most part because of the significant negative fall-off repercussions from the Ukraine war and the Russian gas situation.
Ellen, we're going to leave it there. Great to catch up as ever. Thanks for joining us. Really appreciate it. Ellen Hazen of FL Putnam Investment Management. Thank you very much indeed. We're certainly seeing yields continuing to climb sharply post that ISM data that we've just seen and all the other data that we've rolled into that as well. Still ahead, investors cheering PayPal's cost cuts and the decision to have a new share buyback plan. Stocks surging, as you can see on the screen in front of you. We're up by over 2 days, 13.16%. We'll deal with the details next. This is Bloomberg.
One of the key pillars for Vision 2030 is increasing or enhancing the quality of life. And there is no better way to enhance the quality of life except through healthcare. This is where lean comes in.
If we look at the Saudi health sector and the vision of 2030, we want to have access to care, have a much better quality of service. We use technology and digitalization to actually enable transformation. There are 3 main players: the patients or the individuals, the practitioners, and the care providers or the regulators as well. Lean created 3 national platforms. Now individuals have a reliable source of information. It's an assistant to their health and their family's health.
Peace of mind, such a big, beautiful idea. And for us at Booking.com, this means free cancellation on most bookings. It's a bit functional, but we'd gladly be functional so you can be free. Booking.com, Booking.yeah.
100 years from now, what technology do you think that you'll be exploring as an artist?
Do I want to be around in 100 years?
Oh, come on, we're going to have a great time.
Okay, let's go. I mean, I think we will have a way of subconsciously connecting with each other. I mean, when we're communicating without any hardware devices, but just like in a constant flow of communication.
Hyundai Motor, connecting art and technology.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Richard.